Capital experience. As a first step, can I please introduce the panel session to come up for our next session? Over to you, Meg, to introduce it, and thank you again.
Thank you, Steve. So yeah, first up, we've got our panel session about navigating investments in the crypto winter. We have Steve, who is going to be moderating. We have Ben Simpson, the CEO of Collective Shift, Luke Jones, the CFO of Rarestone Capital, Adam Switzer, CEO of Leonie Hill AI, and Jacob Pritchard, institutional sales of Binance.
Okay, welcome everyone. So this is obviously an interesting time for crypto. You know, I think I was just checking out before, just ahead of this. I think crypto sits at around just over 30,000 today. It did hit close to sort of 90,000. Now, for anyone that's been sort of in crypto for longer than sort of 4 to 5 years, you typically know that this is not unusual for crypto to go to this cycle. And so I suppose let's start off with everyone just providing a quick introduction to yourselves, and then we'll go through the questions, starting with you.
Yeah, hi everyone.
Yep, it's on.
Yep. I'm Adam Switzer, the CEO of Leonie Hill AI, and come from a very traditional finance background as a quant risk manager and running very large tech systems. And us at Leonie Hill, we founded a technology business to provide crypto access to the mid-market, so wealth managers, trading houses and so on, in a very stable, traditional way to sort of preempt the wave of regulation and transformation coming on.
Hi guys. Wow, that really doesn't sound like it's on. Luke Jones from Rarestone Capital. So I started in crypto, probably in 2016 with a startup trying to help people invest in the space, and then moved into the venture space in like 2020. And so, yeah, basically we operate a fairly degenerate cryptocurrency fund where we invest in early stage crypto startups, and then, well, up until recently that was going really well, but deals are a bit dodgy now, so.
G'day, my name is Ben Simpson. I'm the founder and CEO of Collective Shift. I flew in from Tasmania last night, so lucky they let me in with my passport. I've been in a little while. So I run a company that helps people invest through education and research. So we have a couple of thousand investors that subscribe through a membership platform, and we deliver education because I think there's a big gap in Web3 and education, so that's my focus.
Hello everyone, my name's Jacob Pritchard. I came from a very traditional finance background, wealth management, stockbroking. Recently moved to Binance.com. I service institutional clients here for the APAC region as well. So I know there's a lot of clients here at the moment, and obviously a lot of potential guys as well. So I look forward to talking with you all. But I work with all our VIP clients, starting from VIP 3 and above. So starting at $20 million a month in volume and upwards of $5 billion for our high frequency guys. So yeah, look forward to all the questions. Look forward to hearing from you. Thank you.
I bet a few people's jaws just dropped at the idea of $20 million a month of volume on crypto. Ben, I'll kick off with you, just as a starting point. You're obviously got, you mentioned you got a few thousand people on your membership. How are you helping them, or what are you sort of giving guidance on how to approach crypto winter?
It's a good question. I think it depends when the investors started. So I think for those who invested in November as their first intro to crypto, welcome. It is tough. I think a lot of people tend to panic, and a lot of people that don't have the education and don't understand what they're investing into. My brother, for example, wanted to get into crypto in November. I said, DCA into Bitcoin and Ethereum, and he goes and loads up on Luna. So, we're just now at zero. So I think it's important to understand what you're investing into and starting off with Bitcoin as the first entry point. But for those people that have been around for a little while, like some people that have been into the space, this is just another day in crypto. Bitcoin's been down 70%. 50% more than 5 or 6 times. It's just the nature of an early technology, a volatile market, trades 24/7. It's just the space. So for me, it's just education is what we're trying to push.
And Jacob, from your perspective, you're obviously seeing it at an institution. What are you actually seeing on the exchanges? How are people actually, I suppose, adjusting their portfolio during this period?
Yeah, it's a little bit surprising because obviously late last year, I think we saw the market getting quite hot, and there was still some speculation from retail guys that there was institutional money waiting on the sidelines for, let's say, regulation. And it's not exactly correct, but obviously it was a little bit of a hope that, this would continue the bull cycle that we're seeing. But as soon as the market dropped, and no doubt it did drop quite aggressively, we're seeing a lot more resilience this time. Like I'm noticing companies are building quite aggressively. Everyone doesn't seem as negative as what we saw in 2017. I think everyone remembers that there was a lot of, hate towards it and people dismissing it. But institutions are building really strong at the moment. So as soon as that dropped, we did get inundated with new business applications, guys starting. Now, don't take this that people are buying and we're going to make the market go higher or anything like that, but companies are definitely developing and there's support there, which is good to see. So I guess what we'll see over the next couple of years will be really interesting.
So Luke, as you mentioned, you deal in the degenerate area. I'd like to call it more exciting than degenerate, but the business building area is an interesting one. I find when you go through these sort of crypto cycles, when it goes through the crypto bull market, then into the crypto winter, it's basically crypto bull market is how much money can you raise, and then crypto winter feels like how much can you build. What do you see in your sort of startups that you've sort of backed or that you're coming across?
Yeah, no, I disagree. I think that it is the early stage in a bull, like say you're saying end of 2021, so early 2021, stuff like that. It wasn't so much how much can you raise. You were seeing really, really strong startups with valuations or crypto valuations, anyway, fully like with a fully diluted value of like maybe 10 million market cap, or even less, like sometimes 4 or 5 million, and they'd only raise like a couple $100,000. And this is when we were seeing, say, Ethereum go from $300 up to 1,000, which is a fairly decent run, at the end of the day. Since the all-time high before that was like 1,400. Whereas then when you start to get late cycles, so since November, so since the top came in, you're now seeing, bullshit, metaverse, GameFi crap coming up with like a $50 to $100 million FDV. So that's when you get late cycle, you get that. And then now we're seeing early bull. Now you're getting late stage projects coming out that are basically the same stuff, just with a lower valuation. So I would probably argue nothing particularly innovative. Like we're seeing, pretty much a lot of trash. But then once valuations start to come down and you start to see a lot more, I'd probably say fly-by-night participants leave, then you see actual innovation coming. So if you have a look compared to like this cycle compared to the last one, I mean, the main project that everyone remembers that was really, really good was something like Ethland, which then became Aave, which was essentially one of the two founding sort of, components of what eventually became DeFi, which was Compound and Aave. And that was sort of like, that got to fractions of a cent during a bull market, and they raised late cycle. So there will be some gems hidden there, but I think that yet again, it's going to be one of those ones where we see 95% of this stuff just disappear.
Got you. And Adam, just heading over to you, you've obviously got a different perspective where you guys sort of deal with wealth managers and you sort of see the volumes that come in. So typically during sort of the bull cycles, wealth managers are concerned about how high the price is going up to, but yet obviously they're interested and want to know more. How have you seen that shift over the last sort of 12 to 18 months?
I think a couple of good points that Luke and Jacob both mentioned as well, just before I answer your question directly, Steve, is that it doesn't always go away, and I think a lot of the fluff and the hype will go away, but still seeing a lot of people investing in projects and really starting to realise the value of blockchain. And I think that's what you'll see sustain and come back out the other side. I think key things to consider is it's not just a crypto winter, actually, it's all global markets. So keep that broader perspective in mind that some of the crypto markets are faring better than some of the traditional sectors. In terms of the shift, and I think we're just at the start of the adoption cycle from post-hype, sort of 12 to 18 months ago. And the wealth sector was kind of crying out for access to the markets. How do we get involved, but how do we get involved in a secure way? So I think we're still at that kind of early mass adoption wave, and very, very similar, again, contextualizing back to traditional markets. I lived and breathed on the trading floors at some of the big banks all throughout the GFC, and it was a very interesting time to go through because those that had a really strong risk culture could see it coming. They were well capitalized, they knew what to do, and a lot of the others were spewing assets out. So it was a very opportunistic time as well for those that that had the stomach for it and had the discipline. So I think the key for us in the wealth sector in this early adoption phase is you'll get a lot of people that will shy away and say maybe it's another cycle and we'll come back to it. We're still getting a lot of interest like that. Build during the winter and start to get things in place. And I think part of that will be making sure that, again, we'll talk about it a little bit later, I think, around the regulatory space and the confidence and trust that, you hold assets securely, they do exist, that people aren't, taking them and doing things that they shouldn't be doing in a way that banks and trading houses are regulated. So the way, I guess, the way we've structured our business and what we're certainly seeing from some of our clients is they want things in a traditional way that they can point at the assets, they can trust the people you're dealing with, which is a little bit sort of anti the decentralized model of where crypto is coming from. But again, you look at the other extreme, and some of the exchanges is actually too centralized for some of these people to deal with because they don't know what's going on in that black box. So sitting in that space is where people are looking to get comfort in the wealth sector. And like every part of the market, it's a little bit of caution, but those that are smart and believe will continue to allocate part of their portfolio to the crypto sector.
Thanks, Adam. And Ben, going back to you, you mentioned about you sort of gave your brother guidance on a sort of DCA, the dollar cost averaging approach to sort of investing in crypto. Now, sort of in the winter period, number one is, and I'll go through this, everyone, how long do you expect the sort of crypto winter to last? And then secondly, what do you see as being, I suppose, one of the key factors to, I suppose, help, the markets break out of that cycle sort of going forward?
Yeah, it's a good question. And I think, it was answered over here previously. I think it's not just crypto that's down right now, it's every market. Snapchat and tech stocks are trading like, shit coins right now. So it's not just crypto. I think, inflation numbers, macro, war, et cetera, it just goes on.
Everything I had on my first slide.
is really putting downwards pressure. And I think the month of June was just a shitstorm for crypto. Like we had every institution under the sun seemingly, either going under or being liquidated, and there was forced market selling. There was so much stuff going on in that month. But yeah, crypto actually held up relatively well, I think, in comparison. Now the question is, right now we had a bit of a, whatever you want to call it, a relief rally. Is the bear market over? I don't know. I don't think so. I think, if you look at any other market in the macro right now, I think it's going to be tough to use this as an influencer to bring the bull market back. So for me, I think we could be here for a little while, chopping around. But I think we're going to look at this phase as a great accumulation time, a great time to be accumulating, some of those blue chip assets. I think we're pretty much undervalued at this point, and that's what we're pushing to our members. Perfect.
Luke, you mentioned you obviously do work with startups. Do you also do work with corporates as well?
No, we don't do much in that space. I mean, through our clients maybe, but as far as we don't take out outside investment or anything like that, so we don't really have any need to deal in that space.
Well, a question I have is, in this sort of building period, and maybe someone may be better to answer, I'm just curious, because typically what happens when, like for example, I noticed MasterCard put out an announcement, was it 2 days ago, mentioning that they joined up with Blockchain Australia on their global sort of international channel. I thought that was quite interesting. And there's obviously been a lot of corporates investing heavily sort of into this space. Have you seen, like I said, I don't know who's best to answer, have you seen any changes in that? Is that still progressing as per was, or is it just going under the radar? What's sort of changed in that area?
Yeah, it's not really my field. The only thing I could say from an anecdotal standpoint is that the exact same thing happened in 2018, and 99% of the time it was just like public pandering, like publicity stunts and things. Like, the whole Long Island blockchain thing and all that. So when companies say they're implementing blockchain the same way that the Dubai government says they're implementing blockchain, it doesn't necessarily mean that they're actually doing anything particularly innovative. And I've experienced that firsthand. So yeah, I wouldn't be overly excited when MasterCard says we're allowing people to do stuff through blockchain, because if they're allowing people to make payments through crypto, they're not going to be doing that themselves. They're going to be using some other intermediary to facilitate that third-party payment. So, I mean, that would be my only anecdotal comment on that.
Anyone else?
Yeah, I might add a little bit. I've got a very corporate banking background. So typically what happens is, again, back to the macro cycles, is investment budgets go down across the whole business. I think that's inevitable, especially if some businesses aren't doing well and if we hit recession or whatnot. So you'll naturally see that. I don't think that's a sign of people shying away from blockchain. And certainly from the experiences I've had is the best companies will still invest in things that are smart to do. But totally to your point is that I wouldn't necessarily hold them to be the ones that are innovating throughout the whole space. I think what you'll see is a focus on the big players looking at things like stables, payment channels, infrastructure, shaping regulation, and partnering. I think competition, for lack of a better word, is essentially people working together to build the better than some of their parts. And I think you'll see a lot of that with the big guys who are trying to either sweep in or partner with people who've got great ideas or other smaller companies working together to build great things. So yeah, it won't go away. It'll be different. The smart ones will be there, but a whole natural haircut on investment is probably totally reasonable.
Yeah, I was going to say one of the interesting ones I found out about was one of our big four banks basically had a division of a blockchain division before it was ever sort of publicly announced, and it was just squirreled away on the Sunshine Coast. I found that quite interesting. My next question, I think it was Ben that mentioned about some of the failures, or was it yourself mentioned about some of the failures recently, Jacob? So about when it comes to regulation, what do you expect to happen over the next sort of 12 months? Because like the failures of Celsius, the failures of Three Arrows Capital, etc., it wasn't quite the Mt. Gox moment where it thought this could be the going away of crypto. But what do you see coming down the pipeline?
Yeah. So I think we can all agree, like when it comes to regulation, and I'm no regulator by any means, and obviously we work with all the regulators as close as possible and hold the utmost standards. That's a bit of a disclaimer there. But so I think we all need a bit more colour and clarity, because not just from a regulating and an investor or a business standpoint, there's division there, but then there's also division among businesses as well. Like if there's not a clear framework that we can see what we can build off and what we can move forward on, how are we meant to thrive and continue doing this? So I think obviously there is a lot of investment from the institutional side, and they're getting very active. So yeah, a bit more colour and clarity, when that's going to happen, I'm not 100% sure. I'd like it to see that sooner rather than later. I'm sure we all would. But yeah, colour and clarity from regulation. I think we all need some framework to build off, and yeah, we just need something clear, I think, that we can work off. And yeah.
So the only thing I want to comment is I don't think that the failure of things like Luna, Three Arrows Capital and Celsius had nothing to do with a lack of or a part of regulation. That was mostly due to just pure greed, more than anything else. Like for example, which
is also not unusual in the startup area as well.
Yeah, it's not unusual in anything to do with capital. So you didn't have an issue where Three Arrows Capital were basically, they were technically breaking laws, but the way they were able to get, if there was regulation in place to, regulate that type of investment, then I don't think it would have stopped it happening. The same as Luna. It's really about, basically enough people FOMO into something and make it too big, then eventually there's an opportunity to short the shit out of it. And basically, if you create the exact right time to create a bit of a shorting opportunity, then you can pretty much facilitate it. But there's nothing, I don't think, really that regulation could have done. But I think the only thing regulators, from my experience, and I've dealt with regulators in like a lot of the Middle Eastern countries and a lot of Southeast Asian countries, is basically just how can we, is fiat on-ramps, how can we basically stop people from laundering money through crypto? And that's pretty much 90% of all I give a shit about. How to stop the people losing money and facilitating AML KYC.
Makes sense.
Yeah, maybe that's worth just adding that we've got quite short-term memories, and you probably just look back to 2008, 2009, and exactly the same thing happened, exact same wave of regulation in other markets. So and again, how we've structured our business is to try and preempt and model some of the lessons learned, and what we'll see, I'm sure exactly what we'll see, and they're already talking about some of the draft regulation, things like bankruptcy, remoteness of client assets, capital adequacy, KYT, KYC, AML, and so on is obviously just a given. So we'll just see more and more scrutiny. I think the unfortunate reality is it'll cost more to the end client, which will get passed on because the cost of capital, cost of regulation, cost of discipline and risk management ultimately makes transactions more expensive and some businesses not, less viable. So you'll naturally see a few companies fall off. The regulations will come in and tighten all the basics around how other markets operate. So again, probably nothing new. It's just catching up, and the regulators will never catch up. So I think it's the due diligence on people in the industry to be prudent and be sensible and act on behalf of value, be that the customers or the stakeholders, the coin holders, whoever it is, and not greed, because ultimately they're the ones that will get crushed.
The only thing I'd add, we don't deal with institutions too much. We're on the more the retail side. A little bit more clarity in like the financial advice space would be really helpful as well. For a lot of the new participants that come into crypto, tend to follow the latest YouTuber who's shilling God knows what with not disclosing payments and all sorts of different stuff. So for us, we're trying to work with the AFSL licenses. We're looking at different things. I was in New York the last couple of months over there at the Blockchain Australia sort of event, trying to work with the regulators to develop a bit of a guidelines on how we can actually deliver more, I guess, confident advice around what is good investing versus what is not, without touching on the grey areas that's in the financial advice space in crypto. So yeah, a little bit of work there would be really helpful, I think, for everyone.
Interesting. I've got two more questions as the sort of minutes run down. Obviously, there's a lot of, when it sort of comes crypto winter, sort of money does go back to sort of BTC and ETH, right? What are some of the other projects that you guys are looking? Because obviously you mentioned altcoins, get smashed the most typically in sort of crypto winter. What are some of the projects that you're looking at that you also think are potentially undervalued or that are doing some really great work that are not being recognised? You can start with anyone.
I can start with just the stablecoin space first of all. So the stablecoins, we look at data recently that we're actually seeing all-time high volume of stablecoins on exchanges, which is interesting because I think with the UST event, I would have thought there would have been a bit of a hit to the confidence around that stablecoin space, but we're actually seeing a lot of investors move a lot of their risk-on assets into stablecoins, potentially ready to deploy, maybe when assets go lower. So I think the stablecoin space is still really exciting for investors that don't want to take their money into fiat. They can keep it in stables and transact and do different things, on the stablecoin space. So that's an interesting area that I'm looking at as well.
Thanks, Ben. Luke?
I'd be a bit hesitant to recommend any investments, considering, but
I was going to say not to recommend, just projects which you find interesting.
The one project, this is more of a case study in how to start your crypto startup than anything else. So there's a project called Aleph, and what they basically did was, instead of raising capital because they started in 2019 and it was a shitstorm, was basically what they did was they allowed people who were staking on Pulse, which is a network that pretty much no longer exists anymore, to basically stake against Aleph. Aleph would get their token rewards and then swap that in return for initial Aleph tokens. And then what allowed the project to do was basically get a $33,000 a month payment in these Pulse tokens, which are then sold to then fund the project. And they were able to basically kick this thing off without actually having to raise a single dollar of investor capital, which means that you don't end up in the same situation as an AVAX, Solana, any of these major projects that had these investor cliffs and then investor vesting schedules, which then obviously means the market goes up, the vesting schedule starts, and then you just see these same charts over again where, from your perspective, it's going to go up and then forever. And you can pretty much cycle through 80% of the projects that have raised capital through 18, 19, and they all pretty much look like that, where basically it's gone up because there's no tokens being released, low supply starts hitting the market, and then just shits the bed. So that was one thing that I found interesting, purely in the way that they raise capital. But as far as for the next cycle, I mean, I'd really only be going ETH as a main layer one, because once it starts scaling, all the other layer ones become sort of semi-redundant, like Solana, Polygon. I mean, I hate those two networks with a passion. But
Anyone else?
I think more generally is just stuff that's nimble and really has value. So like if they get a great layer one, all the rest will become redundant. So are they solving a real problem? We've got our own projects, which I probably won't mention, but there's things that are actually going to survive and that are nimble, scalable, true to certain principles of openness, data exchange, all that sort of stuff. So, and again, I'm coming from more prudent background, so things that are there to actually, be balanced in how they operate. You mentioned stable coins, things that don't offer unsustainable returns. So again, common sense, low operate costs, things that you want to scale and aggregate.
So I was very fortunate enough, one of the speakers presenting today, Henrik from Apollo, I remember it was May 2019, I was at another sort of blockchain conference in Adelaide, and we were talking about when is the next sort of bull cycle for crypto. And I remember at that point he said, I think we're finally out of the winter. And my last question for everyone in our last sort of 2.5 minutes is, how do you see the role of the next sort of Bitcoin halving playing in this next sort of bull market cycle, and then how do you typically either invest towards it, or how do you see investments going to it from an exchange perspective, or how do you sort of guide or educate people on how to navigate it? Because obviously the last big cycles have sort of been centered around that as a center point.
Yeah, I'll go first. Without providing any recommendations, obviously, because we're completely agnostic. Typically, volume increases drastically. It's a great headline, the Bitcoin halving, and what you can study, obviously, what's happened previous times and where the movements have occurred and so on. To provide a prediction, that'd be I think potentially a foolish thing to do at this time, as there's still so many variables that we're unaware how they're going to play out. But in terms of popularity, it's definitely a buzzword and a flavour of the month when that occurs. So obviously, what happens after that, it's and anyone's guess. I guess $1 trillion answer, I would say, in terms of that. But yeah.
Yep, I think we're dead set right in the accumulation phase right now. A simple Wall Street cheat sheet shows pretty much that's where we're at. The halving 6 months either side is usually traditionally where the bull market lands. But for me, I think it's really got to do with the macro until the macro sort of cleans itself up.
And sorry, I didn't mention it. When is the next Bitcoin halving, just for everyone?
We're less than 2 years, I think. We're on the downward hill. So the other thing I want to mention is I think the Ethereum merge is something pretty bullish as well. I'm just going to shield Matt, our head of research, did a video on the Ethereum merge coming up, and that's really bullish. I think the supply shock when we move from proof of work to proof of stake is really exciting. And I think that's going to have a little bit of a push uphill, hopefully in the next 6 to 12 months.
I'm surprised Jason didn't tell everyone to go buy BNB, mate. CC wouldn't be happy with me.
That's it. Yeah.
The only thing I'll say is that, in my view, and I've been trading for a while, is that the bull market will start or the bear market will end when everybody thinks the whole thing's dead. Like when everyone throws the baby out with the bathwater out the window, the whole industry's dead. We're all going to zero. That's when it's over. So until then, we're still going down.
We've just ticked out of time, but I tend to agree. I think if it's 2 years away, then a lot can happen in crypto in 2 years. Hang in there and I guess watch close to the time. But yes, there'll be a lot of activity over the next 2 years, no matter what happens.
Well, ladies and gentlemen, that concludes the panel session. I'd like to say a big thank you to the panelists, and also the respect they showed in not sort of promoting any projects or anything like that. It's actually really hard to get in a panel session in that. And so thank you very much for everyone. Thanks so much for the insights.
Thanks, everyone.
Now, Meg's going to do an intro. I'm just going to do a short one. Our next speaker, Heath, said I've followed him since I think he first presented at one of our events, 2017, 2018. Really echoes my sentiment about how much I love innovation and also the potential of Web3 from an innovation perspective. As one of the real thought leaders in Australia when it comes to this area, someone that's bound to go, that loves to go against sort of what most sort of common analysts or common fund managers are talking about. So he stands alone sort of in that area. So I'll let Meg do the intro, but this next session is bound to be fantastic for everyone. Thank you.
Thank you, Steve. Before we go to Heath, I just wanted to introduce myself. I'm Meg from Wholesale Investor, and I'm going to be hosting you through the 3 days. I just wanted to remind you, you do have your headphones, so if you can't get a seat, you can take your headphones and walk around and listen to any of the presentations. We're also going to be doing an investor draw. So a lucky winner is going to be able to win a luxury bottle of wine. We're going to be announcing this at lunchtime. So the way that you enter is you register the event, so obviously you all have, and you just sign up with your CRISP account, engage with a few investors, you can speak to them via the chat, And then we'll be just doing a random draw at lunchtime and announcing that winner. So yeah, looking forward to that. So yes, now we have one of our keynote speakers, Steve just kindly introduced. So please welcome to the stage Heath, Behncke, co-founder and managing director of Holon Investments.
Morning. Everybody can hear me? Good. Okay, oh God. You can see I've got a compliance team. So that's the usual compliance. I'll flick it on. Oop. Yeah, so look, I'll have a chat today, guys. It's just about what actually Holon's doing, our views on the world, and really why we why we got into Web3 in the first place. So and what we're looking to do. And I think actually Holon is as a Web3 asset manager and storage provider or data custodian on the Filecoin network is what we're doing today. We also got a principal investment arm where we're investing also in regulatory bridges in that way. But we're very deep in the ecosystem and deep around a lot of access, trying to make things happen, particularly also from a legislative perspective. So. Look, overall, to kick off, my company is really about what I'm trying to solve is this problem, accelerating innovation. So like if you actually sit back on a long enough time on a scale, you start to see that everything seems to be moving at a faster pace. And essentially throughout my investment career, what I've just orientated myself to focus on the stuff that's really accelerating innovation in that way. So I'm an actuary by trade, just to put this in context. I covered a lot of, I went down the value rabbit hole, so with Buffett and Graham, came from that space in the old world, and essentially I've sort of like left that behind and I just focus on really things that are happening at a faster pace and solving for this. This started becoming really evident to me when you look at the Web 2 conversation, what now is becoming known as really Web 2, with these 7 big companies here. They're very familiar to you. Alibaba and Tencent out of China, Alphabet, Amazon, Meta, the old Facebook, Microsoft, and Apple. And of course, what you've seen, and we'll just put up a chart here, is that if you aggregate all those operating cash flows up, so this is real operating cash flow, what you find is that they've compounded about 17% per annum over the last decade. Now, when we look forward, we run an innovation fund, global innovation fund with some of these names in it. We think that's probably going to compound at a pretty hefty rate again as we move forward, underpinned mostly actually by cloud, the cloud businesses in a major way. And the other thing that you'll still notice that these balance sheets today are like across these companies are like 400 billion plus, and they're starting to reduce share counts. Apple reduced their share count by 35% over the last decade. So if you think this is going away, it's not going away anytime soon. This is like providing you with basically the infrastructure that's allowed us to get through the pandemic in many ways. What's happened, and you can see over time, we've had the pullback recently, which is kind of interesting when you see on the other chart how the operating cash flow sort of inflected up a bit, of course, with digitisation sort of shot the arm through to COVID. But this is probably for Australians and Australians the key thing to note. That's us here over a long period, and look at the performance of the other indices. We're lagging. We lagged in Web 2 very seriously. Actually, the Americans were benefiting at our expense, basically, in that way. This is the problem with our economy being so old world, being basically resource-orientated and old world banking. That's the problem. I think that's going to get worse, particularly with what's coming with Web 3. But essentially, as I summarise here, AWS and smartphone with the introduction of the iPhone changed everything way back in 2006, and this is the result. And digitisation is just speeding up everything in that way. Most equity market participants, I think even the ones well known, find it hard to understand this in that way. I think we're going to see more of this as we move forward. So what comes next? So what I realised back about around 15, 16, I could see the internet of communication was pretty well firmly formed, and you could see actually a lot of these trends that were happening with the likes of the Amazons, etc., were firmly underway, and not surprising where they've gone today to me back then. And we'd shifted well and truly into that internet of communication era, that read-write through platforms. And then the question, of course, at that time was being posed as well. We knew that effectively data was the new oil, and essentially that these business models, which I've got about 45% of my global innovation fund is benefiting from data capture majorly. And that's a great economic model in many ways for a shareholder, but at the same time it presents an issue for society. And that's really what Web3 started to pop up. I was actually realising this, that we've got to actually reorientate our information system, redesign them in a different way to enable us to actually shift on from this real, what was essentially this data capture conversation. And that's when I started to really, realising that the Achilles heel of anything I'm investing in here was really going to, is basically going to be solved in this next iteration. We all sense it and feel it. So that's the real big movement, being self-sovereign, and this conversation around in our data and ownership of our data and ownership of the internet in that way. So that's what's going on. And look, just simply for me, when I look at this, and we'll talk touch on a little bit later, I've launched regulated products for these three platforms, essentially, Bitcoin, Ethereum, and the one that's probably not so well known here is Filecoin, which is really decentralized distributed cloud in that way. We're very bullish on Web2 cloud today, but the next iteration of cloud is represented here. So essentially what we're doing, we're creating this open common infrastructure layer that we can all actually work around with, which leads us to a vastly better world around automation, unit efficiencies, but also verifiability. That's the big thing that we're starting to see more and more in the space. So it really represents a big structural change, a new technology platform that's going on. Now, most people in global equities wouldn't even talk about this, understand this in that way. They wouldn't. They look at PE multiples, they look at revenue streams. They don't actually understand how the current technology is actually built. And that's the key thing to really actually understand here is essentially Web 2, and you see that the application layer like Google, Facebook, Apple, built on protocol layers, well-known protocols. In Web 3, we're starting to see development at the protocol level, and this is like when you start to look into it, can be game changing in that way if structured actually correctly. And of course, Bitcoin being the first one of those are standing today, but it's a very, very different model. Adoption in Web 2, we think, is going to be. Had the traditional bootstrapping issue, of course. Think about Facebook when they got up and running and how much capital had to be raised at the beginning just to bootstrap that. It was actually quite an amount once they started to get up and running. In Web 3, you can actually participate. You can incentivize early in the process and solve that bootstrapping problem. And that's the big thing that's to understand that leads to a vastly faster development of the internet. So again, this accelerating innovation theme that actually I touched on at the start. So one of the things that people tend to find is hard to understand here is like just why is crypto just accelerating such a pace? And a lot of it is really those incentive structures. So here we've got, we've done our own analysis around this with my investment team around where we think things are heading. We're comparing here against the internet users in the early days versus what we're seeing in Web 3. And we think the major difference here will be the incentives layers here. And I've got a slide on with one of my businesses, how it operates with that essentially that will lead to a vastly faster pace of adoption. And when you actually think about things, if you go back in time, you've got this, we've now got the smartphones. We know that it's really re-engineering the back end very, very significantly in that way. So we will fully expect that Web3 is going to go at a lot faster pace, and that explains what's happening in crypto today. Here is a good example of one of the big data models out there, Amazon AWS. Everybody thinks AWS is a retailer. Believe me, this is where they make all their money. That $18 billion operating profit last year, we think that number is going to get extraordinarily large in the next 10 years. It'll be 50 odd billion plus. Cloud is one of the biggest businesses today in the world by a long shot, and these income streams are growing for all the major cloud players at a very heady clip, and will continue to do so for the next decade in that way. Now, so what we're doing in terms of as the next iteration of cloud in Web3 is working around a protocol called IPFS. What people today, when you look at all of that cloud, that Amazon Web Services, Google, etc., is all really structured around mostly on this protocol called HTTP, which everybody's actually familiar with, or location-based addressing. That enables data capture because the client-server relationship. When you actually look into Web3, and this is one of the things, one of the epiphanies I had at a point in time where I realised IPFS would enable data custody and shifts us to content-based addressing, giving us immutable guarantees around our data, and the data can be actually held anywhere. Now, this is critically important to understand because when you start to realise that if you want to enable the Internet of Value, you need to enable digital property rights, and that's what IPFS does. So if you look at IPFS today, there's over like 70 odd million NFTs actually held on the IPFS Filecoin network. People starting to realise the value of that open, verifiable data structure that we're running. The Internet of Value cannot be run on Web 2. That's actually very clear when you actually look at it. You need an infrastructure like this. So today where we sit, briefly on IPFS Filecoin, there was the network launched in October 2020. There's over 16,000 petabytes of raw storage that's gone on, and then today, what's happened the last 6 months, we're seeing a lot of data starting to pour actually into the network. And Holon operates in this network. We receive Filecoin for actually putting storage on the network. And we've put up here a couple of competitors, Sajor, Skyhook, Arweave, the ones that get talked about. Just to be clear though, we're going to have about 13 petabytes on our network by the end of this year, and essentially that we're going to be bigger. Our system is going to be bigger than these other players combined in that way. So we think Filecoin's one decentralized storage, and we're really competing with the big guys in that way. And as I said, it's like still early in the journey, but it's this type of infrastructure that's required to really underpin Web3. So we think this is like one of the most undiscovered networks out there. Here's some of the clients we're actually storing data for: CERN, NASA, the Sure Foundation. That's with basically data from the Holocaust data, other universities there as well. So we can save massively on content costs. We get paid from the blockchain. We don't charge the clients today. That's the bootstrap. But eventually, it's the efficiencies of IPFS that will lead to vast economic gains and superiority over the longer term. Here we show, here's the incentives. I've got a picture with Senator Andrew Bragg out at the data centre, that the hyperscaler was sitting out Western Sydney there with AirTrunk. Andrew and I doing the opening. And here this is sort of again, like the Bitcoin profile. We think about how Bitcoin block rewards are given out for security mining. There's a profile here for that incentives to build out the Web3 cloud infrastructure in that way. The main thing to know from a planner's perspective or any investment advisor's perspective is that the Web3 monetary system is going to be a market-based model, fundamentally game-changing, so different than what the current monetary system is today. And essentially, I'll give you an example. So Filecoin is going to be a commodity. We classify it as a commodity. So it's cloud in an open data market. That will be competing against equity cloud today, as an example. So the disruption comes in different areas in that way. To understand, we think going forward that we're going to see more of this development actually over time. Interestingly enough, for me, when I look at Bitcoin, the biggest issue with its or the biggest impact it's going to have over time is actually on bonds. People don't realise this yet. That's the part where it gets really savage. So if it comes to fruition, so that's the thing to remind. The way I look at this is that we're basically providing insurance policies on the future. So essentially we've got the Holon Photon Fund, which is basically a global innovation fund structured in global equities. We've got about a 10% exposure in the Holon Photon Fund to Bitcoin, Ethereum, and the Filecoin Fund through regulated managed investment schemes. Now, to my knowledge, I think this is the first in the market who's actually done this. This allows financial advisors to now engage. Without this type of infrastructure, it doesn't happen in that way. Meets their PI requirements, etc. There's a long road to go, but essentially we're here after, I think I was talking to Steve, it was like 4 years ago when I set out on this journey. The other major thing that we're doing that's very different in Web3 is that we've released a major report on green data. We're championing this with Filecoin Green and the Protocol Labs, one of our investors. Major report. We're going to go verifiably green on that network. So that's actually a huge advantage over time. So think about having data centers powered by renewable energy in that, and that can be all verified. So there's a major report out there. If anybody wants to go to our website and have a look at this. So this is another good thing for the economy. We've been talking to the legislators about this. Finally, I think we had a bit of a touch this morning on stable coins. We've invested in a bank called Custodia out of Wyoming. We think this bank is at the forefront of global change when it comes to banking and has the right structure for a stable coin. That structure is done out of a narrow bank, so no fiat lending. We should not be doing stable coins out of JP Morgan, CBA, ANZ, all of them. They're fractional reserve banks. Fractional reserve banks are risky. So we think we need new structures to embrace this. And this is probably the biggest conversation that's going in the US at the moment about banking is where does this reside? Now, we're starting to have some of this conversation here in Australia, but this is one of the ones that is quite critical, actually, if we want to develop and mainstream the technology in a very, very safe way, is the development of stable coins is fundamental to this. So essentially, we invested in Caitlin's bank. We've actually, a lot of the legislation that's going in Australia has been leveraged off what Caitlin's actually doing. So she's actually made inadvertently a big contribution, I think, to the legislation that's actually going in here. So we're very excited about this. And Holon ourselves is like a regulated bridge in that way. So look, I hope today gives you a bit of a flavour of some of the tangible things that are actually going on for Web3, and we think this got a very bright future. Thank you.
Thank you so much, Heath. Next up, we have Ting Wang, co-founder of Coinstash.
That was interesting, wasn't it? That was.
So let me get started with this. We're now in 2022, so by now, many of us have heard of cryptocurrencies, traded cryptocurrencies, but how much has cryptocurrencies really changed your day-to-day lives? The truth is, there's so many good use cases when it comes to cryptocurrencies, but when most people talk about cryptocurrencies, there's only one thing that comes to their mind, which is the price. Few have unlocked the benefits of crypto, and Coinstash is here to change that. So at Coinstash, the problem we have identified is that cryptocurrencies should be used to fundamentally change the way that we deal with our finances, not just used as another asset for speculation. So what do I mean exactly by that? Right now, the world that we're living in is a bit of a mess. Us who are fortunate enough to live in Australia is more or less sheltered from this reality. But elsewhere in the world, in Sri Lanka, for example, we have seen basically the government effectively pull the rug from underneath their own people, causing massive currency devaluation and hyperinflation. The scary thing is this is not the first time nor the last time this will happen. And this is happening elsewhere in the world as well. So in Europe, we're already seeing there's some concerns with currency devaluation, especially in Italy. In South America, we're seeing countries like Brazil undergoing similar pressures. Even in the United States and the rest of the developed world, we're seeing that even after multiple interest rate raises, we're still seeing record levels of inflation, and which causes massive wealth dilution. So if you have $100 today, even at a 5% annual inflation, after 20 years, 2/3 of your wealth will be diluted. So the fundamental use case of cryptocurrencies, in my view, is that it creates a peer-to-peer, trustless financial infrastructure that's free from a single point of failure, such as a government organization or financial institution. The people in Sri Lanka, if they had easier access to something like Bitcoin or a USD stablecoin, much of their wealth could have been preserved. This brings me to our solution. At Coinstash, we deeply believe that there needs to be a bridge between traditional finance and the world of crypto. And we want to be the pioneer in unlocking financial benefits to Australians through cryptocurrency and blockchain technology. In my view, people need a choice. They need to be able to choose where they park their wealth, how they invest their wealth, as well as how they want to borrow against and also spend their wealth. Most importantly, given what's been happening with Celsius and Three Arrow Capital, I think this needs to be done in a regulated manner with a high level of accountability and also radical transparency. So if this all sounds too airy-fairy to you, I would like you to meet Matt. So Matt is a millennial who has been with a number of Big Four banks since his teenage years. He's also recently tried some of the more recent challenger banks. At Coinstash, Matt can earn up to 4% with his Australian dollar stablecoin, or even a higher percentage if he chooses to park his wealth in a cryptocurrency. He can spend money anywhere in the world with a Coinstash card, and also borrow money based on his wealth, not on his credit scores. Remittance is a big thing for Matt, because he wants to send money overseas, and this can be done in seconds, not in days. So Matt does not miss his old bank. Be like Matt. So some of you might be thinking, what makes Coinstash so uniquely positioned to bring this vision to the market? Well, we have a very strong track record behind us. We launched our exchange product in 2019, and we have to date more than 400 cryptocurrencies listed on the platform already, one of the most among our peers. We're also heavily investing in our regulatory roadmap. To that end, we have secured we have become the controller of an Australian financial services licensee company towards the end of last year. We recently launched our Coinstash Earn product, which allows people to earn from 2021 cryptocurrencies. In addition to all this, we also have a very strong community behind us after successfully raising funds after 2 rounds of equity crowdfunding. So our future products speak for themselves. With Coinstash Borrow, we want to allow people to be able to borrow against their crypto holdings without necessarily having to liquidate them. And with Coinstash Spend, you should be able to spend your wealth anywhere in the world with a Coinstash credit card. Our business model is quite straightforward. Currently, we have an exchange product, roughly earning about 1% in fees. In the future, with our Earn, Borrow, and Spend products, we'll be earning an interest rate margin. We have shown some strong traction to date. We're still in the process of finalizing the FY22 numbers, but if you look at our traction to date, in terms of signups, clients, as well as volume traded and total revenue, we have all grown exponentially. We're obviously aware of the competitors in the market, but the way I see ourselves differentiating from the rest of the market is we really want to build something that's bigger than an exchange. We don't want to be just an exchange with a staking product. We want to be the first crypto bank in Australia. It's a $1 billion market that we're targeting. If you look at the exchange market itself, it's already a multi-billion dollar market. Obviously, the banking side of things will add another sizable market share to all this. So we have a young and enthusiastic team behind us, and all of us are sharing the common vision, which is to bridge the gap between traditional finance and the world of crypto. I would also like to highlight we also have an AFSL responsible manager on board who oversees all of our compliance. In terms of what we're looking for, we're looking to raise $10 million at a valuation of $30 million. And this money will be used across 3 key areas, which is growth and marketing, product development, as well as operations and compliance. So to summarize, Coinstash started as a humble exchange, but we're building something that's a lot bigger than that. We deeply believe that there needs to be breach. We deeply believe that cryptocurrencies should fundamentally change the way that people do deal with their finances. And we want to become the pioneer in making this a reality. Once again, my name is Ting, and feel free to reach out to me either on LinkedIn or at ting@coinstash.com.au. Thank you.
Brilliant. Thank you so much, Ting. Next up, we have Ming Wang, co-founder of Opal Fintech.
Good morning, ladies and gentlemen. My name is Ming Wang from Opal, not to be mistaken with Ting Wang of Coinstash, to begin with. Let me just make sure I'm figuring this out correctly. So Opal is one of the first licensed neobanks in Asia, focused on serving international commerce, specifically for small and medium enterprises. I've been an operator and investor in the fintech space for the last decade. My CTO was tech lead at Goldman Sachs and the CTO of multiple hedge funds, and my CLO is a specialist in financial services regulations. Over the years in financial services, the area that we see most underserved, the greatest opportunity, is when it comes towards international commerce, specifically for SMEs. The big problem with financial services and international commerce, ladies and gentlemen, is that it is fraught with regulations, and the infrastructure and associated platforms are all disconnected. I'm sure you guys have experience in your businesses trying to make a payment that is 50,000, 60,000, 100,000, and having that transaction frozen or delayed or late, simply because it is considered high risk. Or you may have tried to get financing from a bank or another fintech, and because your track record in that space hasn't been long enough, you've been unable to access the financing that you badly need, specifically to pay overseas vendors and suppliers. And more painfully is you're having to access all of these solutions on multiple platforms. Here's a simple example of an SME out of Australia purchasing $100,000 worth of goods from a supplier out of Thailand. In this instance, our dear SME is unable to get financing from his bank because he's banked with them for less than 2 years. Perfectly good business, unable to get that financing. So he resorts to a third-party lending platform, and if he's lucky enough to get financing, probably at pretty expensive cost, he would then have to instruct that lending platform to move that facility to his bank because that lending platform is unable to hold his funds. Then his problem isn't done. He has to convert AUD into Thai baht to pay his Thai supplier. Again, the bank's fees are opaque, the delivery times are not very clear, highly complex, and worst of all is the cost of the FX conversion. It can be up to 3 to 4 times what you would get on Opal. So our dear SME then instructs his bank to transfer the money to a third-party remittance firm, where he then makes that payment. And even then, he's delayed by 3 days because to that remittance firm, he's transferring $100,000, which is a big quantum, and therefore he faces a barrage of questions and a late payment. In this simple transaction alone of just buying goods from his supplier that he's going to do in and out every single month, he's relying on multiple platforms. That means having to onboard and KYC on multiple platforms from scratch again and again. It means having to manage your business across multiple platforms without that complete visibility. And it also means that the next time he wants to make that same transaction, they're going to ask the exact same questions and begin that process over and over again, because none of these platforms are speaking to each other. What we've built in Opal is provide a unified account where you're able to manage 34 different currencies from the same place. You're able to make cross-border payments to 180 different countries. You're able to get paid like a local all over the world. You're able to get financing from that same platform. And we've also included escrow because it's important when it comes to international trade with parties from all around the world. So what happens then is that same SME now making that payment to an overseas supplier has a much more different and streamlined workflow. That SME is able to get financing on the Opal platform through one of our Opal product partners, which I'll touch on a bit more later. Have that facility then converted into the choice currency, in this case from AUD to Thai baht, and successfully make payment to his overseas supplier in a single execution. The unique thing that's attractive over here for the business and investors is that we are able to monetize at each of these touch points, as opposed to a pure payments platform. This means when we disburse that facility from our partners, we make a cut. When the money is converted from AUD to Thai baht, we make a cut. When the money is disbursed, we make a cut. When escrow is employed, we make a cut as well. So the lifetime value for each of our clients is significantly higher than most of our peers. Another thing to point out that's unique about Opal is that our solutions are not just natively built by Opal, but are also through our partners. So when you open up an account on Opal, you're actually getting access to a myriad of different financial solution providers. Currently, we are partnered with a Sequoia-backed lending platform that's in 4 different markets for the financing piece, 3 tier 1 banks, 4 international payments platforms, and by the end of this year, a revenue-based financier. The beauty of this all is that whilst we have different partners, the relationship with the end client and the data sits with Opal, and that's how we're able to understand the business more coherently. Now, from an opportunity perspective, globally, it's 56 trillion. It's massive when it comes to global trade. But keeping my feet on the ground, it's about 1.3 trillion just in Southeast Asia alone with regards to international commerce and trade. And we look to be able to process over $20 billion per year by the end of 2026. Now, this number isn't just plucked from thin air, but it's based from our early traction. Let me try and simplify this graph. So in June of 2021, we went to market. In the first month, we processed $300,000. 8 months later, in January of 2022, we processed more than $16 million in that month alone. I'm happy to have a chat later on and go more into the numbers. What is the Opal advantage? 3 things. One is we are one of the few fully licensed entities out of Singapore. We're not just in the sandbox or an exemption. This means there's greater credibility with our customers, partners, and investors. It also means we have superior economics. When we form partnerships with payment networks and other fintechs, the cost is significantly lower than our peers because we are more efficient operationally and with our compliance. Secondly, because we have that unified account access to a marketplace of solutions, it means long-term monetization and scalability is very palatable. And thirdly, because all of the clients' activities are happening on Opal, we aggregate that financial data and are able to build a superior risk engine, meaning your access to products, whether it's large payments, whether it's financing, whether it's insurance for your international trade, improves significantly. So ladies and gents, our team comes from the 3 startup nations of the world. I've not included Australia, maybe soon enough, Singapore, Tel Aviv, and the United States. So we are raising $6 million US dollars today, of which we have obtained $2 million in commitment. The funds will be used primarily for customer acquisition and retention, and also to continue our product and research and development into making use of the data to build an alternative risk engine. So I'm almost out of time. So ladies and gentlemen, I would love to have a further conversation and welcome you on this journey with us. If you have any questions, I'll just be out front for a conversation. Thank you.
Take your mic off. Fantastic. Thank you, Ming. Up next, we have Tim Pearce, Chief Marketing Officer from Metex Exchange.
Good morning, everyone. Thanks for having me here. My name's Tim. I'm Chief Marketing Officer of Metex and an investor in the platform as well. Metex is a project that we feel is unique, robust, and actually has amazing upside. And its strength is its simplicity. So I guess as a CMO, not a CTO here today, I hope to put the case to you that this has a lot of potential in the market here in Australia as well as internationally. And if we don't answer your technical questions from the platform today, hopefully we pique your interest and you can come and see us at the booth. So today I'll show you the need in the market as we see it and how Metex answers that. We'll give you some insight into our team and what our future looks like, and we'll outline our investment opportunity. Fundamentally, Metex is a new way to trade precious metals. We've developed the platform from scratch, so it's proprietary software that we own, developed here in Australia, in Melbourne. And we host digitised metals as ERC20 tokens, and they're backed, I think, significantly one-to-one by a physical treasury of metals held in Brisbane and Melbourne. We also offer crypto trading for Bitcoin, Ethereum, and USDT, and we accept AUD and other major currencies with KYC AML. The vision that we have really, from our founders through to this launch period, is to become the conduit really between Web 3.0 and traditional precious metals investment. So looking, I guess, a little bit closer at the problem, and I was new to this as someone that's traded crypto for more than 5 years, since I was 15, and also traditional investments. There's been a significant barrier in terms of holding metals. And so as I came to understand this project, I realised it actually was solving a significant problem. Complicated contracts, high trading fees, slow and outdated processes. It just really hasn't kept pace with what is available online. Transport, storage costs, low portability, and I think just a little bit of old school mystery. And of course, you can only trade 9 to 5, Monday to Friday, when the markets are open. So what does Metex do? It allows us to buy metals safe and more easily with very low trading fees. It's a fast and modern trading platform. The metals come with free insurance and storage. And the more you look into that, the more you realise how convenient that actually is. Very high portability. Access globally from this Australian centralised exchange 24/7. So you can trade gold, silver, platinum, palladium on the weekend while you're watching the footy, or the glass of red, whether you're doing that at midday or midnight. As a summary, this table really spells it out. In the interest of time, I won't go through this in detail, but I'd be happy to take you through this in a chat. I think a couple of the highlights here are that you actually can fractionalise your purchase, that there are 4 metals available on our exchange, which I believe is the only one in Australia that offers that at the moment, and that it has an on-ramp to the rest of the digital investment world. So there's a little bit of grey hair on our board and on our team, and a little bit of youth, and they chose me because I'm in the middle. I've got half grey. What we try and do is present a balanced team here, and I think significantly the difference here, actually having some experienced investors behind us, is that they actually understand the market, and we're not just inventing this as the latest kids in their bedroom. So the software itself has been developed in a robust fashion. I think the first investor was a compliance officer, and so the platform, I think, holds a little bit of gravitas that you don't actually get with some of the newer apps that I guess I was using before I discovered Metex. So this is a platform that actually is for everybody, but for serious investors, those who aren't necessarily looking to expose themselves to extremely high risk, but those that understand that there is a store of value in traditional precious metals as well as potentially in cryptocurrencies. So why do we think this is a good opportunity? Revenues from our platform are generated similar to other exchanges: trading fees, margin, listing fees, tokenization fees, soon NFT trading and a Metex token. And actually, if you look at the business model, there's incredibly low cost of business, especially as our partners provide liquidity for our gold and silver tokens in particular. So our really only ongoing costs are web hosting, compliance and reporting, and then marketing. We want to be the safest, easiest way for Australians and then people around the globe to invest in metals online, and to be that on-ramp for cryptocurrency investment. With 9 million adult Australians investing in shares outside their super, and some 4 million holding cryptocurrency of some kind, most likely Bitcoin and Dogecoin, with a couple other guys in between, we think there is massive potential to actually put the case to the market that it's not either or, either high risk crypto exposure or old school boring metals investment, that you actually can manage a portfolio here and do it lean and do it efficiently and safely, so that you can give yourself an on-ramp to safe havens or exposure to other markets when you need them. In a nutshell, our roadmap sees us launching at this time with a platform that is now fully formed. We've taken the time and the care to make sure that the platform is robust, sound, easy to use, and we are now in our marketing thrust. And being here with you today is actually the start of our marketing plan, and we'll be going hard from now till the end of the year and beyond. Later, what we'll do is introduce more cryptocurrencies and more metals. Before we wrap, the question, we hedge our bets. Is it 2004, as we saw earlier? Is it 1994, as some people proclaim? Let's call it 1998. It's early. We know the interest is there in the market for people to invest, and they want to do it safely. We'll outline this in more detail if you come and see us, but we're looking to raise 1.8 million, and a lot of that is actually going to increasing our offering so that we can continue to offer as unique selection of metals and safe crypto as we can, and reach the people. Thank you very much. Hope to see you at our booth.
Brilliant. Thank you so much, Tim. Up next, we have Clint Arthur and Sam Cutry, both co-founders of Ocean Floor Music.
Good morning and welcome to the first duo presentation. Welcome to Ocean Floor Music presentation. We're here to connect the music industry and Web3. We provide education and funding to support the creator economy.
Almost 2 years ago, I decided to say goodbye to my corporate life and create a startup where I felt true purpose and somewhere where I could give back. I remember closing my eyes and feeling real joy of the time when I used to play live music, but then also the challenges I faced as a struggling musician. Studying the current shape of the music industry, I noticed that the majority of artists around the globe were still hurting financially. And in my endeavours to find out more about the problem, I met music industry professional, educator, my soon-to-be business partner, Sam Cutry, who I connected with immediately. Noticing the possibilities of blockchain, decentralised finance and DAO structures, we reached out to colleague Danny Wilson, who is a core advisor at Ocean Floor Music and CFO at Alluvium, who have a current market cap fully diluted at $1.2 billion US.
Having leading blockchain and music industry experts on our team is vitally important to our ongoing growth. A few weeks after meeting Danny, I was in the studio with Carl Cox. We were recording a song for the film Venom 2. After some in-depth discussion about what we're doing at Ocean Floor Music, Carl decided to come on as our #1 music industry advisor. The music industry is thriving. It's growing at a rapid rate, forecast at $142 billion by 2030. But artists are still making 13% revenue and are still getting paid last. Crowdfunding, e-learning, and the creator economy are also growing at a rapid rate, and it looks like a pretty good investment at this point. Our artists and our community are keen on our education and onboarding platform that we're providing at Ocean Floor Music. Creator economy is growing at a rapid rate, 8 times faster than streaming revenue, than streaming services, with 41% of artists making a living wage. Iman Europe is a good example where it took her 1 million streams to make $4,000, and her selling out her NFT collection made her $60,000.
With our solution, we have 4 central key pillars. Our Ocean Floor Music Academy is developed by a team with over 100 years of education experience. It's designed to onboard, educate, and catapult artists' career into the new world. We are the first Web3 music crowdfunding platform. We've seen the success of Patreon and Kickstarter in Web 2, and however, with our tokenomics and our DeFi structure, we are helping drive new fan investment and engagement. Our music industry marketplace is where artists, industry, and fans come to trade products, services, music, and art, and will be the economic engine room for the Ocean Floor Music platform. We are musicians and we love to perform. We're very excited about our borderless music technology that's been in development for over 8 years, and it allows artists to perform in real time across the globe. It is live now and it's a central feature to our metaverse performance space. Our competitor analysis of over 26 Web3 music projects have demonstrated their focus predominantly on singular vertical solutions. For example, new streaming with fairer distribution, loans based on forward streaming royalties, and mostly just NFT marketplaces. Although necessary, most of these sit post-creation. Our artist information and use cases have demonstrated that they have a need for all of our 4 pillars, including more music Web3 education, absolutely funding, new ways to connect with fans, and alternative ways to collaborate through music.
We are music industry inclusive. We're constantly in communications with other Web3 organisations to see how we can collaborate and bring on their products in an inclusive way. Most importantly, we're here to onboard the traditional music industry. Here's a little walkthrough of one of our fundamental pillars. You set the cost and time for your project. You set your rewards, such as VIP tickets, collectibles, or rare tracks. You share and market your project to your superfans. Once the fund matures, you connect with our industry partners and create your project. You can sell your music on our marketplace, you can perform it in our metaverse, or you can share it globally. Our borderless music technology allows for live remote performances. 4 weeks ago, we had a performance between Perth and London in real time for an hour. You could have back-to-back DJ sets, songwriting rooms, rehearsal spaces. We've got great interest from major artists and labels to use this technology. We're a DAO, and we're proudly owned by our community. Our token holders will have a say in how we develop and grow over a period.
As you'll see here, our revenue model is built on a transaction fee clipping protocol and is collected across all of our 4 strategic pillars. 100% of our fees are redistributed back to token holders as a passive income, which will incentivize staking back into our protocol. A major difference is our marketplace with music industry services and products that will also drive revenue growth. Our forecast is 1.2 million users by 2025 and a total revenue of $58 million. In addition to transaction fees, revenue is also generated from education package sales, ocean floor music NFTs, and land sales. We are investing 56% of our funds over the next 6 months into technology, supported by best-in-class legal, marketing, and security. We have a balanced spend, a lean burn rate, and a secure runway. As you'll see in the bottom right-hand corner here, we're asking for $1.5 million to close out our seed round, and we are meeting with some top tier one VCs and ongoing.
Our token release schedule has been developed in consultation with our advisors and token experts to responsibly emit tokens over time, ensuring our rewards and growing revenue. Our roadmap is secure. We're launching our marketplace in the next 6 to 8 weeks, and our token launch is in Q1 2023. To date, we've raised $1.5 million in our seed round. It's about a third of the way through. This has allowed us to develop our technology ready to deploy. We're proud Australian blockchain members. We've been featured in the West, SAE Creative Music Institute partners, Curtin University Institute partners. We've got a great team of professionals throughout the whole spectrum in design, web solidity development, creative, cultural broker, science, leading legal and financial teams. We're here to help artists with a sense of belonging, educate them on new earning opportunities. We're a funding platform for this new creative economy. We're attracting real artists with real stories with real needs. How would you feel about supporting the next generation of creatives? Thank you very much.
Thank you.
Thank you so much, Clint and Sam. Up next, we have Billy Bauer, co-founder of OneSendHQ.
All right. I'm going to get out here. Hi, everybody. My name is Billy. I'm from OneSendHQ, and we empower franchise and multi-location brands with scalable email sending. Email marketing today still represents the best return on investment for digital marketing, with $38 for every dollar spent. This beats SEO, it beats social media marketing, and it also beats Google Ads. The problem is that every month, money is left on the table. You see, franchise organizations avoid email marketing. The reason they avoid it is because it takes them days and weeks to send just one promotional campaign. They waste days and weeks copying and pasting campaigns, or they waste days and weeks supporting their network. And after all of it's been done, they waste days and weeks stitching together the analytics to see if it was successful or not. For franchise marketers, they generally have 3 options. Number 1 is to get their franchisees to do the marketing. So what this looks like is our head office marketer picks up the phone. Hello, Graham. Have you scheduled that end of financial year promotional campaign yet? You haven't? No, that's okay. I've copied the template and I've put it on our intranet. Yes, Graham, the intranet is on the Google. No, Graham, I don't know your password. And they have to do this for every single franchisee in their network just to get one campaign out. Their second option is to do it for the franchisees. So what this looks like is Tim, our head office franchiser, marketer, sits down and logs in, copies, pastes, schedules, and sends, and logs out. And logs in, and copies, and pastes, and schedules, and logs out. And logs in, and copies, and pastes, and schedules, and logs out, and has to do this for every single franchisee in their network just to get one campaign out. There is a third option, and that is to abandon the idea of doing email marketing completely. The job just doesn't get done. Now, when you abandon the idea of earning $38 on the dollar, there is something very, very wrong. And that is that it's very, very difficult, close to impossible, to scale email sending. But not with OneSendHQ. OneSendHQ can connect to any email marketing platform in the world. It allows a franchise marketer to connect all their franchisees' email marketing platforms to one central hub. Once connected, that franchise marketer can create one campaign, just one, and at the click of a button, send that campaign through all of the connected accounts. And in doing so, it will be localized to that franchisee. So we get local phone numbers, local street addresses, unique websites, and even unique product links. The end recipient receives the campaign that's personalized and localized to them, and it feels like the local franchisee sent that campaign to them. In fact, the local franchisee did send it, only they didn't have to lift a single finger. It was all done through the head office marketer. Now, it doesn't matter if you've got 75 connected accounts, 750, or 7,500. It takes the time of one campaign. The job is done once. There is no copying and pasting. There's no logging in and logging out. It removes human error, and the statistics are consolidated. OneSendHQ will take all the stats from all of those accounts and pull them up into one centralized report, which means the franchise marketer can easily see exactly how successful that campaign was. It scales with company growth. In fact, the platform's just more powerful with the more accounts you have connected. We have a client who went from sending one campaign a quarter to sending one campaign every single week. And it didn't take them days and weeks to do it. It took them 1 to 2 minutes. Our clients go from feeling super hopeless to feeling like superheroes. And they love us for it. Franchise organizations represent around $600 million in total addressable market. You throw in buying groups, member-based organization, and industry verticals, and you've got $1 billion industry that's just screaming for scalable email sending. Businesses similar to ours in the social media space make up to anywhere near $460 million per year in ARR. Our business model is simple. We're a SaaS. So we have subscriptions, we have setup fees, retainers, and we earn commissions on resold platforms. Current clients include Intersport Australia with more than 70 outlets around the country, Office Choice with more than 80. In our pipeline, we have Snap Printing with more than 300 outlets around the country. Toy World Australia and New Zealand with more than 150, and Sports Power with more than 120. These are some of Australia's leading brands, and they're coming to us because they can't do their email marketing without us. Our go-to-market's pretty simple. We go direct to the marketing coordinator at a franchise. We have agency partners that resell our product. We have tech companies that integrate our tech into their tech. And we have our app in all the marketplaces. OneSendHQ is a platform-agnostic, independent app. It allows a franchise marketer to connect all their franchisees' platforms to one central hub, send a campaign once, all the content's personalized and localized, and at the end of the day, they get all the statistics back in one single report. If you can find another company that does that, I would love to meet them because I can't find them. Our team is small, but we are powerful. There are 3 of us. And we want you to join us and put OneSendHQ in the hands of marketers all around the world. We're missing the Hulk. Today, we've bootstrapped, and we're here today to raise a seed round, $350,000 for 20% equity. A large portion of that goes towards sales and marketing to help us scale, with a small portion towards product development. If you'd like to learn more and see how we do this, we'd love to see you at our booth. My name's Billy. I'm from OneSendHQ. Thank you.
Brilliant. Thank you so much. Thank you so much, Billy. Now we have a short break, so feel free to go and get a cup of coffee or tea, and we'll be back after about 20 minutes for some more presentations. Hi, everyone. Welcome back. I hope you enjoyed your break. I'm going to be announcing our next speaker, but just a reminder, if you want to walk around, you can't get a seat, please use the headphones. It'll be easier to hear. So now we have one of our key partners coming to present on stage. Please welcome Adam Switzer, CEO of Leonie Hill AI.
I am.
All right, hi everyone. My name is Adam, the CEO of Leonie Hill AI, and thank you for your time. And it's really exciting to be here as a partner of Wholesale Investor, so really excited to show you what we're all about. Clicker. So who are we and what are we doing? Well, we're bringing market access, essentially as a service, to people that don't necessarily find it easy to do. So there's a large chunk of the market space that don't have access to crypto or find it easy at the moment. So we're really enabling businesses to offer crypto as an asset class to their clients, and also facilitate tokenization of traditional assets onto the blockchain. So put yourself in the shoes of a financial institution, wealth manager, corporate trading desk, or so on. So any sophisticated investor or someone that manages sophisticated investors. What does it take to give your clients access to crypto? And there's quite a lot when you break it down. It's not just filling out a form and opening an account on an exchange, albeit that's possible, but you do that again and again and again. It's a very complex process with a lot of operational overheads to offer that as an integrated experience to your clients. So what do you need to do? Well, you need to build the stack. A lot of technology investment, fiat on-ramps and off-ramps to be able to transfer assets to your clients and take funds from them to be able to buy digital assets, source the assets themselves, so liquidity providers, licensing, of course, which is only going to increase, specialized knowledge, and of course security, so be it both technical security and security of the assets themselves. And that's just getting going. Then how do you actually operate? Well, you need to manage your client accounts. There's fixed costs on having accounts and custodian and other setup that you rely on to run that business. Tech resourcing, of course, operations, reporting, compliance, KYC, AML, and so on. So a lot of work to be done that's a lot more than just creating a retail account on an exchange as you start to offer to more sophisticated investors. What have we done? Well, this is our business. We've done all that. We come from a traditional background where this sort of operations is and technology is our bread and butter, and offering in a way that replicates a lot of the traditional markets, be it equity, credit, and so on. So what that gives to you is essentially either a software as a service out of the box that you can offer and white label to your clients and manage all your clients, or an API-driven integration you can put into your own platform to give a customer 360 if you're, say, offering traditional assets, VC funds, credit, and so on, or equity advice and whatnot. And to run our business model, it's fractional fixed cost plus trading fees, which is far less than you would have to do to run and maintain this yourselves. So what space are we talking about? Well, anyone can go set up their own retail account. You can plethora of exchanges to do that. Similar on a corporate side, although it's a lot more complicated process to get onboarded in some of these exchanges, taking in excess of 12 months for some of them. On the other end of the spectrum, if you're a particular high net worth with one of the really big institutions, they obviously operate in their own time, do their own thing, and very protective of the way they do their stuff. There's a huge kind of unbanked or uncryptoed segment in the middle that are looking to allocate part of their assets, part of their portfolio, but don't know how. So this could be anything from sophisticated investors, under a traditional wealth manager, private banking, venture capital funds, accountants, so on, or even corporates who are running their own strategy, but don't necessarily have they have the business brains, but don't necessarily have the technical operational infrastructure to actually run their strategies. And these are essentially underserviced. How big is it? And this is Australia alone. About half the market we think is in this space. About $1 trillion of assets is held directly by Australians or Australian entities in personal portfolios, SMSFs, trusts, corporate structures, and so on. It's a huge part of the market in Australia, and very similar abroad as we expand out to other jurisdictions, is essentially unserviced at the moment. From people we've spoken to over a long time, they are crying out for it. 8 out of 10 advisors are expressing interest on behalf of their clients or as part of their business strategy to get access to digital markets. But again, don't know how to do it. They can do it for some clients, but a truly integrated offering is just not on their capabilities. So what have we done and why is it different? If you think about or are familiar with trading operations at all, there's a huge amount that actually goes into it behind the buy and sell button, from account management through user permissioning, trading, settlement, custody, and integration options. And why is this important in your journey or a potential client's journey for us? Is that the entities are more complex. It's not just retail, do your own KYC, show your face, off you go. These clients hold assets in corporate structures, trust funds, SMSF, and so on, and need to be onboarded fast. So I mentioned typical onboarding might be 12 months plus for some of these entities, or maybe even not possible in the case of SMSF. We onboard that in minutes. To final use permissions, well, again, it's not just a one-to-one relationship where you're the account owner and do the trading. It might be a trader on a desk trading multiple strategies for a company, or a broker or an advisor who's trading on behalf of their client that represents real-world scenarios. We handle all these, and it's very configurable at an organization level. Trading itself, well, we don't, like many exchanges, would just trade with our organic liquidity. We don't. We source from many global liquidity providers and exchanges ourselves, so we will actually go out and construct the best price and do best case execution. So you don't need to worry about going to multiple parties to get quotes. We actually aggregate that for you. And it's customizable as well, so we can offer our partner clients who have their own clients. We're essentially a B2B2C business to co-share in the revenue model. And also end brokers at deal time to do things like brokerage fees and so on that they're used to in traditional markets. Again, settlement, we're not an exchange, so we de-risk that, or counterparty risk, by actually settling into vaults away from all of our trading parties, and we manage the floats and the credit lines with them, and settle that into custody. And this is a really important part for the wealth sector, is those custodies are in a bankruptcy remote entity in their own wallets, and we can prove that on chain, direct one-to-one, and we don't rehypothecate assets. So we can always prove and always guarantee that clients' assets are fully held in custody and can be retrieved or proven at any time. Something that a lot of exchanges and other houses have obviously seen recently in the news have gotten into a lot of trouble with posting client assets with other parties, unable to treat them, unable to process withdrawals, for example. And again, on the tool side is we can offer software as a service out of the box, so you can get started just with configuration, or a much more flexible integration option. Everything we do is API driven, and you can fully customize, clients can fully customize their own workflow with their own platforms and have a customer 360, for example. This is what the platform looks like. This is a quick demo just to show you that it does exist. This is a fairly stock layout to simplify things down for the target market we have. But again, everything can be fully customized, API-driven, flexible workflow that you can integrate directly yourself, or from a hybrid model where we can do things like embed the AutoPad widget as an object and connect things through authentication in the back end to offer you a seamless experience. If you're a wealth manager or trading house, to give that to your users. All the usual things you'd expect: full reporting, transparency, multi-account management access, to be able to essentially offer crypto as a service. And account management is very straightforward with automated KYC, and we can get multiple accounts going very, very quickly that would normally take many, many months to do yourselves. And fully customizable for clients. You can switch on and off different markets and really tailor the experience and own it as essentially a provider, a white label provider of the platform. So who's the team? I mentioned it's set up in a traditional way. I've spent the last 20 years as a trading quant, risk manager, and technologist running some of the world's largest banking systems. So including HSBC's balance sheet. It's one of the largest in the world, about $2 trillion worth of assets. And formerly head of data and AI at best bank in the world for the last 4 years, DBS. And the team is a very, very similar background where we bring a lot of traditional risk regulation, risk management, and technology to essentially bring the traditional finance and incumbent into the new world. These are some of our clients. Very, very happy to partner with Wholesale Investor, a fairly new relationship, but really, really excited to be one of their partners and on the platform. Our clients manage over $10 billion worth of investable assets, and are looking at sort of fractional allocation of those assets into our platform, and a very strong pipeline that's growing. And very quick mention, obviously, if this is your use case, come and talk to us if you're one of these parties. Or if you're an investor, come and talk to us. We've got a booth just outside. We're doing a relatively small raise, but to fuel our expansion throughout APAC and the wave of upcoming regulation that we're on top of. That's it. So thank you very much for your time. We're just outside in the middle, so very happy to answer questions or organize a demo and more information.
Fantastic. Thank you, Adam. Now we have Sam Bassley, CEO of Immunify.Life.
Good morning, everybody. My name is Sam, and I'm very proud to be here to represent Immunify.Life. We are a medical data company, a medical technology company. Excuse me. Sorry, do we have the presentation up? If not, I can just talk through it. Okay, we're apologies for that. Yeah, we're a medical data company, and our background about our company. We have a very strong executive team. Our team has 60+ years working in healthcare, specifically in medical science and medical data, as well as expertise in technology and finance. The company's been around for about 4 years in various forms. And we've raised $2 million in the development of our systems and our platforms. And we're looking to raise more for commercialization. The problem we are trying to address is, despite billions of dollars being invested in emerging countries to tackle common medical problems like HIV, the impact is extremely small, especially with regard to that investment. What we see is that, through our experience, is predominantly due to lack of system, or systems are inadequate. Most of the systems are paper-based, and that leads to inefficiencies. It leads to theft. It leads to, one of the big ones is lack of patient participation. We see that a lot in Kenya, and it leads to so just general inefficiencies in what we're trying to do. And our solution to the problem is we're looking to create a healthcare ecosystem. So what we're effectively doing is creating allowing people to take value in their data. We all have data, we all have medical data, and we all, in this day and age, we know the value of that, and we're looking to be able to capture that and put that to good use. So in Africa, for example, our platform, we provide here we go, excuse me. Now I can figure out where I was. Okay, so I've addressed all this. So our solution is releasing the value in individuals' data by the creation of a healthcare data economy, using technology and blockchain to create a healthcare record platform, an ecosystem. With our systems we provide at no cost to patients, no cost to healthcare workers, no cost to institutions. The treatment data and the management is all done in real time. So as a patient is treated by a doctor, that information is stored real time and stored securely. It's a very thin client. There's no expensive hardware required. It's run on web-based and phone-based or app-based for the patients, and it provides the patient with sovereign ownership of their own medical data. So that data isn't owned by doctors anymore. It's not owned by a clinic. It's owned by the patient themselves. And it also inherently provides a mechanism to incentivize or behavior change, allowing people, empowering people to now afford to go to a doctor and afford to go get treatment for diseases that are very treatable, like HIV. The market we're looking to address is huge. Globally, 5 to 15% of GDP is spent on, by country on healthcare. And specifically to our beachhead, $30 billion is spent by NGOs and donors on disease management in Africa alone. So there's billions and billions of dollars. And we all know about the opioid problem in the US. Trying to address that problem, I think that number is quite conservative. It's probably up there in the hundreds of billions. And the common one, COVID, or the one in the news at the moment, NGOs are raising $23 billion to address COVID vaccination. And as we know from variants popping up, vaccination in emerging countries is extremely important. Our system has three primary elements. On the left-hand side, we have the client application, or the patient application, which is a very simple app that allows them to receive the reward or their payment for their data. It also allows them to convert that to fiat at a click of a button in real time. We have the clinical platform, which is similar to a platform you'd see in your doctors or as you're being treated for any disease. We release we have the same platform that we provide to our clinics in Africa, allowing treatment of patient. And we have the engine room is the token, which encapsulates that data. And it's the engine room behind our data economy, and that combines to provide the holistic system. And this is just an example of the flow. So the data from HIV program, for example, opioid treatment in the US, and COVID flows through into our data pool, and that can be accessed by commercialized and used for treatment as well as later on commercialization. We have two major revenue streams. If you want to break it down into the top one is the sale of program-specific data. So we provide NGOs and government with data on their treatment programs to remove all the problems we saw earlier on. It allows them to understand the return of ROI on their investments and their investment into that program, but it also, through our product, allows them to effectively manage it. And then later on, the de-identified data pool, which will be commercialized and sold to pharmaceuticals, NGOs, governments, if they want a full understanding of the state of their populace, as well as the returns from that filtered back through the data economy back to the rightful owners of that data, which is the owner of the health care data, the individual, or as well the other crypto investors. Progress to date, this is quite an important one. We've developed already our clinical platform with our HIV module. That's being rolled out next week in Kenya. We'll talk about that later on. Opioid and COVID, I found out today COVID has been completed. Opioid, we're working with state-of-the-art rehab clinic in Albuquerque, New Mexico. I was there last month. They have 250 patients. We're running a trial to use the same principles we're rolling out in Africa to help address opioid addiction in the US. I'm going to skip over Kenya because I want to do more of a deep dive because it's quite relevant. That kicks off on the 3rd of August. There's 600 patients. All patients are HIV positive, but are relapsed from their current treatment. And we're running a proof of concept to prove that we can enable them to rejoin their treatment programs. We're working with University. It's across 600 patients and 6 clinics in Western Kenya, a region called Kakamega. And Guy at the back there is, I don't know why he's here, he should be packing his bags. He's leaving on Friday to help kick off that program. We couldn't do what we've done and achieve what we've achieved without our partners. University in Africa, Stay at the Heart in New Mexico, in Albuquerque. Flux and Flutterwave, they are partnered with us to allow us to quickly and easily provide payment to the patients in Africa. Flux developed our application we own, our app, and World Mobile, who are providing network coverage in otherwise hard-to-reach locations. And the platform, this is just a quick example. We are just outside. If you go down towards the door, we can give you a real-time demonstration of our key platform. This is our HIV treatment module. Like I said, it's very similar to a cut-down version of what you would find in a clinic in the Western world. where it allows the practitioner or the doctor to go through a treatment program of somebody with HIV, recording their vitals, recording their blood tests and their progress, what medication they're receiving, and so forth, lab data back. And we also provide an application for the patient to redeem their fiat. And are there any questions? I've got 1 minute, 10 seconds left. Okay, on that one. Thank you very much. If you do have any questions, they pop into your brain. We're just over there, and we're very happy to give you a demonstration of our system and talk in more depth about what we're doing. Okay, thank you.
Thank you, Sam. Sorry about that technical issue at the start, but yeah, everyone feel free to go and see Sam to ask any questions. Next up, we have Praz Indrakumar. He's the Wealth Investment Manager of Zerocap.
Excellent. Hi, everyone. Yes, I'm from Zerocap. It's a digital asset and crypto investment bank, and I'm here to present the investment opportunities from our perspective. Yeah, the green one in the middle. Got it. I'll start again. Take two. I'll start with a disclaimer, and I think usually you skip past disclaimer. Here I want to highlight because there are some important factors here. We are one of the, I guess, critical regulated providers in this space, so we're under an authorized representative, an AFSL, under the Gannett Capital. Now, Gannett Capital was set up by Glenn Poswell, and Glenn Poswell was also the one that set up Elliston Capital for the Kerry Packers family, and the AFSL here, and Glenn sits on our board as well. So I thought I'd highlight that. Now, this document is made as a wholesale investor, professional investor, and as a wholesale investor, a lot of you are accredited, and we are presenting on that note. And look, this document is presented as an overall view, general advice, not investment advice particularly. And I'd like to highlight that any past performance will not be indicative of the future performance results. So I'll get into what Zerocap's about. Now, Zerocap is a private bank, been around for about 6 years now, providing wealth management service, and we focus on liquidity, providing access to digital assets across the whole realm, right from Bitcoin all the way up to bringing your metaverse land blocks to NFTs and any tokenized assets. And latest announcements by ANZ Bank to create the digital currency, the Australian dollar. We were part of that process in order to bring that into custody, and that instantly landed. We've been backed by the Victor Smorgon Group, the family office, and Peter Edwards, who's the CEO, also sits on our board. And Zerocap is a diversified multi-factor finance operation. So, we've got various operations in OTC, structured products, asset management, which I'll go into depth later on, the custody, staking, and treasury under our prime services. And under innovation, we go through and provide a wealth portal for our wealth management offering, providing infrastructure as a service and right in the core of Web3. Now, custody is where we started off as, and that's the core. So, 8 to 10 years ago, when clients were purchasing digital assets, they were holding it in there on exchanges, and this provides you a place where you can bring your assets into custody, and when it's in custody, it's your assets, so you can actually withdraw at any time. And this provides you the full governance protocols as well, so you can have anything happens to you, your next of kin or your partner has access to the assets, and it's actually stored in a multi-part computation. So digital assets or crypto assets have private keys. Here, the private key gets broken into 3 parts, and just like in the old banking days, you have a key, your bank manager has a key, and all comes together and unlocks it. So it's a highly secure, and it's based on the same technology, high, Israeli military-grade technology, which a lot of banks have invested in, and we've actually built that, and we're the exclusive partner for Fireblocks to provide that. Now, the opportunity to buy and sell an OTC. We've done about 1.5 billion plus in transactions over the last couple of years, as our team has grown from 6 to 75 in that time as well. So we've got a strong trading team from traditional finance, and I'll talk about some of our team members a bit later who, Managing Director from UBS who head up our trading team, and Will Fong, who's our Head of Treasury, who come from Westpac, and he'll be presenting tomorrow on a panel as well. So to be able to buy and sell digital assets, to be able to trade these assets, and look, some of our clients, such as the Morgan Family Office, have purchased these digital assets in order to store that and manage that for the clients. You hear about yield, and I intentionally wanted to put forward these yield numbers, and we're talking about 1.2% and 2.5%, and you can earn that in the bank holding your currency. Now, we're talking about traditional finance methodologies to provide that kind of yield, just like you'd earn in a bank. But holding it in cold storage or offline on exchanges, you can't get that. Here, it's insured custody, where you can still put it into your savings account and earn 1.25 on your Bitcoin, up to 3.5, and now if you're holding it in term deposit accounts, 7% for your US dollar. And so this is what we've done for the Morgan family, I guess, when they minted the Australian dollar, digital currency, instantly converting, a lot of that, sophisticated end of town services that we provide from a yield perspective. Moves upstream into staking as well. We're talking about Ethereum moving into the staking protocols, and Polkadot, Cardano, Solana. Now, I want to use Polkadot as an example because Polkadot is one of the leading protocols in terms of staking, and the use case is phenomenal. We've seen the use case of Ethereum, where ANZ Bank has now used Ethereum to mint an Australian dollar. Now, here, Polkadot use case is that multiple, parties. It's actually a parachain, a multi-chain. So an exchange like ASX wanting to be able to talk to other exchanges, they use this technology. So this is how we educate our clients on the real use case of investing in something like Polkadot. But then if you now stake that, and what is staking? It's locking up this for a period of time. And with Polkadot, you stake that for 28 days in a bonded setup. So as you're part of that ecosystem of owning a part of that blockchain, and you're staking your assets, and you're earning about 10.5%. And if you're compounding that on a monthly basis, you're earning about 13 to 14%. So we're moving upstream into the yield generation. Now we're talking about structured products. This is under our derivatives license, under an AFSL. We provide yield-enhanced entry and exit notes, and that's why you're generating 20 to 30% plus. And how you're able to do that, it's just like the way you do it in a private bank. You're trying to buy Bitcoin or Ethereum, just like the way you'll be buying your stocks on the equity markets through a private bank. Now, this is 4 to 5 times the volatility, and hence you can actually generate that 20% plus in terms of an entry. So if you're buying 10%, 20% below market, so you can then be placing an order. So when clients are now entering through using Zerocap, they're actually entering 10, 20% below market, and while they're waiting for that price to strike in that 28 days, you earn that 20% plus yield. So if you're then rolling that every month, you've got a yield generation strategy, an income strategy as well, with such high yields. Because of the volatility, we can generate this kind of yields, and it's all in our insured custody and with highly credible counterparties. And we're seeing some big names entering this space, such as Goldman Sachs, Optiva, and the like. So we're not dealing with any, smaller counterparties on the other side. But we do have our in-house trading team and expertise to manage that. Funds management, we launched out a Bitcoin trust. Just like, if you wanted to hold your Bitcoin in a regulated fund, we provide that. The Smart Beta Bitcoin Fund, I want to point out that it's been the best performing asset class during this time. So it performed better than the NASDAQ. So it's protecting the downside. It's a hedge fund. It's a US dollar Bitcoin rebalance strategy, which then gives you, so during this downturn when the markets were crashing 20, 30, 40%, Smart Beta Bitcoin Trust was only down 4 or 5% during that time. And you're still getting the upside of Bitcoin. So I thought I'll just highlight some of these product offerings. We do have a diversified offering all through our wealth portal. You can access and track. Our founders and the team, Ryan, who's over in UK, and our CIO, John, is setting up our London office at the moment. Trent, who's our head of innovation. And these are our leaders from the front, but the wealth managers like myself and our team come from traditional markets to provide these solutions for our clients. Toby, who I mentioned, and Will, who's presenting tomorrow, and we've got Peter Edwards and Glenn on our board as well. So to set up an account, all you do is go on to Zerocap.com, just like setting up an account in your bank, and we'll take you through a KYC process and look after you. Thank you.
Thank you so much, Praz. Up next, we have Sean Fox, founder of Responsible Entity Services.
Hi, everybody. It's great to be back here. I'm going to move this table. I'm going to wander around. At another Wholesale Investor event. A lot of you have probably seen me at a few different events or different events around the place. I'll tell you a little bit about myself first, and then we'll have a chat. So, Responsible Entity Services, I'm the founder of. We own just about every combination of financial service license in Australia, and we're an RE for hire, so we authorise other people for fundraising, credit activity. In some of the other companies, I think we're pushing up past 24 different companies in every industry. I'm what you call severely conflicted. So I own a piece of just about everything. So we raise funds in our own fundraising projects as well. So I just sit as the face of this company, don't actually hold any real authority within that. Today, I don't really have anything specific I want to talk to you guys about, but blockchain, what a huge sort of undertaking that is. I've just spent a few months in America going to a bit more of the heart of blockchain to see what the conversation is there. I was at the Coinbase event Consensus in Austin, which is amazing. I was at the Miami event of Blockchain 2022. The Bitcoin event was on at the same time. I didn't go to that because it was full of Bitcoin people. It wasn't information that I needed to know. Infrastructure is the thing that I've made most of my money on. I'm in just about every industry. I'm in mining, I'm in development, I'm in funds management, hence the licenses that we hold here. And I think that's really where the opportunity sits in the blockchain space. It's so new, right? I'd say the conversation's really only about 8 years old. Like, people who are super experts in this field have been in it for 4 years and they're 26, right? The amount of ridiculous money that I saw in America was just phenomenal, absolutely phenomenal. What I find interesting, or the real use cases, we're actually turning into a use case point now, like blockchain. And if you look at cryptocurrency, I've never invested in a cryptocurrency. We're actually launching one of our own very shortly, a USD coin, because it's an infrastructure play, right? It's a payment gateway. But we're moving into that space now, and cryptocurrency makes up the bulk of the conversation, right? But it's 1/20th of the use case. There's just phenomenal types of opportunities out there at the moment. Now, when we're looking at and you heard a lot of people today talk about how you can use it for financial documents, for record keeping, for any types of communication. It's just absolutely phenomenal. So where does that sit? Where does blockchain sit in this conversation in venture and capital? Where does blockchain sit in your methodology of what are you going to invest in? And I'd say the vast majority of these people in this room, if you tried to talk to them about cryptocurrency, they're going to walk straight out the door. Right? It's not something that I'd invest in. There's great money that's being made in it, but it's not something that I like to invest in. I like infrastructure. I like to invest into something that's going to continually make me money. I don't like the actual product itself. So, funds management is an amazing space for this. Like, here's a little bit more of who we are. We do just about everything. We do everything in retail. So if you want to raise some funds and go out into the market, it's not just sophisticated. We license everything to retail. I'm a big believer that if I'm going to do something, I'm going to do it all the way. 100%. Here's some of the licenses we hold: retail AFSLs, ACLs, remittance license, we can convert fiat to crypto, digital exchange license. We like to be the infrastructure core behind businesses. If you've got an activity that you want to go out into the market and perform, we'll license you to get there. My job's to make you as commercial as humanly possible. This is what I want to talk about. So, hard token asset exchange. So we hold a digital asset exchange license. We can license digital exchanges to conduct their activity here in Australia. Now, the amount of digital exchanges that I've had coming to me over the last 2 years and said, right, we've built this platform, we've got the technology, and we're good to go. That's 1/4 of what you need. You need to have a digital exchange license. You need to have a remittance license. And every single offering that you have on there, if you want to be retail, and you have to be retail, if you're a token of any type, a security, you have to be in the retail market because that's where the biggest amount of money is. That's the volume of trade, right? That's what you need. So you have to have those licenses: remittance, a retail AFSL, digital asset exchange license, and then the technology. So that was a conversation that started happening for us about 18 months ago, where these guys were coming out, and I thought, you know what, this is a real use case. We've got a lot of funds under management ourselves. We deal with a lot of other companies that we either license for raising their own funds or other fund managers out there. So what we're creating now is a hard token asset exchange. The next few months will be launched. And what that means, and relating that language to you guys, so blockchain, tokenization, it's just a liquidity market. It's a space that you can, if you've got an investment, so say you come to one of my companies and we're borrowing $20,000 from you, you're spending $20,000 to get a piece of an asset that we have, or if you syndicate, and everybody here would have been involved with or seen different property syndications out there. So once you put your money into that, you're in that to the end. But the ability to be able to get out of that, to create a liquidity, that's what the tokenization does. Just about anybody can start up their own exchange, but you want to have that centralized. And everybody who's involved in the token world, knows of, sort of Binance and all these different spaces. What we're creating is a hard token asset exchange. Look, we will have cryptocurrencies on there, but we've got 130 hard tokenized assets. They're funds under management, they're property pools, there's little crypto funds in there as well, there's mines in that space. So for us, that's what the conversation became, was how do we take, for me, right, it's infrastructure. How do we have a piece of that infrastructure? So we're getting close to launching this, and the biggest part of it was putting together the actual licenses. What we're doing now, and I guess my ask here today, if somebody said to me earlier, like, what's your ask here today? We've been toying around with who do we partner with on the digital exchange? Do we partner with an existing crypto exchange? And I think the problem there is we're trying to bridge the gap between retail mum and dad joining that crypto world. It's probably 10% of the population, if that, is in that crypto market, and they're blockchain people, or as I call them, blockheads. Right? So blockheads will talk to other blockheads and they love that conversation all day long. But the hurdle that we're having is how do you bridge the gap? How do you get grandma to start buying tokens? Like that's the conversation piece that we've really started to engage in. So I guess the ask for me today, one, it's education, come along and have a chat to us. But, we are looking for those partners in that digital exchange. We do have an opportunity at the moment, if we put together maybe $20 or $30 million as a liquidity pool to then launch a hard token exchange out. Do we partner with somebody? Do we launch that? Do we put that together? So I guess my conversation out to anybody here is if you're interested in a hard token exchange and being in the infrastructure core, like come and have the conversation with us at the table as we put that together. But it's an exciting space, and I think anybody who's chasing yield and is chasing long-term money, own the infrastructure. Don't be the person buying the investment and trading the investment and making somebody else money. Get a little bit of money from everybody else doing it. It's kind of my favourite space to play in. But guys, look, that's my conversation. It's just a bit of a general how you're going, and I'd love to be on stage and have a chat anyway. But feel free to come down and have a chat to us on the desk at any time. Thanks.
Fantastic. Thank you, Sean. Up next, we have Adam Besaveric, CEO of Virtual Financial.
Have you ever felt financially challenged? Or do you know someone who has felt financially challenged? At Virtual Financial, it's our goal and our mission to make financial advice affordable for all Australians. What keeps you up at night? A lot of our clients come to us and they tell us it's financial pressures. So for us, it's all about trying to help Australians in the financial market. Do a clip. There you go. Oh, shit. So just a bit about myself. Currently in Brisbane. I actually grew up in Melbourne. I'm a CPA qualified accountant, but I decided to specialise in financial advice. Sport-wise, I love all sport. I love AFL. I've highly killed in the AFL. Last month I ran my first marathon. Yeah, that was very, very challenging. But that's a bit about myself, and I'm very passionate about financial advice. Why us? Basically, we're a high-profit, low-risk investment. So we're not a startup. I'm the founding partner of Spectrum Financial, now the founding partner of Virtual Financial. We've been in the industry for over 20 years. Clients need our core offering. We have the opportunity for us to grow the market by acquisition with what's actually happening in the market today. There's been no better time in the financial industry world to do what we're going to do today. The Royal Commission has created a lot of barriers in financial advice. Basically, in the financial services world, with all the changes, there has been some good and there's been some bad, but we've gone from 28,000 advisors up here down to 16,000 advisors. So that's certainly not great for people that are out there to get financial advice, but it certainly gives us, companies like ourselves that can actually get this done right, great opportunities. We believe with what we're going to do, we're going to grow with acquisitions over the next 3 to 5 years, and we're looking to list on the ASX in 3 to 5 years. With potentially $1 should hopefully return 4 to 5 times, plus dividends along the way. So as I said before, the Royal Commission has really put a big dampener on our industry, with the advisor numbers really dropping, and also compliance has been really constrictive in this area. So only bigger firms are going to last going forward. The future of financial advice. Well, as we know, banks have actually exited financial advice. So banks are no longer, if you go to Macquarie Bank or Westpac or any of these big banks, unless you've got $1 million in the bank, they don't want to know you. So like, this is Wholesale Investor Conference today. They're only after sophisticated wholesale investors, $1 million plus. So they're not after retail clients. So our market, as well as wholesale clients, but our market is retail clients to help clients that actually need the help up to that $1 million mark. So we see there's a massive opportunity. And how do we do that? We do it with technology. So we use Zoom. We have our own sophisticated software that actually shows our clients how they can invest. So for example, we use questionnaires. We have a 5-minute questionnaire. We have an all about you questionnaire to make it the process simple, where the clients can do this from their home, from work, and more importantly, what we're finding is by being a technology-based financial advice firm, clients now are actually doing this information, they're doing the questionnaires together. So they're at home, and they're actually, or one's at home, one's at work, and they can zoom in and we can do the information all together, which is totally different. So just a typical firm of what we're looking at acquiring. The firms we're looking at acquiring to really help us boost, get to where we want to go is they'll have self-managed fund clients, they'll have clients that have super, they'll have fee for service. So our fee generation is from fee for service. It's also from insurance commissions. We get paid insurance commissions each year. So the great thing about the financial planning industry is that there's an ongoing revenue every month that just ticks in. It's not if, but, or maybe. It just keeps rolling in. Every advisor should be writing somewhere between $250,000 and $350,000 of new business every year. Our model is to get to about 20 advisors. And the EBIT model, we're looking at acquiring about 35%, but we will get economies of scale, and that should hopefully jump up to about 45%. So the journey of the client. So the client, when they come to us, basically, normally they're in a mess. They don't know whether they're on track for retirement. They want to consolidate their super. They want to protect their family with insurances. They want to do a retirement plan. Just imagine if, you've got your financial plan done right and you know how your retirement's going to look. That you're going to be on track. That that when you retire, you can actually jump in that caravan, travel around Australia for 12 months. That you can go overseas to Europe. That that everything's on track. What we find with our clients, once we take them through this journey of financial advice, they say to me, Adam, it's the most refreshing thing for the last 5 or 10 years. I haven't slept at night because I'm just worried about retirement. But what you don't know is what you don't know. And one thing I will suggest to everyone is that you have to get professional advice, because it's not only your money that we're going to use in regards to what we're doing, we're also going to use the government money. But if you get the right advice for our clients, we can show our clients how they can retire really comfortably. Why now? Well, obviously, as I've said before, there's been over 12,000 advisors going to leave the industry. There's going to be, by the end of September, which is just coming up, if you haven't got all your qualifications in place, there's an ASIC, we've got a phase year exam in place, there's thousands of advisors that are going to have to sell their practice. So we are gearing up right now with our capital raise, so we're in a position to buy these practices as they come on board. So, and also, banks, they've exited the market. So it's a low risk model, what we have. It's a low risk model, and it's proven. We've purchased practices before, we've rolled them into so we know what we're doing, we've got the experience, and we know we can make it work. business model has been proven, and as I said before, it's based on two firms. So there's been two firms that have done it in the past. There's been Shadforce and Count Financial. Now, they sold their practice. They rolled them up, bought them at 2 times, rolled them up and sold between 12 and 15 times. So you can see, and they did it in the hardest possible time to actually do financial advice. They did it 10, 12 years ago when the banks were in financial advice, when the banks were taking all their clients, when the banks were taking all the financial advisors that were qualified from university. So, like now, has never been a better time to do this. You know, raising 20 million, with the banks, we've already got in place where we can actually borrow as well, so we're going to be able to roll up $20 million of practices over the next few years. Summary. So, just in summary, we're looking to acquire firms at 2 times recurring revenue. Quite simple. We plan to have $1 billion of funds under management in 3 to 5 years' time, if not sooner. We want to generate between $10 to $20 million of ongoing recurring revenue. We're going to have somewhere between 20 and 30 advisors in our group. So it's going to make us a really strong group where we can all look to... So there's a great exit for investors. So they invest now and they've got the exit in 3 to 5 years when they go to ASX. And look, we're very confident that time's going to change. Everything goes in cycles. So we know that everyone's got short memory. Like, everyone's forgotten about the GFC now, right? Everything goes in cycles, and we know that the banks will come back into financial advice because they know it's going to be, when you've got a practice like ours, $1 billion managed. So we're seeking to raise the 10 million, and as we said before, hopefully we are very confident that we can return 4 to 5 times in 3 to 5 years. Thank you very much. Cheers.
Fantastic, thank you, Adam. Now we have Lawrence Grincheri, CEO of Skyhook Capital.
Well, good afternoon, everybody. Let me just make sure I've got this right. Okay, here we go. So as you just heard in the previous presentation, there is a massive change underway in the wealth management industry. And the advisor-driven approach to wealth management is being scaled down and being replaced with a self-service approach to delivering wealth services direct to the investors. Now, this is altering the way that capital flows in to private market investment opportunities here, across Asia Pacific and globally. And the amount of money that flows into private markets is a multi-trillion-dollar annual global industry. I'm here to tell you how Skyhook Capital is going to take advantage of the transformation underway in the wealth management industry, and how we're creating an investment product that is giving our clients, as well as investors, the opportunity also to profit from this transformation. My name is Lawrence Grincheri. I'm the CEO and founder of Skyhook Capital. We're a Singapore-based company, and we specialize in the wealth technology space. So some stats. Right now, across Asia Pacific, there's 60 million people that qualify to be an accredited investor. And that population is set to double before the end of this decade. In industry surveys that have been conducted by the likes of Ascension, 64% of the population today want to access wealth services through a digital channel, specifically through their mobile phones. What they want is, rather than have to wait for their advisor to contact them about the best, latest and greatest investment opportunity out there, they want to be informed about those opportunities as they occur. They want the information at their fingertips to make a decision about whether they want to take advantage of that opportunity, and then they want the ability to execute that transaction then and there through their mobile devices. And you're seeing this trend already start to take hold. By 2025, 50% of funds across Asia Pacific will be transacted through a digital channel. Now, I've been working in the wealth tech space for well over a decade now. I actually founded, prior to starting Skyhook Capital, a company that actually built and pioneered the platforms that are currently being used in top-tier private banks today to optimize the performance of the advisory delivered approach to wealth management. Through the platform created in my previous company, across our clients like Standard Chartered, Julius Baer, Nomura, we've transacted some $1.5 trillion of investment products through that advisory channel to their customers. But I saw the writing was on the wall actually a number of years ago with regards to the unscalable approach to the advisor-driven model. So I did what any entrepreneur would do under those circumstances. I sold out my interests in that existing business and I went and started a new company, and I pulled together a management team that is drawn from senior level banking positions across international banking as well as other entrepreneurs in fintech. And what we set about to do first was to really get to the crux of the problem. That essentially can be summed up that private banks trapped in their existing approach to deliver services to the market through large armies of advisors are actually withdrawing from the market rather than try to figure out how to scale their business to deal with this massively growing population of accredited investors. They've decided just to maintain their existing user base and just raise the bar in terms of the investable assets in the investors that they want to deal with. As the previous speaker says, here in Australia, if you don't have $1 million, don't bother knocking on the door. If you want to basically get an account open with a top-tier Swiss private bank, you need $10 million. Else they just don't want to hear about it. What that effectively has done has left this huge market of accredited investors that actually can't get quality investment services or get access to the types of investment products they want to purchase. This in turn has created a huge opportunity for a new breed of wealth service provider to enter into the market. What they're doing is they're providing scalable platforms of self-service delivery to the investor base. They're making the supply chains to access the products that their customers want, which are being provided by asset management firms introducing all manner of different types of investment opportunities across all manner of investment strategies, across all investment classes. And they're basically channeling that through to the marketplace. Now the problem, some of the early movers in this space, the problem that they had was the wealth technology players in the market had spent all those years building advisor-driven technology platforms to support the old model. So the early adopters had to actually go and build their own solutions to service this self-service marketplace. Not an ideal situation when really your core business focus is being a wealth service provider to the industry. You're not a technology company. So what we did was we built a platform, we call it a digital ecosystem, to equip the new generation of wealth service providers with the technology that they need now to service this massively growing market of investors that want self-service wealth. And we built that platform using contemporary technologies. We incorporated a lot of the new stuff coming out, the AI, also blockchain technologies, where over the rest of this decade, pretty much all assets, not just crypto, all assets will be migrated as investment products onto blockchain technology. It's a far more efficient way to distribute and administer any type of investment product, especially a private market one. We also incorporated the latest solution providers to allow us to deliver a very functionally rich platform in a very short space of time. We packaged all that up and then we went and delivered it to the marketplace. The other thing that we've done that is a first in the industry is a traditional way that a tech provider provides a platform to their customers. They just charge them an annual subscription fee, and that's pretty much it. It's up to the customer to figure out how to get value of that platform, either through improved performance or some sort of scalability of their business. We took on a different model. One of the earlier speakers talked about an incentivization model that is practiced largely in the crypto space. We took best practice from the crypto industry. And what we did is we came up with a way where in our ecosystem, our clients, that new breed of wealth service provider, actually gets rewarded with a stake in the ecosystem through the amount of revenues that they bring to the ecosystem. So the services that use and pay us for to subscribe, as well as obviously the transactions that go through our ecosystem by accessing the investment, the asset management firms that are issuing products through our ecosystem and selling them on to their investors. We make a fee out of that. That is getting backed into a digital security that reflects the growth in the revenue within the platform and then distributed as a reward to incentivize the early adopters of our platform. So our go-to-market approach, therefore, is to sell and onboard as many wealth service providers into our ecosystem. Each one of them represents a channel to sell investment products through our network of issuers connecting into our ecosystem. And we've actually, to scale our capability to do that, we're working closely with a partner, a very large a technology firm that has a global footprint across 40 jurisdictions around the world. They have 130 banking clients that is going to invest within us and then resell our platform into the market. So we're out to scale as quickly as possible because we believe that this transformation will be over and done with within the next 5 years. If private banks or wealth service providers have not moved and transitioned by them, they're probably going to be out of business. In terms of the size of our addressable market, it's huge. There's basically close to $2 trillion of capital inflow into private market investment products across Asia. And that's only growing at roughly 12% per annum. Our shared ownership model, where we back with our digital security, will appreciate the value of that digital security by almost 50-fold for 1% of the market share of that capital inflow going into private market investment products. In terms of our competitors, they're pretty much stuck in the old world. So this is a blue ocean opportunity for us in a relatively crowded marketplace of traditional technology providers handcuffed to their existing clients, still practicing a traditional model of wealth. Our offer to investors is a digital security that we are using as part of our rewards program. There is a limited supply, we're capping it. We're allocating 24% that will be sold to the public. This is an SEC-regulated product. We're floating it in the US on a digital securities marketplace. We have early bird discounts for the first $5 million in capital raised, and we welcome you to come and talk with us in greater detail about our model. So just to recap, we're automating the way that digital services are being delivered, not only here, but across Asia Pacific and globally. I've come today with one of our clients, Blue Horseshoe, that are using our platform to basically deliver investment products to an audience of Australian investors that previously would not be able to get access to this type of investment opportunity. You can come and see more at our booth. Thank you very much for listening.
Thank you, Lawrence. Okay, next up we have Navar Trusalat, founder of Navexa.
Alrighty. Okay, good afternoon. My name's Navar Trusalat. I'm the founder of Navexa. We're a portfolio tracking and tax reporting platform for stock and crypto investors. Today I have good news, but first the bad. The bad news is that the party is over in the world of venture capital. The economy is in trouble, tech markets are in trouble. And the infamous Michael Burry reports that, adjusted for inflation, the S&P 500 is down about 25%. The NASDAQ down about 35%, And Bitcoin is down about 65%. And the best bet, he predicts we're only about halfway to the bottom. In other words, this downturn is probably just getting started. It's a recession, it's a bear market, it's crypto winter, it's all of these things. And this market will accelerate failure for startups. This is the good news for you, because even in so-called normal times, about 80% of businesses don't make it, which means it's about to get a lot easier to distinguish the winners from the losers. The companies that thrive in the next market cycle will be the ones that survive this one. So shouldn't I be pitching you on my own startup? Or, yeah, probably, but I figured you'd be listening to pitches all day. So while I am here in my capacity as a founder of a growing SaaS platform, I'm also an investor myself, and I've backed and run multiple startups. So I know what it's like to have skin in the game in this kind of market. So I thought I'd share some ideas you can use to maximize your venture and capital experience. Today, more so perhaps than any other time in the past decade, it's not enough to back good companies, you have to back great companies. Great companies that are doing three specific things. Number one, default alive. The first question is whether or not the company can achieve default alive status. Default alive means the company can survive, basically. And the folks at Y Combinator recently sent a letter to portfolio founders recommending they switch to default alive mode quick. In their words, extend your runway, survive, and get pessimistic about fundraising. So that's the first thing. Can a company survive without fundraising? This is what we're doing right now at Navexa. We're cutting costs, extending our runway, we're ensuring survival, and we're very pessimistic about fundraising. Number two, it says number one there, but it's number two, capital efficiency. If survival is foundation for the next wave of companies right now, then capital efficiency is the framework. Capital efficiency is a smooth VC term that simply means how much money does a company have to spend in order to make money. The key equation in determining this, according to David Sachs at Kraft Ventures, formerly of PayPal, is the burn multiple. And this number evaluates burn as a multiple of growth. Here's the formula. So the burn multiple is net burn divided by net new ARR, annual recurring revenue. You divide the spend for a given period by the amount of new annual recurring revenue generated, and the lower the burn multiple, the more efficient the growth is. So having a look, we've got less than 1's amazing, 1 to 1.5 great, 1.5 to 2 good, 2 to 3 suspect, and anything above that is a bit shady. So that's the second question, important question to be asking in this market. What is a company's capital efficiency? What is its burn multiple? Take my company as an example. Our spend divided by the annual recurring revenue generated right now puts our burn multiple at around 1.4. So that gives you an idea of our capital efficiency. But finally, I'd be looking at this. Spectacular unit economics. Any startup, but especially SaaS startups, or subscription as a service, operating a business model like us at Navexa deals in unit economics. Patrick Campbell from Profitwell, who we use to measure our unit economics, says this. Subscription growth is pretty basic. Acquire a customer that's optimally monetized and sticks around for a long time. That is what companies need to do right now. Acquire customers in the most capital efficient way possible, monetize those customers to the maximum, and then retain them. So how do you determine whether a company is doing well in this context? You look at growth, lifetime value, churn, and retention, and understand these relative to similar businesses. I'll show you these unit economics in action. So our growth rate right now is about 4.6% a month, which puts us at a top group of similar SaaS companies in this space. But what about lifetime value? Our customers pay us on average about $500, which is an average, and that's fluctuating upwards, which is good. That means we're right at the top of our cohort. And when you factor in our burn multiple, it tells you we're doing a pretty good job at maximising revenue from the customers we're acquiring each month. But as we all know, though, not every new customer sticks around. So let's look at churn. Our voluntary churn rate at the moment is under 1%. Other companies in our cohort are losing up to 10 times as many customers on a given month. Not bad. But churn leads us to retention, the true barometer of customer satisfaction. Our retention rate at the moment is 99.3%, which is right at the top end relative to similar SaaS companies in our space. And you must dive into these numbers and know how to interpret them when assessing a startup. And that goes for all startups all the time, but especially now. The reason our unit economics reflect strong customer growth and retention is that we've created a product that solves two acute problems for investors. In the crypto space, as many of you will know, collating and recording trade and transaction records is vital to correctly filing tax returns. And we take the costs and stress out of investment tax reporting, and we give our customers a single account to view their investment performance in one place. Navexa is, as far as I know, the only platform that offers combined portfolio performance tracking and tax reporting for both stocks and cryptocurrencies. So in summary, fundamentally efficient companies are going to survive and thrive. Remember Patrick Campbell's distillation of what makes companies like ours grow in markets like these? Acquire optimally monetized customers that stick around for a long time. To weigh up whether a company you're looking at can do that, you must understand the three things that I've explained today. Can the company survive without funding? Can it grow with high capital efficiency? And do the unit economics paint a beautiful or a bleak picture? Thank you for your time. I'm here for the next few days to speak about any and all of this, and my own company, of course. And come chat with us over at the booth. Thank you. Enjoy the rest of the conference.
Thank you so much, Navar. Next up, we have Shivani Gopal, CEO and founder of The Remarkable Woman.
Hello and welcome to The Remarkable Woman. We are an edu network. We champion ambition and redefine leadership so that together we can thrive, personally, professionally, and financially. I founded The Remarkable Woman because my personal experiences made me realise the global challenges that we women face. I realised we needed change when, as a young graduate financial advisor, I approached someone who I thought could be an incredible mentor. And I asked him to take me under his wing if I could only just learn from him what my future could be. He told me, come around if you're still here in 10 years' time. And yet there are so many experiences just like this. Of course, I didn't let that stop me. I worked hard and eventually I did become a highly successful financial advisor. I moved into senior leadership and then started my own startup journey, as you can see before you today. I am now known to be a recognised thought leader in finance and in all areas of women's issues, and I'm quoted across many areas of national media. And such representation is important because in Australia, we do have a problem. The gender pay gap in Australia is 13.8%. Women make up less than 20% of Australia's CEOs, despite being almost 50% of the population. You do the maths, something is awry. And we only occupy less than 23% of board positions. But the problem is bigger than that. Women retire on around half of men's superannuation savings, and 70% of people, primarily women, profess to experiencing a lack of confidence and imposter syndrome. So we thought long and hard about how you change that. And the model we came to was a novel trifecta model of empowerment, something that is truly holistic to support women across their career, their money, and their overall life journey, to give them support with their career progression and financial well-being, to give them personal insight and development, so that if you have someone who says, hey, come back if you're still around in 10 years' time, you have your own level of foundation, your own level of information that you can leverage off to continue to grow. And you need access to a network and mentors. And so we put together the Remarkable Woman's platform, but we didn't just do it because we thought it was a good idea. We did it by tapping into our 12,000 strong community and asking really deep and meaningful questions. And those questions gave us really incredible answers. We found out that 91% of women want to improve their personal skills. Over 90% of women want access to mentoring. 93% of women want access to grow their careers. They want to have the opportunity to pivot. They want to have a meaningful access to a community. They want to grow their leadership skills. You can see on this slide, the list goes on and on. But then, can we actually create a sustainable business out of this? Can we make money out of this? We had to ask those questions too, and the answers were there. 60% of women would pay for ongoing content around exactly this, and they would pay anywhere between $20 to $40 a month to access all of that. But it wasn't just women, it wasn't just the B2C channel that wanted to access this content. Businesses also had big problems to solve. Businesses wanted to invest in their ESG strategies, they wanted to invest in their D&I strategies and have an outcome at the end of it, because they saw the problem, but they also saw the benefits that were to be had. It quite frankly paid dividends to invest in their female pipeline of talent, because if they did, they were 70% more likely to capture new markets, 21% more likely to outperform on profitability, and make better decisions 87% of the time. So by us partnering with ambitious organisations to accelerate their leadership and give them best practice programs, we weren't just helping them have all of these great metrics, have better morale, better profitability, better productivity, but we were also helping them achieve a better, more balanced world. I want you to imagine achieving gender equality within our lifetimes. That is why we exist. Here is how we do it. By creating a network, an education network that champions ambition and connects professionals and enterprise to networks, to programs, and to the learning they need at every stage of their trajectory. Speaking of trajectory, we encompass the whole professional life cycle for women, where they can get access to a freemium model of a daily habit app, and then move into a premium paid model to get unlimited access to all of our content. Our content is bite-sized, powered by machine learning, and it's fun, so the content actually sticks. Because we understand in order to be successful, you need to have a lifelong relationship with learning across your personal, professional, and financial life. And as you move along through that career trajectory in that professional life cycle, when you get to the senior leadership level, when you want to break through to the executive leadership level, we know, I know from experience, it is lonely at the top. You need access to executive management education as well as an executive coach network, and that is what our Executive Circle network does for our community. I did mention that we have an incredible access to a mentor model. Here is, and it's a shame the last time I did this presentation our video didn't work, and it seems it's not working again today. I'm just going to see if tech can help me out. If not, I'll talk you through it. It looks like they're taking over for me. So I'll just make sure that's working. Great. So if you were to connect with a mentor on our platform, you can connect by having a look at which industry you'd like to connect with, which specialty areas you would like to speak to a mentor on. And as you can see, it's incredibly easy to read about them, understand what they're all about, and slide right into their calendars. There is zero tech friction. You have the booking, it's in your calendar, off you go. But if you don't know what to say, you're able to use any one of our prompts, and there you are. The booking's been done. You'll know when it's been accepted, and you start your session in platform. Your privacy is protected, and so is the mentor, so there's no boundary creep. When you start the session, it all happens in platform. You can have a voice or video call in platform. You don't need to go trawling through your calendar, through your email addresses to find that link and turn up 5 minutes late and apologise for not being able to find it. We understand that tech friction moves you away from the experience, so we've built it all in. When it comes to the mentor model, we operate via a mentor marketplace, which means that for every mentor that comes on board, they're not only doing it because they want to give back, they understand that they want to give back their incredible expertise and years of experience, but they can also earn some serious cash for doing so. When they get that money, they can choose whether to earn it in their bank account or to donate it to charity. Community is at the heart of what we do. We understand that there are so many social networks out there. We're creating a growth social network, one where you can network with other women within the community and you can message them and chat to them, but you can also have group mentoring sessions, group webinars and other events that you can attend, and you can do so simply by the touch of a button. With our app, it's all about high quality content that is designed for daily consumption. Our push strategy means that we will remind you why you joined in the first place. Has anyone ever had a goal and you married the outcome? You thought you're going to be the CEO, you're going to have that, multi-million-dollar exit at your startup, but you don't marry, you don't get excited about the journey. We understand that through human psychology. We have a smart push strategy that keeps reminding you of your goals, why you signed up in the first place, and keeps bringing you back into the app every single day. We understand why you'd like to join in the first place. So you're not going to come in and get a treasure trove of content across money, across career, across your life. We will give you the right content for you through a smart onboarding system. But we're a lifelong app. We know that when you sign up today, tomorrow, you're a different woman. You might decide, you know what, I'm moving further along in my career trajectory. I learn a lot more now. Now I want to move into finance. We will also learn with you through our machine learning content, and we will give you the right content at the right time for the right person. And speaking of content, we don't just have multimedia content across any of those 3 pillars, but that content is also driven by celebrities. Those celebrities don't just become content creators, they also become ambassadors, they become our promoters, they become our distributors, and on a business level, they become a strong moat. Other businesses can't copy us because they couldn't possibly get the number of celebrities that we have that create content and promote us because they believe in what we do. Imagine being able to learn how to present with Tracy Spicer. Imagine learning how to be a corporate athlete from Jana Pittman. This is the stuff that you can only get at The Remarkable Woman by being a premium member. If you think that's what excites me, you're probably right, but there's something more to it. You see, every time I open up my Instagram, I scroll and I feel, frankly, really crap about myself. I do because I'm comparing myself to other people and I'm procrastinating. Let's create a social network where we can be positive together, where we can actually be progress-orientated and goal-orientated every time you scroll. That is the kind of technology that we are building here at The Remarkable Woman. I did talk about the Executive Circle. It's a niche program that moves through your journey through the Remarkable Woman that combines executive education with executive coaching, an executive network, and the support of an org psych. And you move then into the alumni program. We have an incredible alumni who also promote our program. Our revenue lines are multiple as they are strong. Subscription-based revenue in memberships, Executive Circle memberships, mentoring transaction clips at 10% per transaction, along with many other B2B revenue lines. When you think of The Remarkable Woman, think Headspace meets Airtasker meets Masterclass, and valuations of over $3 billion in the Headspace arena. The market size for The Remarkable Woman at the obtainable market size level would be 62,000 members and over $29 million in annual recurring revenue. It is even larger in the American market size. I'm afraid I've run out of time, so I'm just going to share with you a quick case study, and that is in America, Chief is doing the Executive Circle, and they are over $1 billion in a company valuation. That is the kind of valuation that The Remarkable Woman is geared up to. We have many companies that we already work with, and we have incredible traction. So thank you so much for having me, and I look forward to speaking with you.
Thank you so much, Shivani. Next up, we have Jim McCurley, founder of the Kendo method.
Okay,
How are you? I am going to stay here so you can see the slides, because I've noticed if you stand in the centre of the things that you take away from some of the slides that we've got. And one of the things that struck me listening to everyone else today is one of the missing ingredients that hasn't been mentioned enough is all of these things are fine, but you need people. You need people doing the right things and doing them with passion to deliver the results so these things are successful. So today I'm going to talk about Kendo, which is a people product that improves the performance of people and the organisations that they work for, and it does it in the new world of work. But I know it's close to lunchtime, and because I'm half Irish and half Scots, I've gone a bit crazy. I've actually put my slides in back the front. So I'm actually going to present from the last slide towards the front, and just for the hell of it. So firstly, thank you. You've been a fantastic audience. Okay, the money shot. We're a serious business. We're getting serious enterprise clients. We've got a very strong pipeline. We're looking to raise $750,000, which will give you about 15% of the company. And we can get into the details of that if we want to as we move forward. Now, what I've emphasised to you in the -8 minutes that I've had are the following points. This technology is developed. I've spent $7 million of my money. It is developed. It is commercially proven, and I've got a case study that I will show you where we have made a significant difference to a substantial ASX company. I've mentioned the $7 million. There's a huge market opportunity with HR tech. All of the HR systems that are out there pre-COVID, pre the changes in the new world of work, have got legacy system impacts, and there's a new way that's got to be approached, and that's what I want to get through to you today. We can scale globally. We're jurisdictionally agnostic. We've got a very, very experienced team, and we're an ESIC, and that would prove to be attractive. Now, I'm not going to go into the team. We've got people on our team that have got qualifications in psychology, HR, business management. We have built and sold many businesses successfully. We just want to do it one more time. Okay, what's our business model? We're very simple. We've made it very simple for the marketplace. We are a pure SaaS play. You pay so much per person per month, and we try and limit the any additional costs so people understand exactly what they get. That works very, very well. We just keep it as simple as possible so that people don't have to there's no barriers to that purchasing. It's very straightforward. The case study. So just Essity is a $18 billion revenue FMCG. It's as big as Procter & Gamble. Their Australian and New Zealand Asia Pacific business was struggling for 4 years. They wanted to create a culture of accountability and introduce change. Kendo was a platform that was put in place, and in the course of 2 years there was a remarkable turnaround in profits and in engagement of employees and a whole range of other factors. And the key thing here is when employees and management were surveyed as to what was the reason for the turnaround, 83% of them said Kendo had a significant role in turning that organisation around. So that's our commercial proof of success. That is a client that's got, well, you can see the brands. It runs over a whole range of very important industries. Our go-to-market strategy, we are very focused. We've got segments that have got high needs. I'm not going to go through them, but these are the people that we think are hurting the most at the moment, and we're very focused in going for those segments. The competitive landscape, look, there are a lot of HR providers, an abundance of them. They are all driven around payroll, compliance management, record keeping, all of those sorts of things, from the very large organisations with the, the SAPs and so on, down to the MYOBs. There's a lot of space there, but they don't do what we do. They haven't got into the new world of talent management. They've got too much invested in the market that they've got. So what is the opportunity for growth? Why? We're working backwards here, but just think with these things, what's the opportunity for growth? The HR tech market around the world, because technology has advanced so much in this space, is exploding. And the growth projections are enormous and have been enormous. Two key takeaways from that. The growth area the most is in talent management. It's not in the record keeping and HR core and compliance. And the region with the highest growth rate is the ASEAN countries. And the reason for that is that they're coming off a very low base of HR tech. So they're going to go and put in the full solution as against a lot of others that are going to creep into it. So very, very big growth market for us. So this is the rub. What's the difference between what we do and what others have done? If you think of what used to happen in a performance review, somebody would be asked, how did you go in the last 6 months? Write up what you did, and that would be the data that was supplied. With Kendo, there's a substantial data lake that we have, and the performance, the behaviours, the achievements of that person are actually collected in that database and presented. So instead of doing the assessment and supporting it with data, we read the data and then determine the assessment. And that runs across all of the areas that are within the organisation. Let's just talk about data. If you've got the data, you can apply data science, you can use all of these performance management, improvement, employee experience, all of those things, but you can go much more than that and get into predictive analytics and succession planning and a whole range of more sophisticated things because you've got the data to work with. So having the data is important. Where the hell do you get the data? Well, there's an abundance of data in every organisation. And Kendo collects a lot of data, but it links with third-party products like payroll, Salesforce, lots of other sources of data, takes stuff out of spreadsheets and in pockets and puts it into that data lake. So how do we get to this conclusion of what we needed to do? We sat down several years ago and said, there's 3 things that we've got to do to actually address the new world of work. We've got to understand what drives people, and people want to take control of their own career path. They don't want to be told, here's the company career path, here's the 12 steps you've got to take. They want to do that themselves, and to do that, we've used psychological analysis, assessing capabilities, a whole range of things. The second thing is you've got to develop a way to provide meaningful work. If people don't do meaningful work, they're not attracted to you. And thirdly, you've got to get alignment and get the team to be a high-performance team. Why do we need to do all that? Because the world collapsed. Digitalisation, transformation, COVID, the whole thing caused a new world of work. And that's why we present today to you Kendo. We're improving the performance of people and the organisations they work for. Thank you very much.
Fantastic. Thank you so much, Jim. So now we have a short lunch break. So please feel free to go and help yourself to some food, and I'll be announcing the winner of the investor draw. Oh, yeah, yeah, yeah. Do you want me to? Okay, everyone, here I am to announce the winner of our investor draw. So, well done, Lionel Brown. You are the winner. Thank you for joining us and taking part in the CRISP platform. Woohoo!
Thank you very much. Say something, or do you have to pick up your microphone? Or?
Can everyone start making their way back to the presentation hall? We're going to be starting the next presentations. Thank you. Thank you, Steve. Hope everyone enjoyed their lunch. So next up, we have our second panel session of the day, NFTs and the rise in digital ownership. So here joining us, we have Angus Scott from Trovio Group, Joan Westenberg from Riot Girls, Enrique Anderson from Apollo Capital. You can come down, guys. Lisa Wade from DigitalX, Michael Cotton from Meld Ventures, and Sam Cutry from Ocean Floor Music.
So let's kick off. So welcome to this panel session. This is a session on NFT and digital ownership. And we have around 30 minutes today, so we'll keep the introductions pretty brief. But I'll let you guys introduce yourselves, starting with Lisa Wade, from CEO of DigitalX.
Hi, everyone. I'm Lisa Wade, CEO of DigitalX. I'm just interested to get into the whole session, so I might just leave it at that.
Michael?
Thanks, Henrik. Hey, everyone. Michael Cotton, co-founder of Meld Ventures. We specialise in investing in alternative layer 1 tech and new generation of technology. I'll leave it at that as well.
Sam?
Thank you. Testing 1, 2. Musicians. Ocean Floor Music, co-founder. We focus on education funding for the creator economy.
And Angus Scott?
Hi everyone, Angus Scott. I am the head of labs at Trovio Group. Pretty much concerned with finding exciting things and investing in them or building them. That's it.
Fantastic, a really fantastic panel here today. So I think crypto and NFTs can be quite complicated, so maybe we should start with some definition, maybe explain what is an NFT. Any volunteer on the panel to explain what is an NFT? Angus, you want to have a shot?
Was I just the last in line there? No one to do it. Sure, obviously, non-fungible token. I think what is non-fungible is probably the key element there that's often overlooked. My view is that the non-fungibility of NFTs is the capture of the scenario, the timestamp in that moment of time, and the scenario that it was sort of developed under. So if you're looking at sort of that collectible JPEG craze, which I'm sure everyone's probably familiar with, is the capture of the conditions under which that thing was developed, and then as we sort of progress and the space evolves, the capture of bearer assets, conditions of financial contracts or whatever it might be at that moment in time in that condition.
All right, thank you for that. So NFTs are a unique digital token, and I think last year was really the breakthrough year when it comes to NFTs. We saw a lot of digital art NFTs. We saw gaming markets develop, and also metaverse kind of digital assets. I'm curious to hear what's your favorite, or what do you think is the most promising use case for NFTs? Because there's a lot of different potential use cases for NFTs out there, and a lot of different verticals that are being talked about. So let all of you kind of give your view on that, starting with you, Lisa.
I'm very glad I get to go first on this one. I don't want to steal your thunder there, Sam. I'm most inspired by the actual social impact that could happen and the social equality that could come from changing and shifting the financial value chain across many different asset classes. And I'm really excited to be on the panel with you, Sam, because I think music and art in particular are two amazing use cases. And I'm also very inspired by the Indigenous work that's been done in Australia, and I think that could ripple out into the world, into other Indigenous communities, and we could see a lot of true financial empowerment. People sort of look at technology and think that in developing countries that they don't have the same technology as we do, but in fact, in countries that like Kenya that are developing that everybody has a mobile phone, and in many ways in payments they've already leapfrogged us, and I do see it as the next evolution of social empowerment, and so I'm most excited about that. And obviously there's so many other use cases, but that's my favourite.
Thank you, Lisa. Michael, what's your take on NFTs in the future?
Yeah, I think I'd probably go back to the fundamentals of what blockchain was intended to do, and I think in reality it was meant to bring value, which can be through things like streamlining supply chains, removing pieces of the supply chain, creating accountability. So I think what we'll see as the most exciting part is blockchain technology used to do exactly that across a range of industries. And whether that be, GameFi, so we saw, I don't know if anyone's very familiar with World of Warcraft and how it originally started, you saw things like trading of assets in World of Warcraft done in an incredibly clunky way. It was very much not trustless. You had to trust the people you were dealing with, hope not get ripped off, all the way through to housing contracts. Even today, they're still very complex to complete, whereas things like upgradable NFTs will allow those kind of processes to be streamlined and more done in real time. And we'll see other things like commodities and other types of assets to be able to be delivered in different ways. And I think that trustlessness and that transparency will also bring a level of accountability, which especially in the last month or two with what we've seen play out in the market, I think will be particularly important and probably one of the more exciting aspects of what we'll see coming out of the tech.
Sam, what do you think?
Yes, I think for us, and thank you, Lisa, it is important for us in the creative industry. I think sort of the whole creator/owner economy is a big part of what we're talking about. And adding true utilitarian use to NFTs, I think, is important as well. So, how are we going to integrate in real life accountability? How are we going to add ownership, beyond just that digital asset in NFTs? And I think a lot of the sort of technology that we're seeing develop and that we're developing ourselves will allow us to sort of transcend the whole just digital space with the ownership of a NFT token. So I think it's much more than just what we're seeing, in the digital space. I think soon we're already seeing things like property and other things coming into the space. But for the creator and ownership economy, it's a great opportunity to actually sort of trade and monetize in a new way that hasn't been available before.
Thank you, Sam. Angus, curious on your take on this.
Yeah, great. Well, I think first of all, I'll start off by saying I think I agree with everybody so far. They're all great use cases. I think maybe the way that I view it generally in digital assets in general is that what that really brings to the table is unencumbered information flow, whether you're looking at something like Bitcoin expressing value in an unencumbered way, or NFTs where you can start applying this to, as I said before, bare assets, title of physical commodities, that sort of thing, and all the good stuff that my fellow panelists here have mentioned. I think these are all products of unencumbered information flow, the ability for people to truly communicate value and reciprocate that value on the other side of a trade or accountability or whatever that brings. But I think NFTs are a real step forward in having stakes in a connected world.
Thank you, Angus. I think, for myself, one thing that some of you mentioned as well, I think NFTs could be really great for any type of creator out there, because I think NFTs can enable artists to connect directly with their community and build that really strong community. So that's something that I'm personally excited about. One thing that a couple of you guys mentioned was kind of real-world use cases and property tiles and things like that. We haven't really seen that taken off so far, I would say. Why do you think that is, and kind of what else is needed to solve to kind of enable that use case, if it can be solved?
I think one point of view is that it takes a long time to build something that then becomes scalable. And what I think you're seeing now is actually the tip of the iceberg, and I think a lot of work has been done, and I think the take-up will seem very rapid, but all of us who have been working in the background for all of these years, it feels like it will take forever. I think there's one example of a real-life transaction that we've done is our Carbon Koala NFTs, which was sort of a little gimmick when we went to Consensus in Austin. It just seemed so crazy to buy carbon offsets from a corporate when we're such a stand for NFTs and for this, new economy. So we worked with a startup called Metacarbon, who create carbon NFTs and actually brought that to life. And an idea like that, I can just pick up the phone and buy carbon offsets tomorrow, and in 30 seconds. But to actually build that takes time. And I think now that we've taken the time, we have that asset that we can roll out, and now we have this concept brought to life, and we can use it all of the time to show our authenticity in our carbon offsets. And I think we'll do more and more of those things. And I think once the work is done, then you'll see a really rapid take-up.
Oh, so that's really interesting. So how does that work? So carbon is tokenized and it can be traded?
So in this particular case, yes, the NFTs can be traded, but we have bought and retired the carbon credits. So it's if you wanted to buy one of those, then we would retire the carbon. And yes, you can transact in the NFT, but the concept is that in our one, it's a little different because we used it for a corporate use case. But you can do things with the carbon creatures that Metacarbon does, like buy a carbon creature that's locked into a carbon metaverse, and it doesn't get released until you've offset the amount of carbon that reflects the carbon exposure in your life or for your corporate. So there's a number of ways you can use it, and it's quite an incredible use case, as is Beta Carbon, our partner today, but we can talk about that later.
And they're here today as well, right?
Yep, Beta Carbon, we've got trees at the stall. And those trees represent 1 tonne of carbon, just in case you didn't know.
Fantastic. So last year we saw a very high level of interest in NFTs, and this year everyone is talking about the crypto winter. Which projects, in your opinion, have the highest chances of surviving? For example, we saw a lot of PFP products like digital art, digital pictures, those kind of things really take off last year. Do you guys think that the market will survive, and how will it evolve? This is for any one of you.
Oh, okay. For the newest startup here, of course. Well, I guess during the 2020-21 sort of boom, let's call it, there were a lot of projects and products that were kind of built on shaky ground, so to speak. The concept wasn't really strong. It was hyped up. There may have been some good people on board, and that drove that product, to the market and to the place that it went. And now we're kind of seeing a lot of those products kind of disappear. Token valuations were massive, and thank someone or something when we didn't go to our token generation event earlier this year, and I'm really glad that we didn't. So it's probably going to be in Q1 23. But I think your idea has to be strong. You've got to have strong fundamentals, a strong team, and you've got to have a bit of a runway. So a bit of financial backing. So I think if you've got a year in you now, you're going to be okay.
I'll add to that, Henrik, if that's okay. And I think it probably talks to the previous question a little bit as well. I think some of the things that we're missing, that'll be some of the more promising projects, is the things that allow the sort of products to come to market that are needed to really use this technology. So I think things like middleware that allow users to more easily engage in blockchain tech, I think will be really important. At the moment, we kind of have two extremes. We have full custodial or completely non-custodial. Full custodial is extremely easy, but it's kind of counterintuitive to what blockchain tech's meant to do. And I think we'll see some more middle ground be developed around wallets and user experiences. I think the other piece that will be quite important is development of tech around things like trustless royalties on chain. There's still a lot of work that needs to be done in these kind of areas. And I think the other piece which has been stopping adoption to some degree of real world assets is how do we make the non-blockchain piece, before a lot of that transparency comes into play, how do we make that more transparent and more accountable? There's not a lot of a point to digitizing something if it's still completely opaque on the non-blockchain component. So I think we'll see a lot of work from a lot of teams around how we make that component a lot more trustless as well.
I have a quick answer. Hard yes. This market is here to stay. And I think that what's really important is the sort of essence of this industry. It really is a lot of passionate people doing a lot of great work. Yes, when they can raise money, it's well and good, but that work will still carry on in people's garages, in basements, and the game-changing nature of digital assets will mean that that work will still get done.
Thank you. Next question is for you, Sam. So a lot of people are excited about the use of NFTs in the music industry. I know you don't focus specifically on NFTs, and you have a fundraising platform, but could you talk a little bit about how NFTs could be used in music and for the music artists and creators out there?
Sure. So, at the moment we're seeing many artists bring out NFTs with their music and videos. We're also seeing artists offer NFTs in a funding capacity, so have ownership of the tracks, after release. I think there's great value in NFTs in music for the release of music and videos, but I also think there is great capacity for other services, such as maybe VIP tickets, other use cases, and how do we integrate in real life use cases in the music industry as well? So, and how do we track that, without oracles and so on? So I think that technology is getting developed, and we're seeing great use cases at the moment in the space. I'd like to see a higher level of adoption from the smaller sort of 90% long tail of artists that aren't in the top 10%. Of music-making artists, and that's what we concentrate on, and I think there's lots of growth potential in that area. So it's great. I think there's a long way to go, and a lot of opportunity for development in the space as well.
Thank you, Sam. I know, Michael, you're pretty deep in the Algorand ecosystem, and we have seen some early music NFT platforms launch or being launched on the Algorand platform. Can you talk about that and what's happening there?
Yeah, certainly. So Algorand, for anyone who's not familiar with it, is an alternative layer 1 tech developed by Silvio Micali. This is not meant to be an Algorand spiel, but one of the greatest computer scientists to ever live, won the equivalent of the Nobel Peace Prize for computer science, the Turing Award.
Then what we need and where we need the world to step up is, and especially in Australia, is from the investment side, is people like superannuation funds starting to look at it as a real asset class for investment. And I think that there is a very long journey to that. Anybody who's ever tried to get money out of a super fund knows that for a reason they have trustees, and we need to speak to the highest common denominator of the trustees and tick every single box for the due diligence on a risk-return basis. That is a process, and that is a journey we all need to go on to actually build the infrastructure for digital assets to meet that requirement, which I think we need to do as quickly as possible. Otherwise, every person in this room is an investor with their superannuation. We'll miss out on the build if people like us don't do the work now.
Thank you. Michael, you're an investor in the space as well. What are you looking for when you invest in this sector?
I think in terms of what we generally look for is teams that are dynamic. So I think in many ways, repeating what both Lisa and Angus said in some ways, but what we're really looking for is teams that don't just have a good idea, they also need to be able to execute, they also need to be able to be resourceful, they need to be able to understand what a business model really looks like and what foundational fundamental pieces they need to achieve their goal, and have a really strong understanding of that. I think venture capital does have a role in that, which is, I think you get a mixture of projects. You get projects that are, two people in a garage that have a really great idea and that are really capable of delivering amazing tech. And then you get projects that are far more advanced and sophisticated. But I think venture capital's role is, to make risk assessments on those different projects and then look where you can actually help a team that maybe has the capability of getting to that level of, dynamicism and helping them actually achieve that goal. So I think for us, we look for people that we think will be future parts of what that strong, powerful founders and CTOs and CEOs look like. And then we try to play a role in helping them achieve that goal.
Thank you. So one question that I heard other people sort of bring up sometimes is kind of who will be the winners in Web3. So we obviously saw a lot of new companies coming to the market with Web2. Are those the companies that will lead Web3 as well? So the Twitter, the Instagram, Facebook, those kind of players, are they going to be the winners in Web3, or are we going to see brand new platforms coming to the market that are more crypto native, if you like, that will kind of lead Web3?
Oh, I'll go first then. So I genuinely think you'll get a mixture of what you've just said. I think that any savvy corporate right now, larger corporate, is looking to make acquisitions in the recent shake-up in markets and looking to onboard the technology that they will need. I think the people that are building the picks and the shovels now are of the financial future and have that vision of what is needed for things like, probably the biggest thematic will be the tokenization of real-world assets, so the next evolution of NFTs. What is needed for that shift in the market and that massive transformation of the whole world economy, the people who can have that vision and invest in the picks and shovels of that now will be the survivors. And then I think you'll have some, transitions of Web 2 companies into Web 3 who'll, invest in stable coins and things like that naturally merge their businesses from Web 2 to Web 3 native. And then I'll throw one in for Web 5 and really annoy my team who don't believe in Web 5, but I'm a passionate believer of Web 5. In the definition that Web 5 is the complete reversal of how human beings own their data, and we will then take ownership of that data. And I think the people that crack the code on that will be doing a service to humanity, and I think that they will win the race, whatever that race is.
So I actually haven't heard about Web 5 before. So what's the difference between Web 5 and Web 3?
Well, the definition is Web 2 plus Web 3, and it's a bit of buzzword bingo, but really what it is a data layer that sits above any layer 1 protocol that right now, if I sign up to a website, that website gets all of my data, and all of my data is everywhere all around the world. In Web 5, I will onboard my data, do the KYC, the AML, that will be given a tick, and then I have the option to onboard the people that I want in my ecosystem and to do business with on my terms, can come in and I will be their customer, but inside my ring-fenced data, so they won't own my data, I will own my data.
All right, so Web 2 plus Web 3, basically. Got it. So obviously, most people know about Bitcoin these days. Maybe you read about it. You might not know the details. You have probably heard about Web 3, at least everyone here. But what are the big barriers for the next wave of adoption out there? Any thoughts on that?
Yeah, I'll have a crack. Thanks, Henrik. So I think probably one of the biggest barriers is ease of use for the uninitiated. We're still seeing a tiny fraction of the world's actually engaged in using blockchain technology and using Web3 in particular. And I think a lot of that comes down to, with non-custodial operations like with blockchain, there is a level of responsibility that I think most of the world hasn't had to take on. Being completely responsible for, everything you own, value you own inside a wallet, where if you lose the private keys, you may lose that value forever. There's no going in and showing your ID and resetting. I think that's been a particularly strong barrier to entry. And that's where sort of what I was saying before, where we need that middleware that allows people to have access to this kind of technology that's still, in the same sort of method that blockchain was intended, where we're seeing somewhere between custodial and non-custodial will be a key removal of a barrier to allow further adoption.
And I'll say 3 words: fear and greed.
I'd maybe just add to that as well. I think, Michael, I think you're 100% right on what you said before as well, the access. So I think it's access and the infrastructure that comes with that, and the knowledge as well. And I think the knowledge sort of evolution needs to happen both outside the community and within the community. I think, and maybe back to your question around which Web 2 companies will survive as well. I think it's easy for anyone to see the new flashy lights of decentralisation and the specific benefits that brings. But I think the evolution of the space is understanding that is one of the tools in our arsenal, the other tool being centralisation and the benefits that that does bring. And it's not to say that one is bad and one is good. I think it's understanding what balance exists, what Web 2 companies can really excel at things that we as a community would prefer to be centralised, and what needs to be pushed right down the end of the decentralisation curve. So I think it's building the infrastructure, creating that access, and then evolving sort of how that solution really looks for a sort of a mass market.
I might just finish with, it's such early days. We are really at the very, very beginning of all of this, and education is fundamental. And Lisa, I'm really looking forward to being able to unplug all of my data when I want to.
Will help.
All right, so we are almost running out of time here, but maybe one last question, and this is for all of you. We obviously in a crypto winter, and my question is, have we seen kind of the worst of the crypto winter? Have we seen the bottom in crypto? Just your quick take, starting with Angus.
I wouldn't be surprised if we have a little bit lower to go, but I think that's actually wishful thinking, because I'm very bullish the space, and deeper winter is a better buying opportunity.
Yeah, bullish as well. We may have found maybe a new low.
Look, I think I probably am not overly keen to speculate. I think we will probably see a bounce on the bottom for a while, maybe a bit lower. But I think in general, like Angus said, it's a good time to invest if you can find things that are delivering value. And I think for builders out there and people creating products, this is the time to build. You've got a window now where you can focus on delivering great products and can ignore some of the noise.
Absolutely. I'd say cautiously optimistic, and now is the best time to build.
Fantastic. Let's end that at this optimistic tone. So thank you so much to all the panelists.
Thank you.
Thank you.
Thank you.
Fantastic. Thank you so much, everyone, for coming in. We really appreciate your insights. Okay, so for the first presentation this afternoon, we have Colin Fabig, the founder and CEO of Fans.Inc.
Hi, everyone. You can hear me? Great. Let's start. We've already gone backwards. Great. Thanks very much for coming here and listening to our speech. Basically, we are Fans.Inc., and I'm the CEO, and we basically create digital collector's editions of the world's greatest content. That being songs, and we call them song collectibles. And what we're doing is trying to make music collectible in a digital world. So what is a song collectible? Well, a song collectible is a unique digital NFT of an original song with the licensed music rights, and it's released in limited quantities, which guarantees scarcity, and that basically creates an enduring collectible asset. So we talk about digital assets. This has become a digital asset you can buy and you can trade because it has uniqueness and it's got scarcity. Basically allows people who love music to trade once again for the first time in many, many years, buy music and trade it and collect it. They can also show it online and offline, and they can basically possibly make a profit out of their passion. It's basically used in two main areas. One is in old songs, so legacy songs. You can imagine something like Bohemian Rhapsody by Queen, or you can imagine something like Rolling in the Deep by Adele. This, if you could buy that as a limited edition, as a digital collector's edition, and there was only 10,000 in the world of that, that could become a very valuable item. And there's 21 million people who bought Bohemian Rhapsody. Queen has got 60 million followers on social media. If they said you've got 10,000 versions available to buy, you can imagine them coming in and lapping it up. You can also imagine Drake or Rihanna or anybody who wants to release a new song, before they put it on streaming and it goes free, you could offer a digital collector's item which people can hear first, they can buy it, and then they can trade it. And if that song goes off, then they basically have bought a very valuable item. So we, unlike a lot of other NFT marketplaces and stuff, we're not technology focused. We're all about the fan and the artist. The question is, what do people want to do with all these things? Would you like to have a Bored Ape or a picture of a CryptoPunk, or would you like to have one of your favorite songs as a collector's edition? So we're sort of saying, well, that's really what we're doing. So first thing we do is we make everything easy. We do things without crypto hassle. It's on a Web 2 platform with the ability to mint it onto a Web 3 platform, but it allows you to buy things just like you can buy a T-shirt online. You buy with normal credit cards, but if you want to use crypto, you can. We also basically are licensing the songs from third-party aggregators, and we'll be the first major company in the world to get a blanket license for a lot of songs. The reason that is because we're Web 2, and Web 2 is familiar to the music industry, and they understand it. But once we do have the Web 2 version, we also then get the artist to verify it. And by verifying it, then your fans can trust that you've bought something that is limited edition, authentic, and has enduring value. So here's an example of what we're sort of doing. Over here, you see a typical example of Jennifer Lopez. She has her own profile, just like you have on Facebook or Twitter or anything like that. And there's one of her songs, Ain't Your Mama. And it's an official limited edition. She pops up as you come into the page. She pops up and says, hey, you can own a piece of my history. You can buy this. And you can own one of the versions of my song. Basically, once you've done that, you might even print a version of that, a visual version of that, of the cover, and put it on your wall. It has a QR code. You can scan it, and you can show everyone that you actually own it. When they scan that code, it goes back to the site and proves that you own it. You can mint it if you want to. If the artist and the record company has given us the rights to mint it, then we will mint it onto the NFT blockchain, and people can own it on the Web3. But you can also show it off on your phone anyway. You can show it off on your desktop computer. You can show it off on your TV. So there's actually almost more ways to show off your digital collectibles than there is ways to show off a physical collectible like an artwork. And you can also trade it. So unlike vinyl and stuff like that, there are a lot of people buying vinyl and trading vinyl. Obviously, you could scratch it, you could lose it. This particular thing now, there's no chance of destroying this item. You've got this limited edition item, and it's tradable, and it's not going to break down in any situation. What do? We're a platform provider. So what does that mean? Basically, we facilitate the artist to come on board. We clear all the rights for them, and then we basically give them 80 to 90% of the revenue. We take the other 10 to 20% depending on how much marketing we've done for them. And then basically once you've bought, say, Bohemian Rhapsody's number 322, you can then sell it on our platform to someone else and they can buy it. And when they buy it, there's a 10% royalty that comes back to us, of which we give 75% to the artists and rights holders. So basically the attraction we have at the moment is that we've been working this about 9 months. We've got the platform is ready. We're ready to launch in the next quarter. We've invested about $1 million of our own money in the business. We've got 12 staff in the business. We've got offices in LA, in Bali, and in Sydney. The tech team's in Bali, which is quite nice. And then we've got a music team in our. The problem with that is that there's a lot of artists there are a lot of people involved in the song. It's not one person. There's usually 20 or 30 people involved in the song who have some rights. One of the people puts up their hands and says, take it down. You've got to take it down or you've got a massive copyright issue. So for that reason, it's very difficult to put legacy songs in NFTs. But not a problem because we've got a Web 2 application. So we'll be one of the first companies who gets this contract, and we've been negotiating for the last couple of months. And we're also then working with the group of select artists like J-Lo, Nickelback, and Veronica's to come on and endorse their particular songs. And what will they then do is, the model is that they basically advertise on their social medias. Hey, J-Lo might say, look, I've got 350 million followers. I put it out on social media. I've got 10,000 versions of On the Floor, one of my top songs. People come in. Obviously, 350 million people see the post. Around about 5 million people engage. There's 10,000 to be sold. It's a very, very good opportunity to sell something. We're creating a market for collectibles that has never existed in effect. Very exciting, and the average song from a very big star would sell for about $3 million at $300 each. And then basically, if you look at someone like JLo, she's got about 25 major songs, 10 songs over 100 million streams. She could make herself $30 million from those songs. That's a lot of money. That is probably half of what she's made on streaming. So it's a huge new revenue stream for the artists, for the big artists with big songs with huge popularity and great socials. So that's our model. We're looking for some funding. We're looking to raise $3 million at a $12.5 million valuation. So it's our first external round, first money we'll be taking from anyone else. And basically that money be used for the licensing that's got to be finalized. Also to pay some artist advances. So someone like JLo wants like 250 grand up front. The Weeknd might want 250 grand up front just to get involved. And then the third thing is obviously just for marketing to get the name out and general staffing. So what is the potential? The potential is basically $450 million in 2 years. Does that sound possible? Sounds crazy. But 50 songs selling, 50 artists selling 3 songs each. If you add it up and the trades once onto someone else, is about $450 million. We get $35 million from that. If we did that within 2 years, that company would be worth somewhere between $300 and $500 million. Huge opportunity. Is it possible? Can we do it? Yes. The team is serial entrepreneurs. I've done 12 different startups, sold 8. Last one was sold at 300 million, the one before 300 million, the one before 50 million, the one before $10 million. Done a lot of startups, flipped them in 2 or 3 years. It's been done before. The team's got a good music base. We've also got a good tech base. And we invite some select people here today who love music and who love the opportunity to get in something really early. We believe we are the Spotify to the market, to the music market, like Spotify was to Napster. We are to the current NFT space. We're doing something simple. We're creating a beautiful collectible that's very, very close to people's hearts. And it's the opportunity to open up a massive new industry and create huge revenue for the artists and a fantastic way of the fans connecting with their favorite song. Imagine owning the #1 version of Bohemian Rhapsody, and every time the song plays, you say to your friends, wow, I own that. They say, well, what are you talking about? You show them on internet, you show them on your profile, you own the song, you can trade it. It's huge potential. We'd love you to join us. We're at the stand. If you want to talk to me, look forward to it. Thank you.
Fantastic. Thank you, Colin. Up next, we have Ben Simpson, founder and CEO of Collective Shift.
Awesome. That was a good pitch. Might check that out later. My name's Ben Simpson. I'm the founder and CEO of Collective Shift. I am from Tasmania originally, a little country town called Smithton, if anyone's been down to Tassie. Moved to Melbourne recently and building my company. So I first got into crypto when I was 17. I quit school to go down the rabbit hole of Web3. We're not quite at Web 5 yet. I'm going to stick at Web 3 for the time being. And what I found was it was really fucking complicated to figure out what the hell was going on. And for those new to Web 3 here today, with all the terminology and people talking about random stuff, there's Bitcoin, Ethereum, blockchains, layer 1s, layer 2s, yield, DeFi, gaming, metaverse. It just list goes on, and it's actually really difficult to wrap your head around. In fact, 1 in 3 investors into crypto actually have zero idea what they're doing when they buy crypto. Last year alone, there was $14 billion lost in scams. The scammers are probably the most advanced people in the crypto space. They're the ones that are really at the cutting edge, and a lot of people are losing money on there. And 40% of all new transactions comes from new investors. And this is a real problem because people don't have the time to figure out what's going on, and they're losing money. So we put together a subscription membership platform where we deliver simple, actionable insights for investors. So my mum uses the platform so she can sign up and understand exactly how to manage her portfolio, what to look at, and the things to avoid. So in this product, we have a range of different things, if the videos will play. From community, we have daily analysis, we have copy portfolios, so anyone starting in crypto can look at our copy portfolios, whether it be NFTs, short-term and long-term, and we have currently 1,500 active paying members that use the platform across the world. So people wanting to just start out, intermediate and advanced users as well get a range of different things on the platform. We do all the research and analysis for you, basically, so it's like a done for you. We don't take your money. You're able to sign up, and it's like we call it your Web3's best friend. So investors love the product. They're allowed to, they can use it. They're busy entrepreneurs, busy doctors. Maybe it's just a mum and dad investor. They can use the platform and in an hour a week, they're across exactly what's going on across the market. So as I mentioned, we have 1,500 active paying users from across the world. We focused on Australia primarily. We only launched 18 months ago, and the traction's been really incredible. We're starting to scale in the US, so no, that's my cheek there. Starting to scale in the US. In the US, there's 60 million users, digital assets, versus Australia's only 2 million. So it's a 30 times bigger market, and we're starting to head into the US and seeing some really good traction there as well. In fact, what we've done in the bear market, we've really pivoted towards being able to deliver more of a premium product. So our prices, we increased our prices 3 months ago, and we saw subscription cancellations go down. So our top tier is $199 US, and for the more premium users, they're actually seeing better churn rates than some of our lower tiers. We've only just started expanding our marketing and growth, so emerging channels are looking really good. We haven't scaled the marketing just yet as we're starting to test out different channels. But that's looking really good as well. And you can head to that link there if you want to check out some of our success stories. A bit of text here, but pretty much for a new person coming into the space, there's no one really delivering the front door for everyday people. So on one side, you might have the TikTokers and influencers, as I mentioned on the panel earlier this morning, getting promoted, all sorts of nonsense. And on the other side, you've got Mazzari and Delphi Digital producing really heavy data-intensive information, which, including me, just doesn't have time to read 120-page theses on the metaverse. So we're really positioning ourselves in the middle of that, so anyone can sign up and get access to some high-quality information. As I mentioned, the market size is really growing. So there's 60 million people that own digital assets in the US alone. That's growing 59% year over year. It's a massively growing space. And as I mentioned, we've just been targeting Australia for the last 18 months and now heading into the US. With that US expansion, the two execs I brought on, so Aman Asadi, he's our Chief Growth Officer. He's an ex-Google employee.
Of macroDATA Viz. Viz is not a cryptocurrency company, we're not an NFT company, and we're not an exchange. However, we fuel all of them. So what we do is build a microgrid green energy solution and then support high energy generating or high energy utilization companies to be able to sit on site as tenants and then have a fixed green energy solution for up to 25 years. The energy that they're consuming is at a fixed rate, and it has a built-in CPI index into their utilization, so it gives companies the ability to manage their financial forecasts and businesses over an extremely long period of time. We have two tenants that have signed agreement for leases. One is a data center company and another is a cryptocurrency company. And our third tenant is a green energy solar company that's actually providing the solar to the tenants on site. Didn't really. I'm sorry, I don't know how to. I'm not sure how to make the slides work, so I'll just keep talking and maybe somebody can help me out. Oh, there we go. So, energy. Something that we expect to be there, something that we take for granted until it's not there. The year was 2001, and I was managing one of Microsoft's data centers in the Seattle area. And we were probably about 3 months away from the dot-com implosion, so we were right at the massive bubble of the dot-com boom. And all of a sudden, the US was launched into what could only be described as a third world country energy crisis. We had rolling blackouts. I had to run diesel generators for about 2,000 hours to run the data center over a 3-month period. The margins to my business blew out of control. The fat and you could see the brown in the air because I wasn't the only one that was running generators in order to keep my business going. Why do you care? Because that same crisis is happening today on the east coast of Australia. Queensland and New South Wales about 3 weeks ago told consumers if you don't stop using too much energy, there isn't going to be enough energies and there are going to be blackouts. I happen to sit on the board of a listed energy company, and I can tell you that same problem is going to come up in about 3 weeks. And the reason why is that energy generation is down. The grid, the Australia Energy Market Operator, their infrastructure is ailing. This is infrastructure that was originally built 150 years ago and is running at over 100% capacity during peak utilization almost all the time. And they don't have any more room. So the energy crisis is so high in Australia that there was an act that has recently been passed called the Critical Infrastructure Act. The first set of infrastructure that went into critical infrastructure was our energy system. And the reason why is because the government needs to make sure that the right things are in place and the right processes are in place to keep our energy running. If we lose energy, then as an economy, we grind to a halt. So sorry, following my notes. So today's energy demand in Australia is about 440 terawatt hours. That means that in a day, that terawatt, you think megawatt, gigawatt, terawatt, quite a bit of energy. The Australian Treasury Department in 2011 did a study that said that we'd be running at about 440 terawatt hours of energy in 2022, so we're about there. They said that number is going to double by 2050, and our current infrastructure is already ailing. We don't have room to add any more infrastructure to it. AEMO did announce that they're going to put about $12 billion into upgrading the infrastructure, but that's going to get us to a point that supports what our utilization is today. It's not going to meet what our demands and capacity are in 2050. So how are we going to solve the problem? We're going to do it with microgrids, and we're going to do it with solutions like what macroDATA is offering up. So what we have is a lot of land out in regional Queensland. We're going to put a big solar farm on it, have some batteries to be able to provide energy to our customers 24 hours a day, 365 days a year. We've got a grid connection so that we can export our surplus onto the grid and be able to add green energy into the grid ecosystem. So, there you go. So, giving you a little picture of UNUS, which is our first project. So the North Campus is the site that we're actually looking to raise funds for today. This site has water, it's fairly level, and it has enough room for all of the solar plus the data center and cryptocurrency tenants. We do have a little bit of extra room and are talking to a hydroponics provider that's looking to grow food on site as well because there's plenty of water and low-cost electricity. The two sites together will generate about 545 megawatts of energy, but the first site, the North Campus, will generate about 220 megawatts of energy. And as I mentioned before, it is connected to the grid. So how does this work? Kind of alluded to the solar farm. Then we store energy in the battery, or we actually send some of that solar to our customers. And we'll also look at having long-term storage in hydrogen. So as I mentioned in the story at the beginning, Microsoft had diesel generators as a backup so that the data centers never went offline. What we're looking to do is replace that diesel generator with hydrogen as a way to store it and then run it through fuel cells to be able to power the data center, the cryptocurrency, and any other electricity tenants that we have. As also mentioned, we've got a heads of agreement as well as an agreement for lease for the three tenancies, the solar farm provider, the data center customer, and the cryptocurrency company. So marketplace and competitors, so people keep asking me, well, who's your competitor? Who's doing this? And the answer is that there are actually quite a few companies that are doing this for themselves, where they're generating their own type of electricity or storing it on site. But General Electric, so a US-based multinational company that probably is more known for products, is actually getting into the microgrid space in the United States. And I think they potentially have a site that they're doing in Western Europe. So what they're doing is, with their GE hardware, creating a campus where tenants can move in, sit on site with them, and utilize the electricity behind the meter. Why behind the meter, over the grid, using a lot of lingo? Behind the meter means that you're not paying extra charges to use the grid and to have the energy move, so it's less expensive. The other benefit that we offer, being 100% green energy, is that we give carbon credits as an offset to our customers. So in the 41 seconds I have remaining, we have received multiple term sheets for $55 million as a first mortgage position. This is a typical property development offer that we're putting out into the marketplace, so that we're looking for an equity injection in the form of mezzanine finance for $12 million. Would love to talk about the deal and the structure offline. I highly encourage you to join our data room and take a look around, and I'll leave you with the team, which is Catherine Judas, former Microsoft and Amazon exec. And my co-founders are Andy Whitmore from 3M doing infrastructure and communications projects, and Steve Dutton, also from Microsoft as well as the Commonwealth government. And I'm now officially over time. I'd like to thank you for sticking with me during my presentation, and enjoy the conference.
Thank you so much, Catherine. Up next, we have Chris Nemos, founder of Titel Australia Pty Limited.
Noon all, and thank you for having me. I'm Chris Nemos from Titel. The real estate industry is in a mess. What do I mean by that? At the moment, you've got builders up here doing their own thing, you've got marketers up here doing their own thing, you've got real estate agents doing their own thing, and they're not really communicating with each other at all, or if very little. So what that does do, that actually slows down the process and impedes on their process of sales. So what did I do? I started sitting down with the industry because I've got a marketing company that markets for these guys. So I sat down and started scoping in the industry and thought, what are their pain points, and started working out their requirements. So then I presented this to one of Australia's leading banks, and he goes, Chris, you've just built the Amazon for real estate. So what is the solution? Titel is a platform that brings everybody together. So the guys that were up here not talking to the guys over there, and the guys down here that weren't talking are all now onto one platform. And what that allows them to do is to be able to communicate and do business in a streamlining manner. So with that, the marketers can then talk to the land developers and then start marketing their products, and vice versa. So effectively what we've created there is what we call a network effect, where then you get multiple people managing that product constantly. So here's a really good example of how one of our clients would use it. We've got a land developer that's uploaded all their land base into our system with all their guidelines and costings. The builder will do the same thing. So he'll upload all his designs with costings and so forth. And then it does pattern matching with costings, giving the best result. So a good example would be, imagine if a salesperson's sitting in a display home. He's got a customer coming in, and the customer goes, love this design, can you find me a block that's in this estate? So he goes through his system, it's branded under his brand because it's white labelled, and all of a sudden he pattern matches it and can put a reserve on it straight away. What does that mean? There's a holding on it straight away, comes off the system, and then they can finalise the project. At the same time, that land developer or builder can have it through their agents. So multiple agents, whether it's in Australia or overseas, can do the same thing remotely, selling on their behalf. Once again, that network effect. Same with multi-residential. So a developer can upload their project straight into our system. It sucks it all in, then creates what we call an interactive component where they could drill down between each level and then can sell straight off it. What does that mean? On a click of a button, you can put a holding deposit straight into a trust account. Now imagine that same developer within the system appoints agents, whether it's exclusive or not exclusive, around the world, selling on his behalf in real time. Once somebody purchases something, it comes off as either hold or sold. And it's all in real time. Most common question, what's the difference between you and Domain and realestate.com and the others? Well, they do very similar, and some of them do it quite well. But think of us as realestate.com on steroids. What we do is do live data, live bidding, offer and acceptance, a whole range of things that most systems don't do. And the most important thing is increase their sales capabilities, which is again that network effect. The time the revenue streams in Australia is huge. That's just a small sample of what we're going to get. And we'll get most of this, don't you worry. Okay, some exciting news. As a startup, we're excited. We've got over $5 million of letter intent from prospective clients right now. How many startups do you know that have got that in their pipeline? And not just that, we've got Colliers International ready to come on board with their whole book. So they want to bring their residential projects straight onto title. I'm so excited. Our business model. It's actually quite simple. We've minimised the barriers for them to come on our system, and they either transact through our system or they subscribe to a system. So it's quite simple for them to use our system. It's scalable. So we've built this product to grow. We're already talking to internationals in the US, Dubai, and other countries that are wanting this product. And we're future ready. So what does that mean? At some point, you'll be able to buy properties with cryptocurrency. You'll be able to do contracts through the blockchain and any other thing that we seem deemed that's critical for the future of the product. We've got a great team. Our team has got experience across all the sectors of what we want to do. They're all into marketing. They're cross technologies and they understand property, the three critical factors of our business. So what are we after? This is the most important part. We're here to raise $2 million. The $2 million is probably going to use part development. So what does that mean? We're 95% finished and we need another to finish it off with that 5%. And then to commercialise it, so to market the product and expand it throughout Australia and internationally. You really can't afford to be not on it. We've got to stand there, and thank you for listening to me.
Fantastic, thank you, Chris. Up next, we have Dan Cox, founder and CEO of Ascension.
Okay, there we go. Good afternoon, and thank you for the opportunity to present today. I'm Dan Cox, and Ascension are the market leaders in clean data, turning data into profit. Just to note that my presentation today isn't the full representation of all my facts, figures, and statements, and therefore shouldn't be substituted for a due diligence exercise. So Ascension is looking to place $6 million with strategic investors to help form our supply chain into aged care, banking, enterprise, and government, looking at an acquisition exit in 4 years. Our Series A round will close November 30th. So let me tell you about the problem we solve. Per Gartner's 2021 report on data, an average organization that's listed loses $15 million US annually because of bad data. And MIT Sloan also supports this with their report, estimating that dirty data costs around 15 to 25% of your revenue. So what does that conclude? We get unhappy customers, unhappy regulators, non-performant execs, and of course less profitability, making ultimately shareholders disgruntled. Dirty data delays decisions, resulting in suboptimal strategies, as well as potential fines. And if we can just look at the fines that Westpac just recently had, $1 billion 2 years ago for poor data to AusTrack, and another $700 million fine to them just a couple months ago. CBA, Westpac, all in the same position. It also decreases market share. We turn data into profit through our advisory, delivery, sustainment, and training services. Through our trademarked clean data methodology, utilizing our patent-pending data attestation framework. implementing solutions for our clients in combination with our own developed IP, as well as third-party vendor software, in order to produce a solution for our clients that is focused on outcomes and helps them to drive performance. As a data service provider, we have aided our clients in uncovering over 100 million in value and counting. We also partner in order to make sure that they find these discovered revenue opportunities, as well as tangible cost efficiencies and quantifiable cost savings. We aren't just implementing trends, we make the trends as thought leaders across the region and the globe. Assembling our A team, we're poised to drive and accelerate our growth. Our core leadership team, as an example, Lawrence, our COO, was the global product manager for the Samsung Galaxy 2 launch. Risk officer and growth officer, Oscar, was a finalist on The Voice. And Jin Tak, our managing director in Southeast Asia, was the previous CEO for the Sports Hub and Olympic program for Singapore. And during his tenure, constructed the Olympic facilities in Singapore, a construction budget of $35 billion. The APAC region is growing substantially, and estimated to be $30 billion US dollars by 2025. Our targeted regions that are serviceable and obtainable is a conservative estimate of $2.8 billion US dollars. The Southeast Asian region is growing at a staggering 50%, and ANZ region at 24% year on year in the data management space, compared to the rest of the globe, which is only 7%. Ascension is well positioned in the region and is well known, and our reputation is gaining. We also partner with the global systems integrators like EY, KPMG, IBM, Kyndryl, etc. So we're not in competition with them, but actually they outsource to us to reduce their risk of delivery, and also then, of course, aiding our footprint increase. Our expansion plan is increase market share in Australia, solidify our presence in New Zealand, build our in-house offshore capabilities, and drive market penetration in Southeast Asia. Our go-to-market strategies are primarily around the government expansion unit, as well as initiatives, with our primary objective using our Citizen 360 platform that we have built internally, that's a data exchange between the citizen and government and service providers, as well as continued contract negotiations and broadening with our teaming partners of Accenture, Infosys, EY, KPMG, etc. Tier 1 corporate, expansion and more penetration through our existing clientele. And thirdly, market entry into mid-market segmentation. This market has been severely underserviced over the last few years because they couldn't actually afford the services and software that we can now provide to them. We're looking at increasing our business development resources, as well as increased billable consultants in our ANZ area, as well as then building our multiple offices of our non-client-facing billable consultants, as well as increased investment in our marketing, brand awareness, and marketing activities. And lastly, localized staffing resources for Southeast Asia. As many organizations, just like Ascension, were hit over the last couple of years, many of our government contracts were actually postponed and delayed. And they have just recommenced at the end of FY22, building a really strong start to our FY23. And most of our revenue is actually recurring based off subscription and SaaS services. So therefore, it's quite easy for us to go from our FY22 actuals of $6 million in gross revenue to our budgeted $16 million for FY23, And that enables our leap to the 37 million in 24 and our 53 million in 25. If we look at the investment of 6 million and the impact on inorganic growth, that actually has well and truly a 3 times X. So in 3 years, I'm expecting to 3X that 6 million investment. So again, I'm looking more likely at an acquisition. It's more likely and more suitable. I'm not ruling out an IPO, but if you look at the service industry and the data area, they've been relatively acquired and put back into PE organizations and or privately held then. So we're looking at 4 years to be acquired with a targeted desired revenue of around 80 million. And the likelihood of the acquire is a new data entry. Thank you very much for listening. Again, I'm Dan, and you'll find us at the booth if you want to have further discussions.
Fantastic. Thank you, Dan. Now we have Dean Fraser, founder and CEO of Brickfloor.
Welcome everybody, my name is Dean Fraser, I'm the founder and CEO of Brickfloor. The opportunity today is to invest into the world's first smart residential property fund manager. As you'll know, owning property in Australia is a great Australian dream. It gives you financial security. 51% of people's net wealth is tied up in residential property. It also gives people emotional security. Your home is your castle. Australians have a total of $9 trillion of capital invested into the residential property market. That's over 3 times more capital in the resi market compared to all listed companies combined. But while property can be the great Australian dream, it can also be an absolute nightmare. If you have kids, it takes over 9 years for a millennial to save for their first home deposit, which is ridiculous. If you've sold a home before, you'll appreciate that the selling process is one of the most stressful processes in one's life, up there with death and divorce. And if you've ever upsized or downsized before, the decision around do I buy my next home first and then do I sell, or do I sell my current home first and then buy, is a perennial dilemma. Brickfloor has created 2 market-first and unique products that remove selling stress and help with the savings journey for a millennial or a Zoomer, while at the same time creating a very high-performing residential property fund. We have a home deposit saver app that allows a millennial to save faster for their first home deposit by investing into a portfolio of great Aussie homes. We also have a market price guarantee product, which is an upfront commitment that we make to a home seller that's locked in at the start of their sale campaign, so they have absolute peace of mind that the home is guaranteed to sell. That market price guarantee product provides properties into our smart property fund. The home deposit saver app, as well as other investors, provide capital to support those home purchases. And ultimately, we're building a large-scale, smart residential property fund, which I'll touch on. So in relation to our home deposit saver app, it allows a millennial to get on the property ladder in 9 minutes, not 9 years. They invest into a portfolio of great Aussie homes that we've built to date. There are no minimum investments, and the millennial can access their funds as and when they need those funds. There are 5 million millennials in Australia struggling to get on the property ladder. 80% of those, or 4 million millennials, are actively saving for their first home deposit. On average, they have $33,000 of cash sitting at the bank looking to save for their first home deposit. So that's $130 billion of capital that millennials have cash at bank actively looking for first home ownership and that we're looking to target. Our second core product is called a market price guarantee. It's a market price for your home before you even list it. Imagine if you could get that. Well, you can. Our offer is based on 50 data points of information that we use to come up with an offer on the home. We anchor our offer to the bottom quartile of evaluation range that we come up with. So we're buying homes at conservative prices into our smart property fund that I mentioned. We buy roughly 1 in 3 homes into our property fund at the conservative prices I mentioned, and we charge a 2% sale guarantee fee to a home seller for the certainty and peace of mind that they achieve through our market price guarantee product. We've had significant market traction since launching into market in February 19. We've put out over $170 million worth of offers into market. We've converted 23% of serious sellers into customers. So we know home sellers love our product. We make $24,000 revenue per customer at a cost of less than $1,000 to acquire that customer. So our unit economics are super strong at around about $23,000 gross margin per customer. We've received 5 National Property Technology Awards over the last couple of years. We were named Best PropTech Platform of the Year last year, Most Innovative PropTech of the Year in Australia last year as well as this year. And we've had significant channel partner engagement, which indicates that there is a real demand, which we know, for our products. Westpac, which I'll touch on, realestate.com, Stockland and Connective are 4 key partners for us. We're about to launch a new home loan product in market with Westpac. It will combine our sale guarantee or our market price guarantee with a competitive home loan, effectively a buy now, sell later home loan product allowing a buyer to buy safely before they've sold. In market, 90% of people would prefer to buy first if it was safe to do so, and our market price guarantee makes it safe to buy first. At the moment, 75% of the market will actually sell first until now. Westpac will provide us with a pipeline of opportunities of customers at zero cost to acquire those customers. The Brickfloor Smart Property Fund has outperformed the general property market by 20% over the last 2 years. So even though the Aussie resi market hasn't had a really strong performance over the last few years, we've had even stronger performance. Why is that, and why do we claim to be a smart property fund? Well, we buy homes at smart prices. So effectively, we're locking in a reserve price for a home seller that we're very comfortable with, and also the seller is comfortable to lock that price in as well. We buy better homes. We're focusing on established dwellings in Australia within 50 k's radius of the Melbourne CBD and Sydney and Brisbane CBDs. Our fund is a leveraged investment product, so you're getting the benefit of leverage in that property fund. And uniquely, our property fund has 3 sources of income. We have capital growth and rental yield, like most property funds would have, or if you've got properties yourselves, you'll have those. But we also get a kicker coming into our model through our 2% market price guarantee fee that flows into the fund when the fund buys the home, and when the home sells to a third party for more than what we've offered, we still charge our 2% fee, but that's split between the property fund and the PropTech fund manager. But we're not here to talk about the PropTech fund today. We're talking about the smart Brickfloor fund manager. It has 5 revenue streams, so quite uniquely. We have 5 revenue streams. A fund manager fee of 1.25% per annum based on funds under management, a performance fee of 20%. If we beat the CoreLogic index, we take 20% of any excess returns. We charge the market price guarantee fees of 2% that I mentioned. Our home deposit saver app has a $30 per annum per user fee attached to it, and there's also significant opportunity to charge loan origination fees to the bank partners that we're working with around the buy now, sell later home loan product. The Brickfloor Fund Manager is a $50 million per annum revenue opportunity with 70% EBIT margins. Our 5-year targets are $2.6 billion of funds under management, which is small in relation to the amount of capital that millennials are looking to deploy into the market of $130 billion. 1,800 homes owned in our property fund, 260,000 app users investing on average $10,000 per user, and a $350 million business valuation for our PropTech fund manager. That's based on 70% EBIT margins on the $50 million revenue and a 10 times multiple. But we think the market size for us could be significantly bigger. Looking at our market price guarantee fee revenue and our management fee revenue, the total serviceable obtainable market is around $290 million per annum. So a very, very big business potentially. We've got a great leadership team that I'm privileged to work with. Matthew Turner, our head of property, ex-JLL and ex-NAB. Troy McKenna, our CMO, ex-Mars, ex-Asahi. Matthew Quinn was the CEO of Stocklands for 13 years, very highly regarded. He's on our advisory panel. Saul Eastlake, very well known to many in Australia, and Ken Atchison, a prolific asset consultant. Capital raising, we're raising $2 to $5 million at a pre-money valuation of $30 to $40 million, subject to investor feedback. We've already raised $6 million in our Series A about 3 years ago at a $21 million valuation. That was supported by some major institutional investors, including a Big Four bank. There's clear 10 times money potential on our $35 million midpoint valuation based on our 5-year projections. And you can see we're looking at sort of investing our funds across headcount growth in the main, but also product development and marketing. So that's it. In summary, we're raising $2 to $5 million of equity for our prop tech fund manager. It's proven market traction, a unique and patented model, large-scale partners, and 10x returns potential. Thank you very much.
Thank you so much, Dean. Now we have a short afternoon break, so feel free to go and help yourself to a delicious tart, and we'll see you after the break. Hello? Hi, everyone. Please start making your way back into the presentation room for the panel session, which will be on blockchain transformations. Please start making your way into the presentation hall. We have a fantastic panel session up next on blockchain transformations. We'll be starting the next panel session in the next minute, so please make your way into the presentation hall. We'll have a panel session on blockchain transformations. Okay, welcome back, everyone. So we now have another exciting panel session on blockchain transformations. Here today we've got Nathan van der Bosch from Consensus Group Australia, Zachary Liu from Binance, Lucy Lin from Forest Lin, and Sydney McDessie from Wholesale Investor.
Hi everyone, nice to see you all. Thank you so much for attending. Really excited here to be at Wholesale Investor today as part of the Venture and Capital Day. We've got a fantastic panel coming up today. We'll be talking about blockchain transformations. There's been a lot that's happened in the last 5 years, 10 years in terms of what's happening, and I'd love to talk a little bit about what's happened in the past, now, and also have the future of where our industry is going as well. I'm really pleased to be here. We've got an amazing panel session today. I'd like to introduce myself first. My name's Lucy. I'm the founder and the CMO of Forest Lin. It's a blockchain and Web3 marketing consultancy. I'm joined by Zach from Binance as well. We've got Nathan from Consensus Group. We have Nakib from Mahaba, and we have Sydney from Wholesale Investor. Just get everyone to settle in the session, and then we'll get started very soon. But I think what we'll do up front is to give a quick 2-minute introduction to who we are, what we do, so it gives you a little bit more flavour in terms of who we are. But it is a very varied panel that we have here today. We've got a marketer, we've got a risk manager, we've got a behavioural economist, we have an venture capitalist perspective, and then we also have a software engineer builder. So you're going to get a whole flavour of blockchain transformation today, and hopefully lots of different perspectives. So Zach, would you like to give us a 2-minute intro to who you are and how did you come to this space?
Sure thing. Good afternoon, everyone. My name is Zachary Liu. I oversee the risk management for Binance Australia, including the newly launched derivative products. So I joined Binance back in January, and it's been, 6 months? Well, definitely do not feel like 6 months because everyone's been seeing that working in crypto is walking the dog year. Testified by the things we've achieved and delivered, and along with the challenges and wins we got. Before that, I spent 7-8 years in Macquarie Banking Group. Apart from that, being in Westpac, Equifax, and one of the financial service institutions called Link Market Services as well. And it's really my pleasure to be here, talk with like-minded people, despite the areas of focus will be different, which will sort of bring in the diversities of the topics and insights as well. That'll be me. Thank you.
Great. Welcome to the panel. Nathan, would you like to give us a quick intro?
Yes, my name is Nathan. I'm a behavioural economist. I work with Consensus Group. I'm the CEO and founder. So a behavioural economist, I often get the question, what does that mean? So I describe it in terms of bringing psychology and economics together. So I help people understand behaviour patterns and behaviour formations. So I spend my day writing the strategy documents associated with behavioural economics, network adoption, network sustainability. I've been involved in blockchain and cryptocurrencies for almost 10 years now, so I've been doing this for a long time. And it's something that I enjoy. So that's what I do in terms of my background.
Fab. Sydney, would you like to give us a quick background to yourself as well?
Sure. So I'm from Wholesale Investor, and putting on events like this throughout the country, here in UK, Singapore. I lead the community at Wholesale Investor, and a big part of that role is facilitating connections between investors and founders, understanding mega trends, where we're heading, what investors are interested in, and how founders can communicate that value proposition across to investors too. So finger on the pulse and following trends. Web3 has been a big part of that. Understanding how to communicate the value proposition of a lot of these blockchain companies, technologies, and everything that Web3 encapsulates is a big part of what I do, and I hope to enlighten a lot of people here today. Thank you.
Fabulous. And then finally, Nakib.
My name is Nakib. I'm the founder and CEO of Marhaba DeFi Network.
Marhaba DeFi is one of the first ecosystem targeting the Islamic finance industry, which is a $3 trillion industry. We are the first movers of the space, building a suite of applications ranging from decentralized finance, GameFi, and Web3. My background is technology. I have been 15 years into technology, working for companies like Huawei and Ericsson, and traveled like half of the globe, delivering solutions across them. My last job before I moved into crypto into full-time was of a business architect working in data analytics, data mining, and customer journey. So blockchain happened naturally as a transformation from digital transformation technologies heading towards the industry 4.0. So that's where I started working into enterprise blockchain, and then gradually DeFi and financial applications were the last thing that came up. So that's where Marhaba was born, when I realized that this industry lacks products that addresses the faith-based communities of the world.
Fab. All right, and so as I said, I'm from a marketing background. I've worked about 18 years in various organizations, American Express, AMP, Qantas, Heath Technologies, spanning around the world, lived about 5 different countries, so very passionate about customer, go-to-market strategies, and being a global citizen. I'm very passionate about diversity as well, and also helping a lot of all the founders and projects raise into the next scaling projects. So first and foremost, I'd love to hear about your perspectives in the last 5 years. I know that there's been a lot of change that's happened in our industry. I started in blockchain consulting since about 2017, and I've seen a lot that's been different between now and then. And I'd love to hear your perspective in terms of how you think blockchain tech has changed. So Nathan, do you want to let us know some perspectives?
Yeah, so when I first got involved in blockchain and cryptocurrencies, it was Bitcoin, because that's all there was at the time. There was a lot of focus on technology, elliptical curve algorithms, nonce calculations, prime number factoring, all of the technology and the underpinnings of the technology, because it was new. I've noticed over the years, especially accelerating now, we've moved from a technology focus. Marketing became part of the strategy as well for a number of years. But more recently, and what I'm dealing with now, is more the business focus. What problems is the blockchain solving? What impact are we removing from the users in the network? What business value are we actually creating? The fact that a blockchain sits underneath, the actual end user may never actually see it. The fact that it does what it needs to do is important to those that build it, but to the end user, they may be even oblivious to it. So I've seen a significant movement from a technology focus through to marketing and a lot of the hype that came through the ICO years. And then more recently now, it's the business of blockchain and the economics that go with that.
Yeah. And then from that, what about from a risk perspective? Have you seen a lot of changes in the last 5 years as well, Zach?
Absolutely. I think if we look at back 5 years, Binance just passed its 5 years birthday, but from risk management or from my personal perspective, I think 2 biggest change definitely will happen is, one is the process change, one is the technology change. If you look at 5 years back, there was a lot of unregulated platforms. There was a lot of manual in terms of KYC onboarding process. Throughout the process, you've seen the technology involved. You have more automated tools. You have more sort of interactive data to be able to verify your entity digitally, faster, and more transparent. So really, from the risk management perspective, we are urging more technologies to be able to interact with data in a more transparent, robust way. And that's where we talk about the transformation, talk about the technologies and whatnot, based on we need to protect the consumers, we need to protect the data, and we need to ensure that there's no gap in terms of between the process and technologies. And that's what I've seen in the past 5 years.
Yeah. And, I remember signing up to all these exchanges, you have to put up your name and your ID, and has that changed now? Or?
Someone might complain that still be the case for some, certain user type, especially, companies or non-executive entities. But as I mentioned before, we're working tirelessly to be able to integrate with the data tool, with the automatic tool, again, to both sort of boost the user's experience while mitigating any risk.
What about you, Sydney? Have you seen lots of sentiments with the investors in the last 5 years as well?
Absolutely. So I think when it first started out, we saw it as a novel solution to what really is an ancient problem of corrupted power, right? And decentralizing and democratizing networks across sectors. And it was really privy to those who were technologically competent, mainly, and I guess philosophically very much aligned with what this entire industry represents. Now, from an investment standpoint, we see investors becoming more savvy, understanding the underlying utility, understanding that it's not just novel solutions and it's not a novel product, that it's going to have longevity. And that's really happening because we're seeing the real world connect with this technology and we're seeing real outcomes. And that's completely changing how investors see this as an investment vehicle. So the more they're coming to understand what blockchain technology can offer compared to standard technologies that were the industry standards up until now, I think the more capital we'll see flowing into the industry and the more smart money flowing in as well. And I look forward to seeing that continue.
Yeah. And Nakeeb, you're from a building perspective. Has technology changed a lot, you think, in your last 5 years for you?
Absolutely. That's how the transformation is happening. As I said, I started my journey from enterprise blockchain, and financial was never my domain. I've never studied finance as well in my education, but transforming into DeFi-based web use cases was a natural transition that happened. Like even the Gartner prediction cycle, probably Nathan would know that. That predicted the shift in enterprise blockchain and every bank and institutions using underlying infrastructure as blockchain in the next 3 to 4 years, but that did not happen. And because of the boom of DeFi, everybody started moving into DeFi. And that's where the transformations happened. And like Zach said about streamlining the onboarding as well on the use cases. So that's, the next level of onboarding users would be probably zero knowledge proof based IDs, where you have NFPs, non-fungible profiles. You don't really have to do the pain that Lucy you're talking about. So you have one unique ID across chains that would be identified without revealing sensitive data. So that's how technology is moving and migrating, and that's where we see things going ahead.
And I'm really excited because I think it is moving in the right direction, from 5 years ago to now. In your opinion, panel, what are some behaviour drivers that you think we can to increase even more adoption in our space that is happening at the moment? So maybe Nathan, do you want to kick us off?
Certainly. So one thing that I've pointed out in one of the articles I published on Medium is that blockchains are unique economic institutions. We've been used to marketplaces, exchanges, which are centralised, corporations, governments, all centralised. The economics and the behavioural economics of a blockchain and the blockchain economy, the behaviour is unique. So at the moment, what I'm seeing is a transition or an explosion of needs and information around understanding how blockchains actually work, which are both distributed and decentralised, and they are unique economic institutions. So I see that as a macro trend in terms of the way in which we approach our projects, with the way we approach implementation, and the way we design the reward and incentive schemas. So that's what I'm seeing.
Fab. And you as well, Zach? Do you see a lot of any hindrance in terms of risk and adoption?
I think I can't agree more with what Nathan said in terms of getting the fundamental knowledge right to understand what is blockchain, what is Web3, what do you need. So in the real practice cases, that's what user will need to know as well, from both the benefit front and also the risk front as well. So again, from the risk perspective, I am urging more and more user cases to be able to provide insight to the regulators, industry bodies, the government, to be able to have a clearer guidelines, which is again crucial for the development of this industry. So that's what I say is the most important part, not only just from the regulator's perspective, again, because it's a two-way street where user cases will positively impact the regulators, and with having a clearer guidelines by the regulators will definitely facilitate the users' growth as well and adoption.
I think as you mentioned here, it's like I think education is incredibly important. Like just making sure that people understand. Would the education be a huge understanding for the investor community too?
Extremely so. People are very hungry to understand the intricacies of Web3. And we've seen that with the content we put out and the responses from people on the other side watching our content. Extremely happy that it's being broken down in layman terms because they want to participate, but there are bridges in terms of knowledge that it's on us as pioneers, all of us on this panel and everyone out there today presenting, to really educate our potential users as much as we actually sell to them and market to them. And so that's important. The other thing I think is a key behavioral driver is the fallibilities that continually are exposed with centralized decision matrices that we've seen worldwide. I'm of a Lebanese background, and if I didn't know this, but Lebanon's the number 3 in terms of blockchain talent worldwide, and I was thinking, why? Well, our banks have dissolved and so has our government, and the people are looking for solutions. And that's always going to be a driver in this space. It was the initial driver and will continue to be a driver when we see these structures break down. And we unveil the decision matrix that has caused these problems. So that's going to continue. And then the other thing is when we connect the maxis and the purists on one side and the traditional on the other side, and we build technologies and infrastructures that cater to both a centralized and decentralized format. That mass market in between, they're very eager to participate, and they just want it to be a bit easier for their onboarding, as the first 2 panelists have told us today. So
yeah, and I agree with you. And I think part of why it's so difficult is because the technology is not there. So Nikki, do you have any insights to how we can make technology easier for mass adoption? You'd say.
Regarding the education, I have a difference of opinion over there because education is important for the builders, but not for the people using them. For example, if we are using applications on the internet, we really don't care what protocols are being exchanged in the background, how many packet losses are happening when data is exchanged. Nobody really cares. The work has to be done. It should solve the purpose for which the applications are built. And unless and until the builders reach up to the place where we can build applications solving purpose without any hindrances, we cannot have the adoption going ahead. We cannot. That's one of the reasons why enterprises are not adopting blockchain-based solutions. They're still experimenting with it. IBM, Deloitte, all of these companies, they invested a lot into blockchain facilities, but they didn't work. IBM dissolved their entire blockchain team except some few members remaining just for the experimentation and the research. So the reason is that there is still complications over there. I mean, last year people were still talking about interoperability as a challenge, but now there are solutions coming up about that. Even though there are a lot of bad news about things getting manipulated and misused as well. So these are fundamental technological challenges. It's not about education. Education is there for the builders. For the people using it, they need the applications to deliver what they're intended to. That's it. So that's like my 2 cents.
Yeah.
2 Satoshis.
2 Satoshis. Did you want to add something? I think you had your microphone up.
Well, I think that's a really good point that Q mentioned in terms of education to the builders of protocols rather than to the general user base. Again, I might have different opinions because I've gone through that sort of adoptions for myself. 4 or 5 years ago, I got into cryptos, started learning the protocol myself. Being both someone now that you probably going to be in the industry in the future, and also as a general public, right? I can see the benefit for the users to be able to be educated on even the protocols or logic behind the technologies, while sort of involving themselves to be whether they want to be part of it, they want to build it, or they want to simply leave the industries on their free will. So there's a benefit in different sort of aspects I can see. I don't disagree with what Niku just said in terms of education is always key to both the general users and also the builders of protocols.
Sydney?
Yeah, so agree with you on the builder aspect. I disagree on the end user. I'll tell you why.
Got a debate here.
We're in a space that's very much community governance, and when you talk about Web3, there's a lot of aspects to it, right? So there's multifaceted.
Where is Web3?
Yeah, exactly. So I'm of the opinion that the lack of education in the Web2 realm led to the birth of Web3. We didn't know what was happening with our data. We didn't know what was happening with these centralized servers. And only upon learning it, once these institutions failed, essentially, or not even failed, but revealed what was happening in the back, did we really have a movement towards these new age institutions that we're building now. So I agree that the builders, the education's there because they'll be building the infrastructure.
When
and
I
then
mean by builders, it's not just the technology guys, it's about everybody working towards building those products.
Correct.
They can be from the marketing team, they can be from the content creation team, they can be the technologists, coders, everybody. But on this side, the majority of the people are the users.
yeah, and I think that the users need to keep them in check.
Yeah.
So I think they need to understand it to an extent, and especially if there's a bit of community governance in play. So I think, yeah, a bit of both worlds, but I definitely think the users have a duty to keep these new companies in check if we really want to see a change in this space.
Okay, I'm going to change tack just a little bit. We've got many projects here. It's facing a bit of challenges. And there's many black swan events at the moment, like Terra Luna. I've got Celsius collapsing, etc. I'm from a marketing background. I'm passionate about the consumer. How do we gain trust in this space from all these things that's happening? What do you think, Nathan?
That's an excellent question, and I've actually thought about it in depth myself, given that blockchains are defined to be truth machines with transparency. One of the things I'm seeing at the moment is an increase in the number of inquiries around DAOs, and they've come across my desk a lot more recently and frequently. One thing I've proposed for them to look at very cautiously and carefully is not only the governance protocols, but also the risk protocols, which Zachary knows a lot about. They often forget about that. The other thing that I'm proposing is a hybridized type models around governance and voting. So predominantly the model for governance would be decentralized and blockchain based, but in black swan or grey swan events that sit outside the regular Gaussian distribution and they become outliers, that a centralized authority has the ability to step in and prevent death spirals or bank run equivalents. So that's the type of model I've proposed, which is more hybrid-based.
Interesting. Zach?
Well, two things. One, for what Nathan mentioned in terms of DAOs, I think before the panel we exchanged thought in terms of applying boundaries, and we need to be really careful in terms of the self-governing rules for DAOs. Well, we need to explore options to apply additional controls against how you allocate the powers of decisions, how you make decisions out of it. I personally, keen to explore options over there. Two, to answer Lucy's questions, what the thing is, we sort of need to take a step back, as we always. Like, what do you see? What do you define the user's success? What do you define the business success? And then again, it's a balance game to balance between the users and the companies, and hopefully we can find that sort of balance in between, and that's where the success will come in.
A lot of work cut out for you, mate, in these these events.
My answer is very simple. Apply proper risk management to prevent such things to happen.
Yeah, I think compliance is going to be key moving forward if it's not already. How do you gain trust?
Well, I'm not going to talk on risk management because out of my depth there completely. But in terms of Terra Luna, look, from someone who just watched from the sidelines, I was forced to learn what a stablecoin is and how it actually should operate. Right. So these events enlightened me. You understand. Okay, you have 3 different options with a stablecoin. You're backed by real assets. If you just want to be backed by cryptocurrencies, you better over-collateralize. Me and Nathan were talking about that earlier, just to take into account volatility. And then you've got the third option, which is an algorithmic stablecoin, which is what the Terra Luna project was about. And we all saw what happened with that. And now we need to understand why that happened with that and how that can happen again. And I think the entire market were enlightened on, well, wait a second, you actually have to dig deeper. You have to look past the hype for a second, understand what it is you're dealing with, what options you have, and where it can go wrong. And this was a harsh lesson that really taught all of us the need for that in-depth research before jumping in. And that's all a consumer can really offer at this point.
Yeah. And yourself, Nakeem, gaining trust from a tech perspective?
So that's more of a financial event that happened. So black swan events are financial events. So this will happen when blockchain, what it's created for, or Bitcoin, or any cryptocurrencies that are created for is not handled the way they should be. So they are decentralized in a way. They are supposed to skip barriers and skip custodian methods. So if that does not happen, so it's definitely going to face a risk. For example, you're supposed to, the reason why people move from fiat to cryptocurrencies is to have an ownership of their money. But what people usually do is that they convert it from fiat to crypto and put it in a crypto bank, which is an exchange. So again, it's any exchange. So that does not solve the purpose. So when you give the controls to others, then the events that happen in a fiat world will happen to the crypto world as well.
Yeah, just looking at the time, probably have one more question to go. And that's going to be looking at the future. So right now we're in an environment of rising inflation, tightening of monetary policy, lower market confidence as well. And from a broader economic downturn impact perspective, how hard do you think it's going to be for us to raise money in the future? And also, where do you think this industry is also heading? Nathan?
Yeah, sure. So the emergent trends that I'm seeing personally, certainly a lot of metaverse trends and the NFTs that go around that are associated with that. I'm also seeing a lot of interest in DAOs, which I'm urging certainly adventure, but also caution, especially when it comes to risk mitigation and things like capital reserves and the regulation to go on with that. So the two big trends that I'm seeing at the moment, definitely metaverse trends and the NFTs, definitely DAOs, and automating a lot of the governance protocols and hopefully some of the risk mitigation ones as well. I think that there's still a number of years for that to develop. I think eventually DAOs will spawn things which we call autonomous economic agents, which again are far more advanced than smart contracts. These are agents that can act based upon a set of protocols and programming, but can also adapt and learn. So I see that developing as well.
Fab. Lots of exciting things coming up. Zach, what do you think?
Well, for me, if I look ahead 3 years or 3 steps, I'm really keen to see the technologies or blockchain technologies to be utilizing four main areas. One is the consumer protections. I like to see more and more practical user cases to be able to apply either the consumer protection rules or the consumer protection process for the respective service provider. The second is a payment. It always comes down to utilities. How are you gonna make sure the blockchain technologies, digital assets to be used within the payment space? That's always the key point. The third is the cybersecurities and data protection. Again, by leveraging the blockchain technologies, by using the decentralized concept to be able to distribute the ownership of each and every sort of data or cyber to mitigate such a risk. The last but not least is my area, fraud and the money laundering. So how are we gonna, again, leverage the technologies to be able to promote the automatic tools to pick up the triggers, to perform the risk assessment, and also to prevent the financial crime to happen.
That's going to be a massive area, I think, financial
It's
crime.
$1 million, way over there.
Nate, what do you think, Sydney, in terms of from an investment perspective, the future?
Sure. So my thesis is very simple. After speaking to multiple investors and VCs in the space, I try to understand, okay, what do you like? What do you see? They're becoming a lot smarter. They understand the technology a lot better. They're now comparing standard database technology and and centralized servers to distributed ledger technology and decentralized servers. And they're applying that across each sector and seeing where it makes sense to use this technology. And when there's that exchange of data between multiple parties, exchange of information between multiple parties, a need for transparency, immutability, and security, and an element of autonomy, they're saying, well, blockchain can work here. So we're looking at logistics, we're looking at insurance, we're looking at obviously DeFi, which everybody is understanding now. And we're seeing obvious economic benefits and operational benefits with blockchain. So that's what the investors are looking at. And then I'm excited about, and I'll say this and then I'll pass it on to you straight away, I'm excited about the connection of real-world data on-chain, so using math-based trust and smart contracts interacting with real-world data and seeing just how far we can go with that. That's what I'm excited about.
Fabulous. What about you, Nakeem? What do you see?
I tend to agree to everything that each of you mentioned. Personally, I'm absolutely pumped up about the potential of DeFi and DAOs in particular, and how impact-based DAOs can be created for impact-based investments. So traditional business owners, small-scale industries can be benefited with the advantage of investment DAOs or borderless financing that blockchain provides in the future.
Yeah, and we are coming to a slower, economy, and I actually think it's really exciting because I think there's going to be a lot of great projects that's going to come out during this time. I think people are building the most during downturns, and it's going to be the legitimate people that will stay in the industry who will continue to survive and thrive. And another thing that I will mention as well that I see is that 4 years ago I went to Blockchain Week as part of Consensus in New York, 2018, and then I went back to a Consensus, the same event in Austin last month. And I see there's a lot more people in the space, like various people, talking about diversity of people from different skill sets, industries, ages, women, and I'm really excited. And people here, people here I've never seen from 5 years ago to 3 years ago to now. And I think there's a lot more interest in this space. I think there's a lot more mass adoption, which I think is really exciting. And as this, I think, technology becomes a lot more mature, I think it's just going to be a lot more ubiquitous as well. So thank you so much, panel, for your amazing insights. And thank you so much. Let's give a clap for everybody. And thank you for your time for attending.
Fantastic. Thank you so much for everyone to come in and giving you some really good insights. So next up, we have one of our key sponsors here today, Lisa Wade from DigitalX. How are you?
Hey everyone, thank you very much for having me here. I know we've probably done this a few times today, but I do want to acknowledge the traditional owners of the land, the Gadigal people of the Eora Nation, and elders past, present and future, largely because I don't often get to speak in Sydney and I know how to say that one. And also for me, it's just a really important moment at the beginning of any talk that I do, just to acknowledge where I am and be grateful to anyone who I'm speaking with. Bit of a hard act to follow, the transformation panel and blockchain transformations, especially when I think what I need to talk about today really is, what's happening and what my point of view as a trader and a CEO of a listed company is in such what we could call unprecedented times, right? I could go through the laundry list of all of the economic data that's been out and coming out. We're looking, staring down the barrel of a potential recession print on Friday at the back end of record inflation, which is in my lifetime a stagflation scenario that I've certainly never lived through. And I was really thinking about that and the origins of what we're investing in and what we're about here today, which really is, investing in this transformation and what we see as the greatest economic opportunity of our generation, which is this shift into Web3. And I know that we have been in unprecedented free money with the low interest rates. And for a lot of us here, it's new territory with raising interest rates. the amount of capital in the market is falling. How do we navigate as founders, as investors, this new landscape of less money and probably a lot more pressure to create returns? We've got companies going broke. And obviously, for those of us who are a little bit older, it starts to remind us of the GFC. And there's two parts to that which I find truly inspiring. There's obviously the fear factor, and we'll talk about fear and greed a little bit further down. But really, when you're looking at the opportunity, there's two things that I really sort of hang my hat on when looking at this. The first is that during the GFC, we have sort of parallel markets in the early days of the carbon markets, and you'll notice our little stand out there. We've got a whole lot of trees, and at DigitalX, we're a big believer in carbon and its role it has to play in this transition to a low carbon economy. Back in the day of the GFC, we were on the precipice of responsible investment becoming mainstream, and the GFC actually stopped that in its tracks. And I hear now, and I see it, and I see the fear in the markets that people really are fearful that this transition to Web3 will be stopped in its tracks with the way the market conditions are unfolding, a lot of the bankruptcies that we're seeing. And actually, what happened behind the scenes during that time in the GFC was a lot of really passionate people just kept on keeping on in responsible investment. None of us could get jobs. None of us knew how we were going to pay our rent. However, that movement kept going and people kept building. And I think that that is one of the huge opportunities we have right here, right now, especially when thinking about venture investments, is to just plug out of the noise and really look at what is being built and that financial infrastructure, which brings me to the second part of why we're standing here today. Because actually, the shoulders of the giant that we're standing on, Bitcoin, and a lot of the innovations that have happened that have sprung up from Bitcoin were actually created as a direct result of the global financial crisis. It's really being built by the young people who saw their parents going broke, who saw finance unravel. Like we literally, all of us old people here, we literally broke finance in the GFC. And people stopped believing in our financial system. And there's a whole generation of people out there that are rebuilding those financial rails and truly believe in what we call the transition to Web3. And they will not stop building during whatever financial crisis, whatever stagflation, whatever is coming down the pipes. Bitcoin may go to 3,000, I don't know. What I do know is that people will keep building the transition to Web3 and people should keep investing in it because what we're building are the new financial rails of the future, which can absolutely transform finance and transform the way we do business. And I think what you'll see is people will keep on building. And that's what we're really looking to invest in. We had a really great presentation earlier where a colleague, or I guess competitor, Heath, explained what Web3 is to everybody. So I'm just assuming a general base knowledge here. And what I thought I'd do now is run through some of the ways we at DigitalX, as investors, as corporate, and as people with Bitcoin on our balance sheet are actually looking at this new investment opportunity. Now, what I will say is we are listed and we're in a shareholder blackout right now, so I can't talk too much about the balance sheet. You've seen some of what we're doing out there with the collaboration with Beta Carbon. As a company, we have measured the environmental impact of our Bitcoin and we're beginning to support the industry by investing our carbon spend into some innovations like that. I won't get too stuck down that rabbit hole. As a fund, which I can speak to a lot, we manage a portfolio of companies and or tokens, I should say, of what we see as the real builders of the future. We do deep analysis. We understand this business. We understand these markets. And we are investing in what we call the financial rails of the future. Well, now what does that actually mean? Now, we talked about Web3. Inside of Web3 is this transition to, as we call the new financial rails. The easiest way I explain it, just not to contradict Heath, but just to break it down, is actually yesterday when I shopped online from my couch, I shopped by myself and I used my credit card. Tomorrow, I will shop with friends inside of a virtual store, and we'll pay with infrastructure like stable coins and central bank digital currencies. Now, those things that need to get built actually are a huge investment opportunity when you look at what they need to sit on top of to be built. What are we excited about right now? We're excited about things like, and this is going to sound like buzzword bingo, so apologies. Well, hopefully not to this crowd, hopefully you're all across this. Things like ZK roll-ups. Now, why are they important? And ZK EVMs. Technology like that is about data aggregation and speeding up how fast these rails work so that everything I'm talking about can actually be done on a real-world scale. These markets are nascent. We haven't seen the shift yet. From my point of view, the true shift is the tokenization of real assets and the investable opportunity on that. So what does that require? That requires data validation, that requires data efficiency, that requires better forms of digital identity. You know, we're still in the world where even if I pay with a stable coin, I'm looking at a 1-week turnaround to do the KYC and the AML because we still don't have all the infrastructure pieces that we need. There's also a whole lot of work that we do around, I'm running out of time, so I'll skip all of that if anyone has questions. And then there's a whole lot of work being done in Australia, which I'm really proud of, and everybody should know about the Digital Finance CRC with the Australian government, and a whole lot of institutions like Trovio, who were on stage with us earlier, ourselves, Macquarie Bank, and the Reserve Bank of Australia. And what do we do inside of that research group? We actually look at market scale infrastructure builds for Australia where it's too big for all of us to operate alone and how we collaborate together. So in this time of uncertainty, there's a whole lot of us that even in unprecedented, uncertain investment markets are still making that investment to make sure that Australia is a leader of these new financial rails and we can step into this emerging future, not only in good shape, but with profitable investment opportunities for Australians, and especially, we spoke about it earlier and touched on it, is building investment grade opportunities for Australian institutions to be able to participate in this. As I said, it's the greatest economic opportunity of our generation, and what we're looking at is how can Australians and Australia be part of that and benefit from it. I'm hugely excited. We can watch Bitcoin price go up and down, and we can let fear really rule our world or right now, or we can actually look at it on a risk-reward equation, make sensible and sound investments. Infrastructure, picks and shovels, has always been a good investment, and as an investor, I'm hugely excited about how we can participate in that. And then the big question is, can we all rally together and build institutional-grade investment quality so that all of our superannuation money, which is everybody in this room, be able to participate in that investment opportunity. And for me, that's where the big question mark is, and that's the work that really needs to be done. It's okay for me to run a venture fund and invest in ventures off my balance sheet and support the ecosystem. You know, we're a tiny micro cap, but if we can all work together and invest together in Australia in this economic opportunity, then I think we'll all be better off. And I think that's what days like today are really about, is actually all speaking together, all collaborating. All of our competitors are here. I think it's great because we get to talk on a different level about what we want to bring to the world, not about, you know, who we're competing against. You know, if we want to go far, if we want to go fast, we have to go alone. If we want to go far, we go together. And for me, that's what today is really about. So thank you, everybody. I only went 10 seconds. Oh, no, actually, I've got 7 seconds left. So I can say thank you very much. And the next panel will be up now. Thank you.
Thank you so much, Lisa. Next up, we have William Wu, founder and co-CEO of Catheon Gaming.
Our guy who created that needs to be nominated for the Oscars, remind me. No, really great to meet you guys. In terms of... Yeah, so look, we're the company I'm the co-CEO and founder of is Catheon Gaming. We are a blockchain gaming company. Obviously, I won't spend too much time describing what blockchain gaming is, but for us, this is the next era of gaming. A lot of people talk about the different reasons why blockchain gaming is superior to traditional gaming. Obviously, the fact that you can actually own assets within the game for the first time in history is very, very powerful. The fact that you can actually, for the first time, monetize your time, so sell your time to someone else across borders is also very powerful. And then the fact that for the first time in history, people can actually be rewarded for their contribution within the game is also very powerful. We are still very early on this blockchain gaming industry revolution. We're pretty much still year one of what will be a 5-year disruption cycle. And so what you do see is a lot of the issues with the first generation of games, right? The games are generally very low entertainment value, very low quality. It just takes a long time to create a game from scratch. So usually AAA games take anywhere from 3 to 4 years to create from scratch. And so what we do is we are looking to change this. So we essentially take a portfolio approach where we go to the Web 2 space. There's already out there an incredible amount of games out there that are high quality, have already launched successfully, have huge amount of users and already generating revenue. And we actually work with these games to bring them to the blockchain. So we create the blockchain version of the game. We launch it into a market that's far more nascent with far lower competition, and use games that we pick out of a big portfolio that are already very, very successful. The company today, we have over 21 different games within our publishing business. What these games do have in common is that these games are all far superior to anything out there in the blockchain gaming space today. A lot of these games have already spent 3-4 years developing. So we don't have any of the development lead time that's actually associated with creating a high quality game. And we can usually get the game to market usually within 3 to 4 months, as opposed to 3 to 4 years trying to build it from scratch. What a lot of these games also have is that in common is that these are very, very high quality games. A lot of them have millions of downloads in the traditional version of the game. They're all very revenue generating, and a lot of them will be the very first game of its genre within the blockchain space, and so be able to have a very, very strong first move advantage. I'll probably skip this one. It's pretty incredible what you can achieve today if you look at the blockchain gaming space. I mean, the financial figures on a single game that does successfully, you're talking about NFT mints in the tens of millions, sometimes the hundreds of millions of dollars. Token market caps in the billions often for the most successful blockchain games. And our view is that a lot of them, whilst they were the first games to come, a lot of them are missing the high quality that required to actually make it a very successful game. So this is an overview of our portfolio. I probably won't go too much about it. But what you will see is that these are very, very high quality game. Our Two World is, for example, the second most popular anime in all of China. Over 1 billion views and 60 million fans. If you look at this, if you take this type of game, compare it with, for example, Sandbox, which right now has 1,000 players per day, but still sits on a market cap of over 4 billion, token market cap of over 4 billion. It's pretty incredible what the results can be if you get the right game and the right approach. So we are raising at each individual game title level. A lot of these games are metaverse games, horror games, shooter games, anime games, sports games. We have a lot of different ones. And I do suggest you check them out on our booth if of interest. So so probably to summarize, We are true believers in blockchain gaming, but we're not doing this the way everyone else is doing it. Trying to build our own games. We're taking games that are proven concepts. They're already out there in the market. They're already very, very successful, even without the blockchain advantages. And we're making them better and putting them into the market in a very short period of time. So that's Catheon Gaming. And thanks everyone for listening.
Fantastic. Thank you, William. Up next, we have Michael Swan, COO of Unido.
Hello folks, thanks for joining. Let me get my deck up. We at Unido are looking to solve what we believe is a very large bottleneck for mainstream adoption, and it is the management of the private key. So if you look at the retail users, the mums and dads, they've got to store a private key, typically done on a thumb drive or their phone. There's plenty of issues there. You might lose your phone, you may have your phone hacked. Whether someone steals the private key or you simply lose it, as everyone knows, the assets are gone. From a corporate perspective, to invest your balance sheet into digital assets, you need real corporate governance around holding those assets. I can't imagine a board is going to put a balance sheet of $1 billion into Bitcoin and have it on a thumb drive in some guy's desk. Unless you're Elon Musk, maybe he wears it around his neck, I don't know. However, we need to manage how individuals can manage their private key, and so we've come up with a solution where we distribute, we have a packaged multi-party computation model algorithm for dividing up the private key and storing the private key on multiple devices. This achieves a few different things. What it allows for is a very high degree of security. So if one device is compromised by a hacker, they can't do much with a third or a quarter or an eighth of a private key. If you lose your device and you can still achieve a voting threshold, you can vote out a device and then vote in a new device. So there's redundancy if you lose your various signing keys. What we've seen is within the market for multi-party computation wallets, or what's typically known as multi-sig, there's very few competitors that offer MPC level security to retail mums and dads. If you take the best known solution, Fireblocks, it's very much targeted at the institution and enterprise level customers. What we are targeting are, from the bottom-up approach, mums and dads, small businesses that have crypto elements and they need controls around redundancy and security of their assets. So to that end, we have developed a wallet. It went live 6 weeks ago based on our MPC signing engine. It's fully developed and we have been running a small marketing campaign through beta testing. The wallet has taken a very exciting user acquisition growth over what is admittedly the last 6 weeks, and our mission is now to raise capital to take the wallet through a digital marketing campaign via socials to get the message out that mums and dads, the retail sector, really do need security around their assets. I think in the next 10 years, we're going to see plenty of examples of people with substantial assets who thought perhaps their will covers their ability to pass on the assets to their kids, for instance, and there's no management of the private key, and of course the assets are lost. There's various reasons that you would want multiple people having a say on assets on a wallet, and we have a packaged wallet that delivers this. It doesn't require any engineering or technical sense. It's a download off Apple Store or Google Play, which makes it hyper scalable. We could have 100 million clients tomorrow. If there was 100 million people who go and click on, the infrastructure is in place for hyper scalability to go to market. The revenue is very much like a Microsoft Office plan. You can have the home or the retail starter where it's a $10 US minimum charge. The transacting fees are a bit higher. This is designed for someone who wants to park some Bitcoin that they've got that's sizable enough to protect. And then we move all the way into the unlimited plans, which is unlimited transacting, API integration. So this is less likely to be individuals transacting, but more subsystems of computers, which is priced at $28.50, typically 50% lower than what Fireblocks would have as a competing product. 5-year projections, looking at next year as we will write off the end of this year and just scale up for our marketing efforts based on people. These are all included as 3 different variances of what the potential users might be, and is included in our pitch deck, which we can distribute to anyone interested. We completed a previous capital raise. As I mentioned, the product has been in development for some time, and we went live 6 weeks ago. The Series A was done last March. We raised 1.4 million US in about 36 hours. The book was 8 times oversubscribed, so a lot of investors got slashed, but it does show the interest for this sort of product. And I guess this is a different class of product when you look at crypto investments, because it's really infrastructure at the end of the day, and it is market agnostic. If people are panicking to sell to stable coins, they need to transact. That's a revenue event. If people are piling in, they're buying new coins, it's a revenue event for the wallet. So either way, up or down, we make money. The new offer, we're looking to raise $1.5 million. The use of proceeds is for a global marketing push. The product is developed, as I said, so the development risk is behind us. This is simple go-to-market, and I would propose to everyone, if you believe there is a space where mums and dads will want to protect their assets they've got and have banking facilities similar to online banking they have today, we believe they will pay for this. They pay for it now. People pay for bank accounts. And this sort of infrastructure is necessary. And as you see more examples of people losing assets or putting assets on exchanges that go illiquid and refuse to do withdrawals, having real self-control over your assets is going to become more and more popular. This is a highly scalable approach. We're not a financial service. It's a software. It's a very lean business model. And at a valuation of pre-money, a touch over 15 million versus an EV of $8 billion for Fireblocks, I'd suggest it's good value. That was not 8 minutes, and I don't have a song or anything for the next 1 minute 30, so I'll leave it there. Anyone who wants to reach out or any questions, we'll be here today, tomorrow and Wednesday, walking around. We can provide you with both our pitch doc, and we did launch a token, a utility token last year, so there's plenty of information on the white paper, and we have our various social groups. We have over 20,000 people on our Telegram and Twitter, as well as we can give data on the user acquisitions to get an idea of what the basis of interest is right now. And I must stress, this is prior to any real marketing approach that we've been able to achieve our position. I'll leave it there. My name's Michael Swan. Come say hi.
Fantastic. Thank you, Michael. Up next, we've got our final panel session of the day. The panel session is going to be on gaming and the rise of play to earn. Here today, we've got Matt Williamson from Collective Shift, Damien Amamu from Doxed Capital, Akasha Rose from Cosmic Champs, Nicholas Ruse from Play to Earn Online Magazine, Limerick Ambalina from Hackanoon, and Lewis Geisen from Catheon Gaming.
Hello, hello. Hello everyone, I'm Damien Amamu from Doxed Capital. I'm really excited about this session, which is about gaming and the rise of play to earn. We've got a fantastic panel lined up here today. We've got people coming in from overseas on Zoom, and we've got people right here in the audience that I'm going to introduce in a minute. And also, I'd like us to have a lot of fun. I'm going to cross later to the audience, so if the audience have got some questions that they might like to ask, just start filing them away and think about them, because we will be coming back to you if we can get the time for, and have a bit of roving mic and get you involved in the discussion as well. So just to kick off though, I'd like to, who would like to start? We'll start with the room. Just the people on Zoom, just hang on. We're going to get to you. We're just going to do some quick intros. So if you'd just like to introduce yourself and just a quick background about, so we can get to know who you are. Thanks.
Yeah, sure. Happy to go first. I'm Lewis Grafton, COO at Catheon Gaming. Catheon Gaming is a blockchain gaming studio. You might have seen our founder speak a few minutes ago as well. So we're building games across many different titles and genres.
Thanks very much, Lewis. And
Lewis.
Matt?
I'm Matt Williamson, Head of Research and Content at Collective Shift. So we are a subscription-based content and research provider focusing on all aspects of crypto, including gaming.
Very interesting. They've just got a stall just out there if you get a chance to go and have a chat to them. Really doing some really interesting stuff. Let's go to Zoom. I'm going to go to Akasha Rose from Cosmic Champs. Akasha, how are you?
Hey, I'm very well, thank you. Yes, I'm growth lead at Cosmic Champs, which is a free-to-play, play and earn mobile real-time strategy battle arena style game. So really excited to be here today.
Lovely to have you here, Akasha. And now Lemark Amberlino, I hope I've said that correctly, from Hackanoon, very exciting place. Tell us about yourself, Lemark.
I'm kind of amazed you said that perfectly on the first try. That might be the first time that's ever happened to me. But as you said, I'm Lemark. I'm from Hackanoon. We're one of the top blockchain and crypto publications on the internet. And we've recently been working with a lot of blockchain gaming companies to help with their content marketing, which is kind of how I got into the space. And on the side, I also am with the team of Ethermore, which is a blockchain RPG focused on story-driven narratives. But yeah, happy to be here and to be part of this discussion.
Lovely to have you, Lemark. And we've also got Nicholas Roos, who's head of content for Play to Earn online magazine. Nicholas, how are you?
I'm doing great. Thank you for having me today, guys. So yeah, I'm Nicholas. I'm head of content for Play to Earn online magazine. It's an online magazine that started end of 2019, and we publish everyday news about chain gaming. So we publish regular news, game guides, and everything about blockchain gaming.
Nicholas, I think we're all jealous of your background there. We're here in a Sydney winter, and we're looking at those pandanus trees is making me feel very envious. So I think we're there, over there with you. Okay, let's get the panel discussion underway and have some fun and learn something. I guess the first question I've got really, it's around definition. We've got this huge merge happening between blockchain on one hand and then traditional gaming on the other. But just for the benefit of the people watching at home or people perhaps who are new to this space, would someone like to tackle this simple question of what is the difference between a traditional computer game and a blockchain play-to-earn game? Who'd like to tackle this one?
I'm happy to take it.
Yep.
Yeah, I mean, the way we see it is the key difference is around ownership and what players are able to do in the game. So by tokenizing the economy and adding NFTs into the game in various forms, players are able to truly own the assets in their game. And that means that they have ownership and the ability to use and transact those both inside and outside of the game. And that's, I think a major innovation in terms of what it allows in terms of interoperability of assets between games and the ability for players to, earn and monetize their time within a game as well.
It's a bit of a new concept, isn't it? Because, I mean, games have had in-game economies for quite some time. Traditional games, you can buy a sword or buy little bits and pieces, but is what you're saying that crypto gives the opportunity for people to potentially buy things or buy an NFT that you can then take outside of the game? Is that correct?
Yeah, and you can not only buy it, which you have always been able to buy things in games, but because you own it, you can also sell it. So rather than a single one-way flow of value from the players to the developers, it's a circular economy of flows where people are able to actually, get back some of the time and money that they have invested into a game.
Okay, we glossed over that word NFT, and I know it's been talked about in some of the other sessions, but just in case someone's just only watching this session, do one of my Zoom people want to just give a quick definition of an NFT? Good luck with that. Who wants to put their hand up?
All right, no one else is speaking, so it might be me, but non-fungible token. So in games, you'll be used to buying things like skins and avatars, and usually those are just things that you own in the game. But blockchain gaming, because it's on the blockchain, it tracks ownership cryptographically, and so it means that ownership of that NFT, like that skin or that avatar that you've used in the game that you've purchased or you've earned through playing the game, you officially own that. So it's something that then you can sell or hold on to. And the beauty of that is that now that rather that time and that money being seen as an expense in gaming, it actually becomes an investment. So over time, people are going to be more willing to sort of invest in those NFTs, especially for like early games and early NFTs, because it's going to be an investment that will grow over time.
Fantastic, thank you very much. Okay, my next question is here. Why should we be excited about this space? What's so special about it? Which games are leading the pack, and which platforms are they being built on? Get us really excited about it. Who wants to talk? Lee Mark?
Yeah, if you don't mind, I'll take that one. So I think there's tons of reasons to be interested in blockchain games, and when I talk to people about it, I often say it's like we're the construction workers at the first ever Disneyland, and we're building the first rides. We don't really know what's going to come out of this yet. We don't know how big it's going to come yet, but it's pretty much certain that this will be the future of the industry. If I were to just choose one thing to try to get you excited about it, is I would say that NFTs and the ability to verify ownership digitally in a decentralized way is definitely the building blocks of the grand vision of the metaverse. That metaverse that we see in Ready Player One or the animes like Sword Art Online, it seems like it's far off in the future. And to get there, we need to start somewhere. And basically, blockchain gaming is where that's going to start, in my opinion.
Now, there was that word that just came out, metaverse. Again, for people who have just come outside, or the newbies, I mean, there's been a lot of talk with Facebook about metaverses. Who wants to give us a quick definition of metaverse? Nicholas?
I can have a go at it, yeah. So, yeah, the metaverse definition, there is still a lot of debate around that, of course. We have an interesting piece on our website, so later if you guys are interested, you can check it out. But one thing that we believe in is, we said it before, is the interoperability. Facebook is developing what they call the metaverse, but how Facebook is doing things is a metaverse, but within the Facebook ecosystem. What's interesting with NFTs and assets ownership is, as the blockchain is public, is the interoperability between all those projects. And that's what, connecting those virtual worlds together. We've seen recently the creation of the Metaverse Alliance, the Open Metaverse Alliance that was just announced a few days ago. And those actors like the Sandbox, Animoca Brands, Alien Worlds, they're actually working together to create this metaverse, to create true interoperable virtual worlds. And I think, at least for blockchain gaming and for the blockchain version of the metaverse, that's what's really interesting. And to bridge all those universes together, be able to take my identity in one virtual world and use it in another one and have those bridges. So for us, that's what the metaverse is not only an individual virtual world, but a whole set of virtual worlds that are all interconnected and on the public blockchain.
It certainly sounds like a grand vision, Nicholas. I guess if I had a NFT jetpack and I was flying around a metaverse from one world, you wouldn't want to go to the next world and all of a sudden you run out of gas and fall.
Yeah, that's the risk. That's the risk of this open metaverse. But the fall won't hurt too much, so that's a good thing. But yes, like let's say you own this jetpack in the sandbox, and you're able to go in another game, and yeah, you can use your jetpack, and I think that's something great.
All right,
and that's for the benefit of players as well.
All right. Let's cover all sides of the debate. So I need to put my sort of skeptical hat on. We've seen some issues with sustainability in the sector. We've seen some projects launch. They've got rewards. They've attracted a lot of users, and then once the rewards drop off, people leave. So can play to earn be a sustainable sector and attract and retain users over a long period of time?
Yeah, so as you rightly pointed out, last year as metaverse and gaming, blockchain gaming really took off, we did see this this issue where like things did not look sustainable. Speculation really took over, particularly with the likes of Axie Infinity, which I'm sure many are familiar with, where you saw essentially these almost mercenary actors who saw the financial opportunity of participating in these games, not because they enjoyed the game, but because they were able to generate revenue in many of these other countries, and therefore I guess the group of those mercenary actors essentially outweighed, I guess, the passionate early adopters of the game itself. So that's where this issue of sustainability really comes in, I suppose, to do with more things like the ecosystem design or the token design, which I'm sure your firm probably specialises in a lot more, which is the trickiest part. But you've seen this issue so much in the DeFi world as well, like decentralized finance, where they release a token, a bunch of these actors come in trying to farm the token, and then they sell it on secondary markets, and the actual passionate users of that DeFi application are also then left losing a lot of money. We're talking about purely from the financial sense in terms of sustainability in these models. I'm not sure if you can speak to any more issues to do with that, because there are a few.
When we look at crypto projects, sometimes there's usually only one governance token, so we're sort of assessing that. But play to earn can be very complicated because there are sometimes two token models. There's like a governance token and a rewards token. So it can be very hard to sort of like wrap your head around. And that leads on to my next question, which is, if someone in the audience or even at home watching gets pitched a blockchain play-to-earn game to invest in, how do they evaluate it? What sort of things should they be looking for to work out whether it's a good project or not?
So maybe I can take this one because we get pitched a lot of projects every day. You can imagine everybody wants to, be part of the game and want us to talk about their project. So there are a few things that we look at. The first thing I look at is the team. Can they deliver? We see lots of projects. There are maybe just blockchain developers, but they have no experience in gaming. Or game developers, but they don't have anyone in the team that's experienced in blockchain development. So I think it's a good team, a good balance. One thing we look at as well is the team public. I can understand for some reason some team members
are they doxed? Are they doxed?
Exactly. I don't see why a gaming project should have a fully anonymous team. Honestly, it doesn't make much sense, or maybe something shady in the background. So that's definitely the first thing and the most important thing we look at. And then the game. We're talking about gaming. In these early stages, a lot of projects, they just forgot about the fun parts. It's basically decentralized finance with cute graphics, okay, or cute animal. So, yeah.
Thanks, Nicholas. Leonie, you look like you've got something to say there as well.
Yeah, if you don't mind, I definitely agree with everything Nicholas said, but one of the main things I look at, since we get pitched a lot as well, is not what the team is planning to develop, but what they have already developed. If all you're pitching is just this timeline, 3 years in the future, as an investor, there's other games that already have things built that I can invest in. And the other thing is I like to look at what they're doing with NFTs in an innovative manner. Like, how are they utilizing NFTs? How do they plan to utilize it? If it's just it exists in our game and you can sell it on OpenSea, yeah, there's a use case for that, but everyone's doing that. So I'm trying to see what people are doing that are creative, that are kind of out of the box. and trying to find creative projects that way.
I would also add that there's it's a mind-blowing number, but there's already 1,500 play-to-earn games out there, and they've only got about 35 million monthly active wallets. So there's already a lot to choose from, and not many active users. So that comes down to there being, is there a real product market fit of this particular game being developed? As in, is the blockchain game being developed actually a fit for people's gaming habits? And if we look at gaming habits, 2.6 billion of them are on mobile. They're mobile gamers. So you'd want to maybe think like, is it a game that's suiting the actual gaming kind of lifestyle? So that's a really big thing. Like, is it a game that fits real people's lives, and what's the marketing like?
Absolutely. Now, if this is all going so well, as I believe that it is, this play-to-earn and blockchain gaming, why are we having some parts of the industry, the traditional gaming industry, giving the industry pushback? So we've heard recently, I think in the last few days, Microsoft Minecraft are pushing back and saying we don't want any NFTs or crypto in the games, or developers who are building on our platform. I think the gaming platform Steam has said something similar. So is this just something that's happening on the fringes, or is there possibility that this sort of blockchain bans could sort of spread more widely throughout the gaming industry? Anyone want to have a crack at this one?
I mean, certainly there is pushback in certain parts of the industry. At the same time, many of the big players are working towards this and looking at how they want to approach the market. So large game companies like Square Enix, for example, or Epic, who are, embracing or at least working towards similar blockchain use cases themselves. I think there's certainly an instinct amongst some of the players to protect what they have, or to want to lock people out until they're ready themselves to take advantage of the shift in the market.
Sorry, you want more? Yep.
Yeah, as indie blockchain game developers, actually, we can be a little bit grateful that the traditional gaming sector is taking a little while to catch on to this, because it means there's more time for us to bring disruption. Because once big platforms like Epic Games, they're bringing on, Grit and Blancos and so forth, once they do embrace NFT gaming and play to earn, that's really going to be the watershed that brings on, those millions of people into blockchain and blockchain gaming, because we're expecting about 1 billion people coming onto blockchain in the next 10 years. I think a lot of those will be through the gaming sector. So it's really just a matter of time. It's going to hit us pretty soon.
It probably is. Now, I want to, I've got more questions up my sleeve here, but I want to give the audience a chance to ask some questions. So I've got Megan here with a roving mic. So if you'd like to raise your hand, just introduce yourself and let fire with your question, and our lovely panel are going to do answer it for you. Do the best job. Any questions? Any questions? I'm sure there's a question there from someone. Now's your chance. Play to earn, blockchain gaming, no? Shall I just keep on going with mine? Looks like I might. Silence is... Okay, I've got a question about VR. I went and did a VR escape room with a family recently. I'd never done VR before. I put this mask on and it really transported me to another world. It was a bit of a mind-blowing experience. I'm interested to hear from this panel about what's going to happen with VR in play-to-earn gaming. I wasn't actually able to purchase anything when I was walking around this VR escape room, but it was very exciting. But where do you think it's going to go in the future?
If you don't mind, I could take that one. I'm hardcore into VR, so I'm glad you asked that. And I think just like blockchain gaming, VR is incredibly early, despite the fact that Facebook buying Oculus made it go a bit faster. We're still incredibly early in the life cycle of development. But I think metaverse and VR go hand in hand. I think that's kind of the ultimate goal of the metaverse, is to be in VR. There actually are a few games right now that do have Web3 interoperabilities within VR. And there's one called Nexomon, I believe, that does it. But you're right, there aren't a lot out there. So I think in general, when we want to buy things on the internet or buy things in VR, the task is the same. I think the ideal goal is a decentralized proof of ownership, be it on your Google Chrome browser or on a VR game.
Anyone else like to add anything to that? The VR? No? Yep.
Well, yeah, I'm at home. We're quite fan of VR as well. So, and there are a few projects we're looking into that will come out. But you know, a VR game is a computer game or console game. So it's just a matter of time until publishers and developers hop into VR. And of course, as Mark said, it goes hand to hand with the metaverse. So we can see projects like VR Chat, which is a big project, like social hub project on VR, and being able to own your avatar, create your avatar, or sell accessories that you own is definitely something that will happen in VR as well.
It sounds something very similar, choosing your avatar, but it was a total mix-up with my family. I think my daughter chose a man. She didn't know what, she just chose a bloke. And I said, is that my daughter? Is that you? And then my wife chose this Amazonian queen, and she was about 3 feet taller than me. I had to look up to her the whole game. It was quite funny. So, look, my next question is around, it's really around risk. So for investors who are worried about risk, so how would you tag this sector, the play-to-earn gaming sector? Do you think it's a sort of like a risky sector or not a risky sector? What sort of things can go wrong?
I think relative to other crypto assets, you could argue it's riskier just because of how new it is, as you touched on at the very start. There's a lot of unknowns, and it's very much reminiscent in some aspects to the ICO era in terms of like promises of what is going to happen in the future. So in terms of risks, we talked about, we touched on earlier some of the execution risks and things involved with vetting the team and whatnot. Some risks that are probably more specific to the play to earn space is probably what I touched on a bit earlier. It's like how finding out information about how the team intends on releasing their tokens, whether they're doing it over a gradual period or all at once. And there's some other risks as well. I'm not sure if you had anything else to say on that.
Yeah, I mean, I think like many of those risk aspects can be mitigated or minimized by, doing the right research, right? Like if you get the right team, if you looking at people who have already had a lot of traction in building a product, have a track record of building product, you can mitigate the risk that, the game itself doesn't arrive. I think, in terms of risk in the sector generally, I think, where you have a high quality game with a lot of entertainment value, you can get more comfortable that there will be a user base, that there is an underlying utility and something of value there beyond, just the tokenization. And I think that does stand it apart from maybe some DeFi applications that are, very financialized with less fundamentals behind them.
I would also add just there, risk in terms of another way to look at it is what blockchain is it ultimately deployed on, or what blockchain are they working with, because some carry, I guess, greater risk than others. So that's another thing to consider. Or what layer 2 technology, if they're on the likes of Immutable.X or Polygon, which is soon becoming a layer 2 technology. There's those aspects which are more specific to each game.
How should people from the outside? It's quite a learning curve, really, because there's all the different gaming projects, and then, like for example, Akasha's project is on Algorand. There's Flow. There's Ethereum with all the layer 2s like Starkware and Immutable. There's Solana. There's so many different platforms. People are going to be confused. So what can we say to people about how relevant is the chain that the game is being built on?
I'm happy to take that. Well, there's been, I think we're on track for about $12 billion being invested into blockchain gaming this year. And the top 10 investors are often the chains. So I think we've got Solana in there, FTX, Polygon, of course, gaming's big on Belgrande as well. So there is a level of complexity as in which chain do I choose. All these chains have got benefits for them. They're all pretty good chains. The real thing that I would say is that blockchain investment is a risky business for anyone, even seasoned investors. But what is beautiful in gaming investment specifically is that we have this culture of guilds and gaming investment DAOs. So if you are new to investing in blockchain gaming, check out DAOs like PathDAO, which is specifically there to attract, major deal flows. Because if you want to make money investing, you always have to get in early. And the trouble is that particularly with games, the game might not exist yet. And there's all these risks associated with hacks or rug pulls. But when you're investing as part of a DAO, you've generally got the intelligence of the crowd. You've got a lot of deal flow. You've got other people there assessing the projects and being able to vet it with you. So it's a great place for a beginner to be.
Fantastic. Thanks, Akasha. Lee Mark, do you want to add anything there?
Totally. I would say on top of that is a point on community. I'd say for new people, one of the best things to look for in a blockchain game is how strong the community is. It's totally above board to walk up there and say, hey guys, I'm new to this game. Why should I spend $200 on this NFT? What's this $200 going to get me? And if you're not satisfied with that answer, then you probably should look at a different game,
And I would just add there, in terms of community, just don't look at numbers because often the numbers are fake or bots. You definitely go into the Discord, go into community, and check out who are the real people. And don't just rely on numbers. Really look at the sentiment of the people in the community, who are interacting with you.
Now, Akasha, you also introduced a word in your response, DAO, or Decentralized Autonomous Organisation, yin and yang, or whatever we might like to call it. But from the people who are outside of crypto and new to crypto, what are we talking about with a DAO?
Yeah, so it's basically an organisation like we might be familiar with, except that its agreements and contracts operate on the blockchain. So for example, you'll hold a governance token as part of that DAO, and then you'll get to use that to vote. And it might be that if a certain amount of people vote, then the DAO Treasury will automatically invest, for example, in a particular proposal. So it's ways that you can use the power of the crowd, but everything's on chain. So you have that history, that transparency, but at the same time you have the benefits of working with a big group of people.
Okay, we've just got to thank you very much. We've got a couple of minutes left, so I'd just like to give everyone a chance to where are things heading in the future type of ending comment. So, Matt, would you like to just comment about where you think things are going?
Yeah, I think some things that excite me with respect to blockchain gaming are still probably a while away, just in terms of on-chain reputation, things to do with your identity, and I guess having a history of on-chain activity, which in decades to come will be like a very strong that provenance factor. I think there's just so many use cases there, but they're just extremely hard to do once things are so nascent at the start. Also, things that will be upcoming that get me excited are more these esports style tournaments as well, which haven't really seen too many of those, which you can tie in NFTs, and mostly NFTs in many ways there as well, which I haven't seen to date. But more generally, just I'm excited to see these blockchain games release, which, as we said, it's only been 1 year. Still, another 2 to 3 years, depending on which game it is. I'm excited to see what they're made of and if they're actually fun to play, which is ultimately the main thing.
Fantastic, Matt. Lewis?
Yeah, I'd second that and emphasize, we've seen, I guess, the first iteration of blockchain gaming with relatively simple games from a gameplay and entertainment perspective. We're about to see this next wave roll out of games that have been in development for longer, that have more depth of gameplay and more entertainment factor. And I think that's going to be the game changer for the sustainability of those game economies, where there's that depth to keep people involved and participating over the longer term.
Thank you, Lewis. Nicholas, where's it all heading? Just quickly, we've only got, thank you.
Yeah. So as it was said, the quality is gonna move up. We're this year and next year we're gonna see those first real AAA quality games powered by blockchain coming out. So that's really exciting to see, and it might bring traditional players, bring them over to blockchain gaming. And then on top of that, I see when traditional gaming studios are gonna adopt blockchain, I see blockchain as a feature in the games. I think we're gonna stop talking about blockchain gaming, but more blockchain as a feature in an actual game as we know games for now.
Thank you, Nicholas. Akasha, final words?
Yeah, I think we're going to see a lot of beautiful games that have blockchain in the background, whether they're existing AAA games or AAA studios or new disruptive games like Cosmic Champs that are being built right now. It's very, very exciting because it means that all our interactions on the internet and the metaverse will be changing really, really rapidly. And I look forward to a much more fair and inclusive and better user experience for all the gamers around the world.
Thanks, Akasha. Lee Mark?
Yeah, quickly, I'll just say that the traditional gaming industry, I think, is already adopting this, and they just don't know. So instead of playgrounds now, kids are hanging out on Fortnite. And instead of showing off your sneakers on the playground, you're showing off your avatar in Fortnite. And as soon as big companies like Epic Games make it so that your Fortnite currency is also spendable elsewhere or sellable elsewhere, we'll see huge adoption.
Well, look, thanks very much to all of our panel. Perhaps we could just give a quick round of applause to them for doing such a great job. And thanks for hanging with us for Gaming and the Rise of Play to Earn. Hope you had fun.
All right, ladies and gentlemen, we come to the end of day one. Hope you've all had a good day. Ahead of day two, obviously so today was obviously, there was a lot around sort of digital assets and obviously the potential in that area. Tomorrow, also we're covering around small cap listed companies, innovative growth companies, emerging trends, etc. We've got, and also yield related investment opportunities. So bit of a switch of gears, and really that's why we love what we do and how we make it unique across the 3 days. So look forward to seeing you all tomorrow. One thing I'll highly encourage is I did a bit of a demonstration with the conference software. Just make sure you set yourself up properly on that, on Crisp, overnight, if you haven't already, because then following the agendas, literally we've set it so that you hit agenda, you know exactly where we're at during it. So we've done our best to make sure that you can be, seamless in keeping up to date with where we're at during the conference and also connecting with everyone presenting. So have a great night. Hope you enjoy day one. See you tomorrow morning.